Welcome back to the channel Future CMS. I hope you're doing great. I hope your preparations are going very good. If at all not, I'm here to help you out. Paper number 13, Corporate and Economic Laws Marathon. Finally, you have got these videos. I know you have been requesting for a very long time. I know I've been a little busy on this past 1-2 months, and I've some other way found time to prepare these videos. Now we are finally uploading the part 1, and the part 2 will be uploaded in the next 1 week, which will be covering the rest of the Companies Act as well. So stay tuned for that video as well. On top of it, I'm going to be uploading another video tomorrow on ABC analysis. We have done a thorough research about all the papers of your paper 13 for the last 2-3 years and actually found some interesting facts. Interesting facts where you'll learn it in tomorrow's video, which chapters to take a choice. Which chapter should I study? What focus area should be there? There are actually very small chapters in quantity and very easy to understand, very simple chapters which are actually repeating on a regular basis and having a high weightage as well. And you'll also learn a smart way to study in a priority order so that you'll have less amount of efforts and get more amount of marks out of it. And a last disclaimer before I end this introduction part. This video marathon is no manner and fit. It is a substitute for your regular classes. Your regular classes are mandatory. Once you're done your regular classes from any faculty as such, once your regular classes have been completed, this will act as a boost, this will act as an addition for you to recollect information and retain the information, but it is no manner a substitute. Don't take this as a substitute. If you have not listened to your regular classes yet, please go through, complete them, then come back to these marathons. It will help you, but it will not be a substitute. That's fine. And for the students who are going to ask PDF in the comment section, we are not going to share the PDF completely, but the books are available at a very discounted price on our website. You can go find it. You'll have your practice manual and concept book, complete concept book mapped with your practice manual available on the website. You can find it on the website. Thank you guys. Without any further delay, let's get started with the session. If you like the videos, like it, comment it. Your appreciations are very welcomed. That boosts us to prepare more videos for you and come out with more content for you. Thank you guys. Let's start with the session. Let's get started with the next chapter. We have investment and loans. Let me clarify something before I start this chapter. As per your ICMA syllabus, this chapter investment and loans actually comprises of 3 things. First, we'll have the deposits, where we'll learn about how to accept, how to repay, and what are the punishments and rules for deposits. Then we'll also learn about the types of debentures we have: convertible, non-convertible, redeemable, irredeemable, secured, unsecured. We'll learn about all the types of debentures. And also, this chapter comprises of section number 185 and section number 186. Sir, what are these sections? Section 185 talks about loans to a director. And then section number 186 talks about loans and investments by a company. But as far as I'm concerned, I'll not be teaching these 2 sections in this chapter. Why, sir? These 2 sections could be better understood only when you have proper understanding and knowledge of section number 179. They're actually a continuation of section number 179. They're all 3 linked sections together. So you'll have a better understanding of the concept only when you've read section number 179. So what are we going to do, sir? We are going to tackle these 3 set of sections together in the board meetings chapter separately. I'll have this in the board meetings chapter separately, not here. So what are we going to cover here is deposits and debentures. But debentures does not have a separate separate chapter to it. It has a separate section called as section number 71. But when it comes to deposits, we don't have a one section dedicated to it. We have a dedicated chapter altogether. It comprises under chapter number 5 of the Companies Act. Before starting the topic of deposits and understanding why it is so important, we have to understand the background of deposits. Try understanding it. When company accepts loans, the loans can be accepted in 2 ways. Either it can be for deposits or it can be for debentures. Deposits are usually for short term. So what is this money for short term used? It is usually used for working capital requirements, for payment of rent, salary, or other expenses of the business. Second category we have is debentures. Debentures are usually loan, but loan accepted for a long term period of time. They're accepted not for a particular working capital requirement, but they're accepted for a project. They want to purchase a huge machinery. They want to purchase a land. They want to construct a factory. They want to invest into a new project, diversify the business, expand the business. That's where the debentures come in. For a long-term amount of money, a project money will be accepted. Now, if you closely observe them, I'll give you a chance to think about it. Which of these 2 loans would you think is more risk involved? Which is more risky, deposits or debentures? Take a time to think about it. Let me answer it later. Which is more risky? Deposits are risky or debentures are risky? I know a lot of you might have got this wrong. Actually speaking, deposits are more risky in nature than compared to debentures. Why, sir? Because the amount of time you have in your hand is so less in nature. They're short term, usually say assuming 1 year or maybe 2 years. If say 2 years of time is given to you, you don't have enough time to rectify if any mistake or mishappenings happen in the company in this 2 years period of time. You'll have less time to generate money and pay it back. But when it comes to debenture, when they're accepted for a long term period, they're accepted say for 10 years. If something wrong happens here, I can still recover from it, recover and still generate money over the rest of the period and still be in a position to repay the money properly. But the problems arising only when it is deposits, and lot of defaults happened in the early 1970s. Lot of defaults happened, hence companies had stated that we have to highly regulate this, unless otherwise there will be a lot of defaults happening in the deposits category. People will start losing trust on the companies. Hence in 1975 was the first time when they started creating rules for deposits on when to accept, how much to accept, which company can accept, etc. Then what happened, because the rules and regulations tremendously increased for deposits, people didn't like it, companies didn't like it to be calling it as a deposit. If I consider that as a deposit, the rules and regulation will be very high. I'll have to follow extra rules and regulations, which was not likely, which was not in the favor of the company. Then what has company started doing, sir? Company stated that they'll accept deposit, but they'll not call it as deposit. They call it as shares, they call it as debentures, they call it as promoters money, they call it as employees money, they call it as a security deposit. They gave multiple names to it, but they're still indirectly accepting deposits. They're bluffing Companies Act. If you are smart, Companies Act states that I'm smarter than you, I'll make sure that everything is covered in the deposits. That's where the definition flows in amount. That's where the definition was drafted, states that the term deposit includes any receipt of money. Any money received by the company is called as a deposit. I don't care how you call it. I don't care what name or tagline you give it. It will be called as a deposit. Listen to the wordings carefully. Any amount received, any receipt of money by way of deposit, call it as deposit, or call it as a loan, or give it as any other name. It is received by the company, I'll call it as a deposit. But sir, there will be also genuine cases where actually bank loan is received, actually subsidy is received from government. There are certain cases which will not be considered as deposit. There comes the last sentence. But does not include such category of amounts as may be prescribed under Companies Act, but in consultation with the RBI. RBI knows better about the loans and deposits rather than the Companies Act. So put everything together into a definition, repeat it after me. By the time the chapter revision is done, I hope your revision is also done along with me. So repeat it after me, be a little vocal while you are revising it. The term deposit includes any receipt of money by way of deposit or loan or any other form by the company, but does not include such category of amounts as may be prescribed in consultation with the RBI. But there are certain companies which have been exempted from the applicability of this chapter. Sir, why are they exempted? Whether deposits are still regulated or not, highly regulated, but not by Companies Act, but they are highly regulated by the Banking Regulation Act. The RBI will take care of it. Try understanding it. Companies Act defines the topic of deposit. The Banking Act also defines the logic of deposits, obviously, which is more stringent, which is more structured, and which is more detailed. Banking law. If banking law is already applicable, why do we require to apply Companies Act again? Hence, it was exempted. But I hope you guys understood it. Doesn't mean that it is being unregulated. It is actually highly regulated, not by Companies Act, but by the Banking Regulation Act. There are 4 companies you ought to remember which have been exempted from this chapter: banking company, NBFCs, HFCs, non-banking financial companies, and HFC, housing finance companies, or such other companies as may be notified. The central government has the power to notify other companies in the future. What are 3 companies as of now exempted? Banking, NBFC, and HFC. But 4th point you still have to remember, such other companies as may be notified by the central government. But central government does not have knowledge about deposits. They will also take help from consultancy from the RBI, prescribed by the central government in consultation with the RBI. Chalo, quickly run through the eligibility criteria. We under this chapter will divide companies into 2 categories. Either they're called as eligible companies or they're called as ineligible companies. If you are an eligible company, the name itself gives you the topic. You're eligible to raise deposits both from members as well as public. You can raise money from members and public. But if you are an ineligible company, you're ineligible to raise deposits from public. Hence, you can raise deposits only from your members. But when will I be called as eligible, ineligible, sir? I'll be called as eligible if I am a public company having a net worth of 100 crores or more or turnover of 500 crores or more. If any one of these conditions have been satisfied by whom? Which company? A public company, then it will be called as eligible. Rest of all the other companies will be called as ineligible. I hope you understood it. Ineligible means usually a private company and a public company which have not satisfied these two limits will be called as what? Ineligible company. Then coming to the chapter section numbers, we have section number 73 to 76A. This chapter will be ranging from section number 73 to 76A, where we'll start with section number 73, which talks about prohibition on acceptance of deposits from public. We are not allowed to accept deposits from whom? Public. That means indirectly we can accept deposits from whom? Members. And if you observe the chart we have drawn here, which company can accept deposits from members? Can an ineligible company accept deposits from members? Yes. Can a eligible company also accept deposits from members? Yes. So section 73 can be done by either eligible company or even a ineligible company. But they cannot straight away come and accept deposits. They have to satisfy certain conditions. They have to satisfy a total of 5 conditions before they can accept deposits from members. First, they have to get approval from the shareholders by passing a ordinary resolution. Which resolution? An ordinary resolution has to be passed by getting approval from the shareholders. Second, we have to invite the members to accept deposits. Inviting them will be done by a document called as circular. This circular will provide all the details about the company, the credit rating of the company, how much amount of deposits are to be accepted, what's the interest rate, what's the tenure, what purpose the company will be using this money, how much is the total loan accepted already by the company, the financial position of the company, the investigations on the company, all the information about the company will be put into a document called as circular. This circular has to be issued to the members, but before it is issued to the members, there's a doubt that this circular might have false information. To make sure that this document does not have false information, it has to be filed with the ROC and the ROC will verify. But the slight sophisticated concept here is that we don't have to wait for the ROC's approval. It has to be filed with ROC. Once it is filed with ROC, will not be waiting for approval, rather will wait for a period of 30 days. After the expiry of 30 days, if the ROC does not object it, it is assumed to be approved. Then we are allowed to issue it. Give me the wordings here, Rama. It will be issued first or filed first? It will be filed first. Filed with whom first? ROC. Then I have to wait for how many days? 30. Then I have to issue it to the public. But how are the wordings being drafted? I can file it with ROC at least. I have to file it with ROC at least 30 days before the issue of circular. Repeat the words along with me. It has to be filed with ROC at least how many days? 30 days before the date of issue of the circular. It has to be, one second. It has to be filed at least how many days? 30 days before the date of issue of the circular to the members. That's a circular. Then we have something very interesting logic, DRRA. Deposit Repayment Reserve Account. What is it called? Deposit Repayment Reserve Account. This deposit reserve account states that I'll give you an assurance that your money is kept in the safe hands. We have having enough money in our pocket to pay back to the depositors. We'll have to separate this money at least 20% of the deposits which are maturing. At least how much? 20% of the deposits which are maturing in the following financial year. There's a word missing here. You guys can put it out. Which year? Following financial year. A lot of people get this wrong, so let me clarify it. Say we are in 24-25. You are in which financial year? 24-25. All those deposits which are maturing in the following financial year, in 25-26, we have to create a reserve account at the beginning of the 24-25. Give me the wordings. At least 20% of the deposits which are maturing in the following financial year have to be deposited in the current financial year at the beginning of a current financial year on or before 30th of April. I want all the keywords established, Nama. On or before which date? Good. 30th April. We have to deposit how much percentage? At least 30% of the deposits which are maturing in the following year. It has to be kept in a separate bank account in a scheduled bank. We know this, escrow account, which can be used for any purpose or specific purpose. Only a specific purpose. What will be the specific purpose? Only for the purpose of repayment of deposits. Can I say if not 100%, at least we have deposited 20% well in advance before the deposits are being repaid, and it will give an assurance that company has enough time to make arrangements for the rest of 80%. But there's a second condition you have to fulfill. The amount of money deposited here shall not fall below 20% of the deposits which are maturing in the current financial year. What do you mean by current financial year? 24, 25. Are you getting this point, Sama? Two conditions. Quick run through. On or before 30th of April, at least 20% of the deposit which are maturing in the following year have to be deposited in a separate bank account in a scheduled bank called as DRRA. It shall be used only for the purpose of repayment of deposits, but the balance in this reserve shall not fall below 20% of the deposits maturing in the current financial year. Then, point number 4, the fourth condition states that we should not have made a default. If the company in the past have made a default, how would the depositor still trust you? Company will not be allowed to raise deposits. But there's an exception to it also. But whether company has done default or not, if you go ask the company itself, have you done default? Obviously, the company will state that, no sir, I am very innocent. I have done no default at all. Can you believe the company? Hence, it must be given by the statutory auditor of the company. The auditor of the company has to certify stating that company has done default or no default. No default. No default in two things: repayment of deposits and payment of interest on such deposits. It has to be certified by whom? Auditor of the company. But if at all the company has done default in the past, Companies Act states that we believe that if 5 years have elapsed from the date on which the default have been rectified, 5 years have been elapsed, we believe that company has grown out, developed to be a better person. Now the company will not make such defaults again. They have learned their lesson. Hence, they can still accept deposits. After expiry of how many years, Amma? 5 years. 5 years elapsed. Till from which date? A lot of people do this wrong also. 5 years not from the date of default. 5 years counted from the date on which the default has been rectified. Default has been made good. 5 years from the date on which the default has been made good or has been rectified. Last point, security. Under section number 73, when you're accepting deposit from your members, it need not be secured, because try understanding it. The members are giving deposits and putting money into the company, and company is again something where the decisions of the company, future of the company will be decided again by the same shareholders in the general meeting. Can I say shareholders will trust the shareholders at least? I trust myself at least. Are we required to get a security given? No. Security is not required. It may be given. Security is mandatory or optional? Optional. Company may provide a security. So it can be two categories. Either it can be secured or it can also be unsecured. But there is an MCQ on this also. Semi-secured, partially secured, half secured, 3/4 secured. There's no logic called as half secured, semi-secured, or half or any other category of some part secured and some part unsecured. There's no logic of that. We have only two options. Either it should be secured or it should be unsecured. It will be called as secured only when it is covering full value of the principal as well as the interest. Assuming the principal amount was 10 lakhs, interest was 2 lakhs, in total the amount payable was 12 lakhs. And the company has given you an asset which is worth 10 lakh rupees. Is it covering full value or only part value? Part value. It will not be called as secured. Even the asset is given to you, it will not be called as secured unless it is covering full value. If asset is not given, obviously it is called as unsecured. If asset is given but it is not covering full value, it is still called as unsecured. But if the asset value was 20 lakhs, then it is called as secured. Is it fine? If all the 5 conditions have been satisfied, you are allowed to raise deposits from your members. And which company can do it, Amma? Either eligible company as well as ineligible company. If at all, there is a small note point under section 73. If at all the company has made a default at any point of time on repayment of those deposits or payment of such interest on such deposits, you have a right to go cry. Make an appeal. Appeal with whom? NCLT. You can go make an appeal with NCLT and NCLT pass an order on the company immediately asking them to pay the money. So what's the process here? If the company pays or fails to pay, if the company fails, then you have a right to make an application to the tribunal, asking the tribunal to pass an order on the company, asking the company to immediately pay such money. Is that fine? That's your section number 73. One of the biggest point of your chapter, section number 73. Then section number 76 directly talks about acceptance of deposits from public. But try understanding. Which company can accept deposits from public? We have done this already. You should be able to answer it. Which company? Only a eligible company. Only eligible company is required to apply the section number 76. They can accept deposits from public. Only a eligible company. To be called as eligible company, quick revision on it. To be called as eligible company, it must be a and having net worth of or turnover of. I hope you have answered it correctly. An eligible company can accept deposits from the public. While doing it, they have to mutatis mutandis. I'm not scolding you. It's a Latin word. Mutatis mutandis, as far as possible, apply the same process. They'll apply the procedures of section number 73. What is it? Mutatis mutandis. While applying section number 76, we have to apply mutatis mutandis, all the procedures under section number 73. That means all the first 5 conditions we have discussed will still hold true with slight modifications. Rather than passing an ordinary resolution, we have to pass a special resolution. Rather than providing security as may be provided, I have to make sure that security is mandatory. It must be secured. Other than that, rest of 5 conditions, all the other procedure will remain the same. But they have an additional condition to be satisfied. How have we learned in the classroom? If you guys remember, if the students of my classroom are watching it, how have we learned it? We have learned it as 5 plus 1. The 5 conditions copy pasted from section number 73 and plus 1 condition which is from section number 76 states that you have to obtain a credit rating. A credit rating has to be obtained from not any random agency. We have to obtain it from a recognized credit rating agency. Why, sir? There are hundreds of agencies. You do this after the class, or you pause this video and do it. Open your Paytm and check your credit score. Open your phone pay, check your credit score. Go to your Paisa Bazaar website and check your credit score. Your credit score will be different from each credit rating agency. Each credit rating agency considers different parameters and factors to check whether the credit rating is high or low. If the option is given to go take a credit rating from any company out there in the market, they will select such credit rating agency which will provide you a higher rating. They can bluff the public at large. Then SEBI regulation stated that we're not going to allow you to go for any credit rating agency. You have to do it from recognized credit rating agency. You have to obtain it even before the issue of circular and mention that rating. Rating has to be mentioned in the circular so that public will know how trustworthy, credit worthy are you as a company, whether to provide loan or not to provide loan. And this credit rating is not only required to be obtained at the beginning, but also every year until the deposits have been repaid, continually giving assurance that we are still credit worthy. Any doubts on this part? I hope you have understood it. And again, we were discussing it must be secured or may be secured. Must be secured. What do you mean by secured? Under Companies Act, we have to create a charge. We have to register the charge. This is not part of the syllabus, just an additional knowledge for you. Section number 77 deals with it. States that once a charge is created, it must be registered with the ROC within 30 days from the date of creation of such charge. Once it is created, it has to be submitted to the ROC. That's your section number 76. But don't forget, if a question of 76 is asked, you still have to make sure that the 5 conditions you have learned under 73 should also be written here. If you have made a default under section number 73 or section number 76, prohibition of acceptance of deposits from public or acceptance of deposits from public, you will be punished under section number 76A. What is 76A? Punishment for contravention of section number 73 or 76. There will be numbers and they are important numbers. You have to remember these numbers. Punishment will be divided into 2 parts. Do it along with me. Punishment will be divided into 2 parts, company and the officer in default. Company, because it is an artificial person, it cannot be imprisoned, it will be fined. Fine imposed with a fine of minimum 1 crore to a maximum of twice the amount of deposits accepted, whichever is lower. This is just the minimum amount of fine. Assuming the amount of deposits you have accepted was 20 lakhs, what will be the minimum fine, sir? 40. 1 crore or twice the 20 lakhs, whichever is lower, 40 lakhs. If the amount of deposits you have accepted was 30 lakhs, the minimum will be 60. If the amount of deposits you have accepted was 70 lakhs, the minimum fine will be 1 crore to a maximum of 10 crores. Give me the answer again. Divided. Section number 76 says divided into 2 parts, company and officer in default. Company will be punished with an amount of minimum 1 crore or twice the amount of deposits accepted, whichever is lower, or to a maximum of 10 crores. Then officer in default, can he be imprisoned? Yes. Then he'll be imprisoned with a period of up to 7 years. There's no minimum period, maximum of 7 years, and a fine of minimum 25 lakhs to a maximum of 2 crores. And in case they have done a default, if their default involves a fraudulent activity, obviously they will be punished under section number 447. I hope that is understood. Section number 447. Additional knowledge for you for understanding this topic in a better manner. If not, you can skip 2 minutes ahead if you're not interested. Section number 447 starts with the wording without prejudicial to. What do you mean by without prejudicial? I am not a section which is superior. I am not a section which is inferior. I am a section which is applicable along with the other section. I am also applicable. Section 447 states that if at all a default has happened, some other section might have already given punishment. But because the default happened because of fraud, I am also applicable. Hence, if you guys have understood it, if there is a default under the deposits chapter and the default happened because of fraud, we'll apply section number 76A and section number 447. It will not be only 447 or it will not be only 76A. I'll also apply 447 because 447 uses the word without prejudicial, without affecting any other section. I will also be applicable. That's what we have done. We have done a lot of examples on this in the classroom. Then a certain set of rules which are very important, especially the maximum amount as well as the tenure of deposit. These are the two rules which are very important. You have to learn them, you have to by heart them. I'll make it easy for you to by heart obviously, but you have to put in efforts into it. First, can I accept any amount of deposits? Even though I fulfill all the conditions under section number 73 and 76, I am not allowed to accept any amount of deposit. There's a limit up to which I can accept. The limit is drafted into two parts. We'll remember this in two categories. Either you're talking about a ineligible company or a eligible company. If at all you are not my student, you might not have this chart, Amma. I'll guarantee this chart will help you out in remembering the section properly. Draft it if not. Pause the video, draft this, or at least take a screenshot of it, or have it written somewhere in your book or material. This will help you for sure. It will be divided in how many parts? Ineligible company and a eligible company. If you think carefully about it, ineligible company can be of two types. It can be either a private company or it can also be an ineligible public company. When it comes to ineligible private company, there are three categories of ineligible private companies. Starts with a startup company which is within the 10 years from the date of incorporation. Why, sir? Because they rely upon members itself. A startup company who believes in a startup at the initial stage. Nobody except the members who have already jumped into the startup company. They have no other choice. Hence, the only major source of money for a startup company is its own members. And if you put a restriction upon those members also, they'll not be able to develop the startup company or make it successful in nature. Hence, no limit for it. You accept how much ever you want, it's up to you. Or a private company which fulfills three conditions. You don't have to remember three conditions, but the industry calls it as what? AAA private company. It fulfills. A private company which fulfills three conditions. They are also said to be very safe company. Hence, there's no limit. But if you don't fall under these two special category of private companies, I'll call you as a ordinary private company. If you're an ordinary private company, you can accept a maximum of 100% of paid up share capital plus free reserves plus securities premium. A small hint for you, a small advantage for you here. Whenever we have percentage on this chapter, blindly believe that it is always calculated for paid up share capital, free reserves, securities premium. Give me the wordings here. I hope you are able to draft it in your head. By the time this is done, your head should be able to answer this. Your brain should be able to answer this. We'll divide them into two parts. Either it is an ineligible company or an eligible company. Ineligible company is again divided into two parts. Either it is a private company or a public company. Private company is again divided into three parts. Either it's an ordinary private company or private startup company or private triplet company. Startup company and triplet private company, no limit. A private ordinary company will have a limit of 100% of paid up share capital plus free reserves plus securities premium. But if you're a public company, the maximum you can accept is 35%. If you're which company? Public company. Try understanding it. If you are coming from this part of the process, ineligible public company, can you accept from members? Yes. Can you accept from public? No. Then entire 35% will be accepted from the members. Then second category we have eligible public company. Now think about it. Eligible public company, can they accept from public? They can also accept from members. That means that 35% you are talking about has to be now bifurcated between members and public. They have to be distributed between members and public. Members you can accept a maximum of 10%. Public you can accept a maximum of 25%. In total you can accept a maximum of 35%. But sir, can I accept 27% from public and 8% from members? Will it suffice because the total is 35? Will it be sufficient? Is it compliant? No. You have to separately calculate the limit. Members shall not exceed 10, public shall not exceed 25%. But there are also second set of companies. Listen carefully. They are eligible government companies. They're eligible companies, but they're also being controlled by the government companies. If it comes to government companies, do the government companies think in a narrow sense only for members or a wider sense for the entire public? Obviously, they'll consider for entire public. Logic states that they'll accept only from public. But how much percentage? Percentage remain the same, 35. But this 35% entirely will be accepted from whom? Public. Sir, then what about the members? Because members are also indirectly included in the public itself. There is no segregation for public. Sorry, segregation for members. We'll accept the entire 35% from whom? Public itself. Then, tenure of deposit. We started this chapter with this logic. Deposits are short term or long term? Short term. They shall not be, a company, no company shall accept deposits which are repayable on demand. They are not demand repayable, or they should be repayable for a period less than 6 months or more than 36 months. What is the category? What is the wording? No company shall accept deposits which are repayable on demand or repayable for a period less than 6 months or more than 36 months. Quick answers on it. Can it be 36 months? Yes. Can it be more than 36 months? No. Can it be less than 36 months? Yes. Can it be 6 months exactly? Yes. Can it be more than 6 months but less than 36 months? Yes. Can it be less than 6 months? No, but there is an exception. Exception is given when it is less than 6 months. In the exception, you have to satisfy two conditions. How many? You have to satisfy two conditions in case of the exception, which states that you can accept deposits for less than 6 months, but it shall not be less than 3 months. So I hope you guys are understanding. Otherwise, look at this chart. Entire period of time, 3 months, 6 months, 36 months. Add every single logic into it. I hope you will be able to answer this. If it is more than 6 months, allowed or not allowed? Not allowed. It is not allowed to accept which is more than 6 months. Second category. Wait, let me change the color. This should work. If it is exactly 6 months, yes. If it is more than 6 months up to 36 months, allowed. So this period it is absolutely allowed. Or second category, during this period of time, it is still allowed, but it is an exception. Not directly allowed, it is an exception. If it is less than 3 months, not allowed. Give me all possibilities. More than 36, not allowed. At exactly 36, allowed. Exactly 6 months, allowed. Between 6 to 36, allowed. Less than 6, not allowed, but there is an exception, but it shall not be less than 3 months. If it is less than 3 months, again, not allowed. But during this period, you can accept a maximum of 10%. 10% of what? Can you? 10% of what? Paid up share capital plus free reserves plus securities premium. That's your tenure concept. Then a small little rules here. Brokerage. To make sure that the broker, commission agent, will not provide false information to the investor, we have put a restriction on the commission. Why, sir? If higher amount of commission is given to the broker, to the commission agent, what would I do? Sir, I would not encourage them. I will put my life into it, and I'll some other way, giving even false information, motivate the investors to invest into deposits, because I'll get a higher amount of commission, I'll get benefit out of it. There's a chance that I can give false information. Who will be at loss? Depositors. Company will get benefit, I'll get benefit, but who will be at loss? Depositors. To protect the depositors, we state that we'll put a limit on the brokerage that is paid. But this is an MCQ question if possible. The brokerage shall not exceed the amount of brokerage prescribed by RBI. If RBI stated 10%, sir, can I pay 10%? Yes, but it shall not exceed the rate prescribed by RBI. If RBI prescribed 5%, can I pay 6%? No. Then, once the circular have been issued, once the circular have been advertised, once the circular have been issued, is the company allowed to alter the terms and conditions? No, sir. Because the depositors accepted deposits only based on those terms and conditions of the deposit. If they have been altered, I would have never accepted deposit at all. Can I alter it? No, until it is mutually accepted by both the depositor and as well as the company. So alteration is not allowed. No alterations are allowed. Joint names, an interesting topic for the entire company side. Can we have 2 or more deposits combined together? Yes, this is still an MCQ. We can have 2 or more depositors, but the maximum we have is 3. So we can have 2 or we can have 3. They're called as joint depositors. Whenever we have joint depositors, all concept is good, but the logic is when I pay interest, when I repay the deposit amount, to whom should I repay? Should I segregate between all of them and repay to all of them? That's one option, which is called as jointly, but it will be difficult and burdenful for the company. Then companies had stated that rather than that, you can go for a concept called as first named or survivor. The person whose name is mentioned first in the register of deposits will have a right to receive it. Rest of them will be distributing it within themselves, not my headache as a company. I'll give it to whom? The first named or the survivor. If not the first name, even more liberal concept is anyone or either or survivor. I'll give it to anyone, you will take it. But practically what happens in the market, this is what they use, first named or survivor, to avoid disputes in the future. Then this is a very interesting topic, appointment of deposit trustee. Very, very careful while you're reading it. Go take a bit of water, have some snacks, sit down, be a little more active, listen to it carefully. Whenever company is accepting deposits from public at large, the public's money has to be protected. For protecting the public's money, we will appoint a person called as deposit trustee. I'm sorry, I was just teaching 71 to other set of students. My mind is still in the deposits debentures topic. We'll appoint a person called as deposit trustee. Deposit trustee is a person who will raise his voice against the board of directors, who are basically the agents of the shareholders. So what are we having here? We are having a fight. We are having a WWE match between whom? Board of directors and deposit trustee. The deposit trustee is promoting or protecting whom? Depositors. The board of directors are protecting whom? Shareholders. They'll have a constant fight with each other to protect their own rights. The shareholders will be protected by the board of directors and debenture trustee will be protecting the depositors. But try understanding. If the company has accepted deposits under section number 73 from its members. What do you mean by depositors here? Depositors are nothing but my shareholders itself. If the depositors themselves are shareholders, do they have the right to vote as a shareholder and still be able to protect themselves as a depositor? Hence, appointing deposit trustee would be required or not required? Not required. If it is required only when the company has accepted deposits from public, or the company has accepted secured deposits so that he'll manage the security on behalf of the depositors. Then we have to appoint a deposit trustee. But sir, how many deposit trustee would I appoint? Depends on the amount of deposits accepted, depends upon how many depositors you have in the company. So I have only 10 depositors, I'll appoint one. So I have 1 crore depositors. One deposit trustee will not be sufficient to manage all 1 crore. I'll appoint more than one. So the wordings are one or more. At the wordings, the company has to appoint one or more deposit trustees to act and protect the rights and interests or solve the grievances of the depositors. He'll be appointed before the issue of circular. Why, sir? His name has to be mentioned in the circular so that people will decide whether to invest or not to invest based on the name of this person called as a deposit trustee. Hence, his name has to be mentioned in the circular. Hence, he must be appointed even before the issue of the circular. He has to be appointed at least 7 days before the issue of circular. How many days? 7 days before the issue of circular by executing a document called as deposit trust deed, which will be in form number DPT 2. And I forgot to tell you, the circular will be in form number DPT 1. Deposit trust deed will be in form number DPT 2, which has to be executed at least 7 days before the issue of the circular. But sir, who will I appoint as a deposit trustee? There's no qualification criteria. Same as your board of directors category, there's no qualification criteria. Any person can be appointed as a deposit trustee, but there are certain disqualification criteria. Who is disqualified to act as a director? Deposit trustee, simple logic, any person who is influenced by the company. Any person who can be influenced by the company is obviously going to work for whose benefit? Shareholders' benefit. But my entire agenda is to make sure that this guy works for whose benefit? Depositors' benefit. Hence, he'll not be allowed to act as a deposit trustee. If you observe, there's also a question asked on it, so be careful. What are the disqualifications? A person who is a director, key managerial personnel, or employee, or any other officer, or even of the company, or even in the group companies, holding subsidiary associate, he's influenced by the company. He's not allowed to act as a deposit trustee. 4 names I want you guys to remember: director, key managerial personnel, employee, or any other officer of the company or the holding company or the subsidiary company or the associate company is not allowed to act as a deposit trustee. Second point, a person who is a depositor himself. It's a contradictory point. Listen carefully. Why? If I'm a depositor myself, I'll not be working for shareholders, obviously, but I'll be working for my personal amount. I'll not be working for all depositors. I'll be working for my share as a depositor. I might be influenced by myself as a depositor. Hence, you're not allowed to act as a depositor. Third point, a person who is related to any person mentioned in point number 1 and 2. If you're relative to a director or KMP or employee or officer or the depositor, you're not allowed to act as a deposit trustee. I hope you are with me. First point, KMP, director, KMP, employee, officer. Second point, depositor. Third point, relative of any of the persons mentioned in point number 1 and 2. Fourth point is a person who is indebted, who is taken a loan from the company or the group companies, or they've added extra point, a subsidiary of a holding company. Subsidiary of a holding company. If you're indebted to any of these companies, if you've taken loan from them, there's a chance that you might be influenced by this company. You're not allowed to act as a deposit trustee. So what's the next point? Point number 5 states that if he has given any guarantee for the amount of deposits or the interest repayable by the company, if the company makes a default in repayment of deposits or the company makes a default in repayment of the interest, the person who has given a guarantee will be held liable to pay it. Hence, there's a chance that he might be influenced to make sure that if the company even made a default, he'll not come out with it. Because if the company has made default, I have to pay it. I'll be influenced. I'll not be allowed to act as a deposit trustee. And the last point, when you're having a material pecuniary relationship, any kind of business transaction with the company which are going to materially affect your income, you'll be influenced by the company. We have done multiple examples. If I remember correctly, we took 1 hour, close to 1 hour to complete these 6 points in the classroom. I hope you guys remember those logics. Then, can this deposit trustee be removed? Deposit trustee, remember, was appointed by the board of directors. Can he be removed from the office? Yes, absolutely he can be removed. He can be removed by the board of directors again. But sir, we were in this discussion that board of directors and this deposit trustee are arch nemesis. They're enemies to each other. They are going to be working against each other, obviously. If they're working against each other, if the board of directors don't like this deposit trustee, they may go ahead to remove him. To make sure that he is not removed unnecessarily, we have given certain protections to him, stating that he can be removed by the board of directors, but with the consent of all the directors, which is very difficult to attain. Even with the consent of all directors, it must be in the presence of at least one independent director. At least he'll raise his voice if something goes wrong in the company, in the presence of at least one independent director in the board meeting. Next, what will the deposit trustee be doing? Whenever he has a doubt, he'll call for a meeting. He'll call for a meeting. He'll call not for a meeting of shareholders, not for the meeting of debentures. He'll call for a meeting of depositors. There's no fancy name given. It is not called as general meeting, board meeting. It is simply called as meeting of depositors. But sir, when will he call it? Will he call it whenever he is feeling bored about it? No. He'll call it whenever, if some event has happened in the company. On happening of an event, listen carefully. On happening of an event which has constituted a default. Some default has happened in the company. Or on happening of an event, in the opinion of the deposit trustee, he believes that it is detrimental to the interest of depositors. It is loss for the depositors. He'll call for a meeting. When will he call for a meeting? On happening of an event which constitutes a default, or in the opinion of this trustee, it is detrimental to the interest of the depositors. I'll call for it. Or forget I calling it, or forget my opinion, the depositors may request me to call if they hold not less than 1/10 of the value of the depositors. How much? Not less than, at least 1 by 10, 10% of the value of deposits. If you hold them, you can request the deposit trustee, and deposit trustee will call for the meeting. Last category, duties of deposit trustee. Whatever you have done till now, you can write it. What are the duties? Remember, when was he appointed? Even before the issue of circular, his first duty is to make sure that the circular or the advertisement made by the company is not inconsistent with the provisions of this act. That means everything required to be disclosed have been properly disclosed. And the company, if it is secured deposit, might have created a security. He'll have to make sure that the security is sufficient enough to cover both repayment of principal as well as interest involved in the process. Can I say these are the two activities which have been done, not even before, not even after accepting deposits, even before the issue of circular. His duty as a deposit trustee starts even before the issue of circular. Then he'll ensure that company does not make a breach, does not make a default. If at any point of time he feels that company might do a default, he'll call for a meeting. Or if the company has actually done a breach already, he'll make sure that he'll try to find a remedy for that breach, or such other activities as may be described. Duties of a deposit trustee. But sir, what's the proof that I have become a depositor? Last legama, we are almost done. Probably more 5 minutes. I should be done with the 5-10 minutes, maximum 5-10 minutes. I'll be done with the deposits chapter. Register of deposits. The company has to maintain a separate book called as Register of Deposits. I want the flow clear. Once the money is received by the company will have to sit down and decide whether to accept or reject the amount of money received. If they have accepted, you are called as a depositor. But what's the proof that you are a depositor? The company will issue a document called as deposit receipt. The deposit receipt has to be issued by the company within 21 days from the date of receipt of money. How many days? 21 days from the date of receipt of money. Can I say in this 21 days, you are not confirmed that you are a depositor? When will it be confirmed? When it will be conclusive that you are a depositor? When the company issues the deposit receipt. Once it is concluded that you are depositor, your name has to be entered in the register of deposits. The name shall be entered within 7 days from the date of issue of deposit receipt. From the date on which it is finalized that you are a depositor, from the date of issue of deposit receipt, you have 7 days to enter your name in the register of deposits. And this is your area. Register of deposit will contain certain particulars. What particulars have to be mentioned? It is your talent to add amount. You can write whatever comes to your mind. As soon as your mind says Instagram ID, stop it there and put it as such as may be prescribed. At least you can write name, address, contact details. That's fine for me. And put it such as may be prescribed. That should be sufficient. But don't write Instagram ID, Snapchat ID. No. Okay. This register have to be preserved, obviously. Very tricky logic. Listen. The register have to be preserved for a period of 8 years. That is the easiest part of the time limit. 8 years. But 8 years from where, sir? Remember, this register, entry in the register was not done on a particular date. If money is received at this point of time, I could have issued deposit receipt here within 21 days. I could have issued deposit receipt here. I could have issued deposit receipt here. Based on the date on which I have issued the deposit receipt, I'll count 7 days to make entry in the register. That means the entry in the register might have been done in different dates. When will I talk about preserving a book? Once the preparation of the book have been completed. But when has the preparation completed? Has the preparation of book completed on a single date, or did it happen over a period of time? Over a period of time. But after the preparation got completed, then what I'll talk about preserving it? I have to maintain the book for a period not less than 8 years from the date on which the latest entry, last entry was made. Not on the first entry, not on the second entry, on the last entry was made. From here, I'll calculate it. But because this is a date, I'll not calculate for the date, I'll end the financial year at the wordings. Otherwise, I'll give you another example after the words are added. Otherwise, not less than 8 years from the end of the financial year in which the latest entry was made. So, if the latest entry was made on 21st of February 2026, I'll maintain it from the end of financial year 2026, which is 31st of March 2026. But imagine it. If the first entry of deposits were made on, imagine this, if the first entry of deposits were made on 20th of March and the last entry was made on 2nd of April 2026, I'll maintain it for a period of 8 years, but from the end of the financial year in which the latest entry was made. When was the latest entry made? What is the end of that financial year? 31st March 27. From the end of that date, I'll maintain it for 8 years. I hope you guys have understood it. 8 years from the end of the financial year in which the latest entry was made. Section number 75. Very interesting section again, which is linked back to 76A. If you guys have done a default, observe it carefully. If you have done a default, if the company has done a default, will they be punished? Yes. Section number 76A. And if there is fraud involved, they'll also be punished under section number 447. But punishing the company, punishing the officers in default will not satisfy the depositor. Depositor have lost money. He has suffered a loss, suffered a damage. For the damages, for the compensation for it, will apply section number 75. What is section 75? Damages for fraud. What is section 447? Punishment for fraud. But what is 75? Damages for fraud. When does this section arise? Obviously, the depositor should have suffered loss. I'll put it into a single sentence at the end of it. Bear with me for the next 2-3 minutes. If the depositor has suffered a loss or damage, then will come. But when will he suffer? If the company pays or fails? If the company pays everything on time, there's no suffering there. If the company fails to pay the deposits or the interest thereon and they have suffered a loss, the persons who are responsible for it will not only be punished under 447, but they'll also be liable to pay damages to the depositors. I'll put it as a single sentence. Listen carefully. where the company has failed to repay the deposits or part thereof or any interest on such deposits, and it is proven that the company has accepted deposits with the intention to defraud the depositors or for conducting a or for a fraudulent purpose. They have done a fraud. In addition, all the officers who are responsible for accepting such deposits, in addition to section number 447, shall also be liable, severally liable to pay compensation without any liability for the losses or damages suffered by the depositors. I'll repeat it again, try to repeat it along with me. If the company fails to repay the deposits or any part thereof or pay interest on such deposits, and it is proven that the company has accepted deposits with the intention to defraud the depositors or for a fraudulent purpose, then all the officers who are responsible for accepting such deposits, in addition to section number 447, shall be severally liable without any limit on liability for all the losses or damages suffered by the depositors. Can I say this section is to protect the losses that were done by the depositors? This is for depositors, 447 is for the officers. Section number 74. It shouldn't be asked, it will not be asked, but we can never trust ICMAI. Just go through, give a glance once and leave it off. You don't have to go very detailed into this section. Section number 74 states that when the deposits were accepted in the Companies Act 1956 and they were pending on repayment when the Companies Act 2013 came into existence. Companies Act 2013 for the deposits chapter came into existence on 1st of April 2014. The date 1st of April 2014. Try answering it to me. If the deposits were accepted here and repaid here, we will apply Companies Act 1956. But if the deposits were accepted here and it was repaid here, in that case, we'll apply Companies Act 2013. But the problem was, if the deposits were accepted just before the new act, and on the date here, what happened? The 1956 act got repealed. It got destroyed. It was not existing anymore. That means the deposits which are accepted, which are not still repaid, are not required to be repaid. Are they still required to be repaid? They're still required to be repaid, but who will tell you to repay? Section number 74. Section 74 talks about repayment of deposits accepted before the commencement of Companies Act 2013, before the commencement of this act. Before the commencement of this act, whatever deposits which are accepted and still pending on repayment have to be repaid. Have to be repaid on the date on which they become due, or up to a maximum of 3 years. So the wordings would be, they have to be repaid within 3 years, or the date on which they were supposed to repay, on which they have become due, whichever is earlier. What's the last time limit? 3 years. But whether you're repaying it on time or not, I, the ROC, want to check it properly, regularly I want to check it. Hence, prepare a statement of all the deposits which are pending on that date and submit it to me within 3 months. Section is done. But after the end of this maximum period of 3 years, if the company is not having sufficient money to repay, they can come and plead about their situation with the NCLT. And NCLT, if they are satisfied, will give you an extension of time limit according to the situation, but only after considering your financial position. If you have enough financial repay, please do repay it on time as per section 74. But if your financial position is not allowing you to repay it, then NCLT may provide you an extension of this time limit under section number 74. Read it once, listen it to once or twice, leave it off a month. Next category, debentures. Debentures, as we were discussing about it, 10-15 minutes maximum, we'll close it off. Debentures also will be done within 10-15 minutes itself. Debentures are long-term loan. They're long-term or short-term? Long-term, they're long-term debt instruments of the company which are acknowledging a debt. So what's the definition of debenture, sir? Debenture definition is also a very interesting topic. Debenture includes debenture stock or bonds or any other instrument which is evidencing a debt in the company. Any instrument which is evidencing a debt will be called as a debenture, whether it is constituting a charge on the assets of the company or not. That means the definition itself clearly states that this is not change hammer, this is charge. Autocorrect happened. Charge, which creates whether constitutes a charge on the assets of the company or not. What do you mean by that? It can be either secured or it can also be unsecured. I'll still call it as a debenture. It can be debenture stock, it can be bonds, or you can call it as a fancy name, any other instrument. But if it is evidencing debt, I'll call it as a debenture. We have multiple kind of debentures, types of debentures under Companies Act. First, we'll start with based on redeemability. Based on redeemability, we have two kind of debentures called as redeemable and irredeemable. I'm sorry to say, but even a lot of students at the final level still get this wrong. They are still living in this assumption that irredeemable debentures means they're not required to be repaid. Absolutely wrong. Irredeemable means that redeemable debenture means they're still required to be repaid and they have specified a particular date on which the amount will be repaid, redeemed. Redemption will happen on a particular date, irrespective of the company's financial position, irrespective of the cash flow available with the company. It must be repaid on a specific date. Then it is called as redeemable debentures. But if you don't specify any date, no specific date has been mentioned, not carrying any date for redemption, then it is called as irredeemable. Because it is going to continue in the company, it is also called as perpetual debenture. Sir, what do you mean by that? Are they still required to be repaid? Absolutely, they're still required to be repaid. They're still loan somehow. They're still loan, they're still required to be repaid, but it gives a flexibility to the company. Whenever I have money, I'll come and repay. There's no specific date mentioned in it. I can repay whenever I want. But until I repay it, I have to pay interest upon those debentures. It's a very flexible concept for the company. But on the other side, if it is flexible for me as a company, it is uncertain, unpredictable for the debenture holder. Hence, Companies Act stated that issue of irredeemable debentures is prohibited. Issue of irredeemable debentures is prohibited, not allowed. What can be issued under Companies Act? Only redeemable preference shares. Redeemable preferences as well as redeemable debentures. Then coming to the second category, convertible and non-convertible. You have a lot of categories on this. What do you mean by convertible? What happens? A quick example. I have my debenture certificate assuming here. The company will issue the debenture certificate. What will happen? If I go to the company after the end of the tenure, I'll go surrender this debenture certificate and in turn I'll get cash. Don't worry, Amma, they're counterfeit currency. They're not real cash, counterfeit currency which we use for the classroom examples. What happened? I'll surrender this to you, the company, and I'll get in what return? Cash. If I get cash in return, they're called as non-convertible. Nothing got converted. But if in turn, try assuming it, if at all, I take my debenture certificate, I'll go surrender with the company. Once it is surrender, company does not give me cash. Company does not give me cash, but company rather gives me share certificate. The debentures got converted into equity shares. They're called as convertible debentures. Under convertible debentures, we have multiple aspects again. Quick examples on it. What happened? I have initially what have I given? Cash to the company, for which company given me debenture certificate. I'll after the end of the tenure, I'll go surrender the debenture certificate, I'll get cash, non-convertible. Or if I don't get cash, but if I surrender and I get debenture share certificate, it will be called as convertible. Or listen carefully. If I surrender the debenture certificate and company gives me share and some amount of cash, they're called as partly convertible and partly non-convertible. They're called as partly convertible debentures. Where did I get the entire money or only part amount? Part amount is non-convertible, part amount is convertible. They're called as partly convertible. If I don't get cash at all and I get only share certificate, it will be called as fully convertible. If I get cash as well as equity shares, it will be called as partly convertible or last option. If I surrender debenture certificate, you come to the company, you are the debenture holder, company gives you an option. Either take equity share certificates or take cash, called as optionally convertible debentures. If I don't give you the option, compulsorily convertible debentures. So we have 4 options under convertibility amount. It can be either fully convertible or partly convertible or optionally convertible. But if the option is not given to you, it will be called as compulsorily convertible debentures. Any doubts on this convertibility part? But again, remember, option is always given to the debenture holder, investor, not to the company. Option is always in the hands of the debenture holder. Then secured and unsecured. This can be MCQ and this will be an MCQ point. Secured, unsecured, we have just discussed about it. As per the definition, it can be either secured or it can also be. Sorry about my voice if it is little unclear, Amma. I'm having a little cold right now, so might be unclear. I'm not sure. I'll check it after the recording is done. Secured, unsecured, we have 2 options. Either it can be secured or it can also be unsecured. It will be called as secured only when you're covering full value or part value, full value. If it is unsecured, it is also called as naked debenture. Why is it called as naked? Because it is not covered with any other benefits, any other what do you say, security or asset covered. It is also called as naked debentures. It will not have any security, or it is having security but it's not covering full value. But coming to secured part, it may be secured or it may be unsecured. But if the company has raised debentures from public, you have to remember it. If the company has raised debentures from public and the tenure of the debentures is more than, not more than, equal to, more than 18 months, then they have to mandatorily create it as a security. What are the wordings? If the company has accepted from whom? Public, and the tenure of such debentures are more than 18 months, it must be secured, and you have to create security in favor of a SEBI registered debenture trustee. Only a SEBI registered person, not a random person. You have to create security in the name of a SEBI registered debenture trustee. And if the company fails to pay the money on such deposits, this debenture trustee will have every right to sell the asset, recover money, and settle all the debenture holders. Then we have fixed and floating. Now we have wars running left, right, and center throughout the world. We have multiple wars which are running, and there's no end card to the war which is happening right now. It may continue for a number of days from here. It may or may not. Try understanding it. Because of which the inflation will increase. World trade has come to a pause. If world trade has come to a pause, the demand for the goods will increase, the supply is reduced, the prices will increase, inflation will increase. If inflation is increasing, bank rates will also fluctuate. What is the safest option if you have fluctuating bank rates regularly in a unstable economy? We'll better go for a floating rate. What is floating rate, sir? Floating rate states that the interest rate will change according to a benchmark. What will be the benchmark? Assuming repo rate is put as a benchmark. The bank you took loan or the debentures you took loan from states that I'll charge 3% plus the repo rate. If the repo rate is 5, I'll charge 8. Repo rate increases to 6, I'll charge 9. If it increases to 7, I'll charge 10. If repo rate decreases from 5% to 4%, I'll also charge 7%. It will increase or decrease based on a benchmark. But forget all these tensions, we'll have fixed rate of interest. We have two options, either fixed rate or floating rate. Forget about interest, we'll not even give you interest. Zero coupon debentures. What do you mean by zero coupon debentures? A lot of people get confused here. I'll not even give you interest. No interest is carried, no coupon rate is given, zero coupon rate is given, no interest rate is given. But how would I even invest if there is no interest? The paper will be valued 100. I'll sell it at rupees 80 at a discounted price. But when you come back after the end of tenure, I'll give back rupees 100 to you. Say it was accepted for rupees 500. At that time of initiation, when you purchase it, I'll ask you only 300. But when you are redeeming it, I'll pay you 500. How much did you pay? 300. How much did you receive? 500. You got benefit, but not in the not in the structure of interest, but you got it as a benefit, as a discount. That's the reason they're also called as discounted bonds. They're also called as what? Discounted bond. No interest, but I'll give you a discount. But think about it, Amma. If the paper is worth rupees 100, I'll accept loan for 1 year. I'll ask you to pay 90 today. I'll at the end of 1 year pay you 100. Right? Now, will you accept it? It was for 10 years. 10 rupees of benefit for 10 years of tenure. Will you accept it? No. Whenever the tenure is increasing, period is increasing, the discount should also increase. If the tenure is for a long-term period, if it is a maturity is long, the discount will also be long. Big discount amounts have to be given. Hence, it is called as deep discount bonds. Usual answer, it is called as discounted bonds. But if it is for a higher tenure, discount should be higher. Hence, it is called as deep discount bonds. I hope you have enjoyed this session, and if you have made this far into it, please drop a like on this particular video. Share it with your friends who are looking for marathons for CMA Final. We'll meet you in the next session. If you like the video, do share it, and also comment if you want any other chapters or any other help from my side from CMA Final perspective. That's all for this video. We'll meet you on the next one. Thank you, guys. So let's get started with the next chapter. We have prevention of operation and mismanagement. This is your chapter number 16 of the Companies Act, which ranges from section number 241 till section number 246. I know the chapter seems easy, number of sections are less, But trust me, this is not going to be your regular, easy, flowing chapter. It will be tricky. So why would you say that this is tricky? The section numbers we have, every single section number we have here is interlinked with each other. To understand section number 242, you guys have to first understand the reasoning behind section number 241. But to understand 241, first you have to learn section number 244. But once you have understood 241 and 244, then you can actually understand 242. Once you have understood 241, 244, 242, that's when you can read and understand section number 243. Once you have done with these bunch of sections, only then you can understand section number 245, and after that 246 is single word section that is also be linked with all these set of sections. I know it is little overwhelming as of now and confusing as of now with the linking of all sections, but give me next 40-45 minutes or so. I'll clarify the entire process. This entire set of sections will be very easy, but you have to understand the flow in which you have to study and the reasoning why these sections were drafted in such manner. Let's get started, but we'll not start with sections, we'll not start with the word operation mismanagement directly. This entire process happened in 1840s with the case study called as Foss versus Harbottle. 1843, a suit was filed in the Court of Law in the UK, which has structured Companies Act and shaped Companies Act in a proper manner. The Companies Act we learned today has one of the major reasons of Companies Act today happens because of this case study. Very important for company law to understand. Foss versus Harbottle. So what happened? I'll give a briefing about this within the next 2-3 minutes on understanding what happened in the case study so that you'll understand the conclusion of the decisions which were passed in this case study. What happened here is Foss versus Harbottle happened in 1843 actually, where there was a company called as Victoria Park Company. I might be wrong with the spelling, but Victoria Park Company. This Victoria Park Company was established for the purpose of real estate. They were supposed to purchase a total of 180 acres. Imagine 180 acres of land, very huge land. 180 acres of land that too near to Manchester in the United Kingdom. Near to Manchester, and the objective was to construct luxurious high-level residential and commercial plots and parks and make it very attractive in the middle of Manchester. It was a huge company, Victoria Park Company, for 180 acres of process, for which obviously they have raised money from public at large. They have shareholders. The shareholders have financed the company, and the board of directors were supposed to use it for the objective of this company. There were a total of 5 board of directors for this company, one of them being person called as Harbottle. Harbottle is not an object name, it is a person's name. Harbottle is a person's name. So what happened? These board of directors of the company started misutilizing the finances of the company for their personal purposes. They were not using it for the objective, they were using it for their personal purposes. Then obviously, if they're using it for personal purpose, the shareholders will be at loss. Then the shareholders went through the court of law and filed a suit. Who filed a suit? The shareholders filed a suit on the board of directors stating that the finances of the company have been misutilized. Then who was one of the shareholders? Actually, 2 shareholders filed a case, and one of the shareholder was Foss. So these are 2 actual names. Foss was a shareholder who filed a suit stating that the board of directors, one of them being a Harbottle, were misutilizing the finances of the company. Then what happened? Once the case was accepted, once the case was suit was filed in the court of law, the court has dismissed the case completely without even the trial of the case, stating that we have the concept called a separate legal entity. Company being a separate legal entity, company has its own name. Every property purchased will be purchased in the company's name. Transaction entered, contracts entered, agreement signed, everything will be done in whose name? Company's name. Being a separate legal entity, company also has the power to file a suit or be filed a suit upon. If a loss has happened to the finances of the company, who has suffered loss? Not the shareholder. Shareholder is a separate person. Who suffered a loss? Company. If the company has suffered a loss, who will be the right person to file a suit? Company itself. The company itself will act as a plaintiff, and no other person can have a power to file a suit on behalf of the company. So who will be the plaintiff? Company itself. Company itself, acting in its own capacity, will act as a plaintiff. But so there is a problem here. Company is an artificial person. How would a company file a suit? This case was dismissed. All is good because Foss did not have a power to file a suit. But how would the company file a suit? Company is an artificial person. That's where they have established the concept called as the majority of the company will decide whether to file a suit or not. Because company is an artificial person, the majority of the shareholders of the company will decide whether a suit has to be filed or not to be filed by the concept called as majority will rule. So there were two logics, two conclusions that got established by this case study. The first conclusion was, if there is any loss or suffering of the company, the right plaintiff means a person who files a case. The right plaintiff will be the company and the company itself. No other person will have a right to file a suit on behalf of the company. That's the first concept. But for the company to file a suit, how would the company do it? We establish a concept called as majority rules. Majority rule. Then what about the minority, sir? Majority will rule and the minority will follow the instructions or the directions or the decisions taken by the majority. That's where this famous sentence comes in. Majority rules, minority follows. What's the repeat the logic for me? Majority and minority follows. Majority rules and minority follows was established because of this case study, Foss versus Harbottle. But if this actually being implemented very strictly, try understanding it very strictly. If it is implemented, minority will be losing in the company, minority's interest will be suppressed in the company. Minority are also shareholders, they're also owners, they also have rights in the company, but agreed that they don't have a right to control the company, but they should be given basic necessities, basic rights and powers in the company. If their basic rights have been restricted or suppressed, Companies Act states that we have exceptions to the Foss versus Harbottle, or we also call it as exception to the majority rules. I hope you guys have understood the case study. Then let's understand the background of how Companies Act is structured also. Companies Act is a democratic entity. As you know, India is a democratic democratic country. At least we call it as democratic. Is it democratic? That's a different story to discuss about, but at least let's assume as of now it is a democratic, not assume. It is on paper, it is a democratic country. What do you mean by democratic country? By the people, of the people, for the people. Now, the same logic is applicable when it comes to the topic of company. Company being a democratic entity states that it is by the shareholders, it is for the shareholders, and it is of the shareholders. By the shareholders, for the shareholders, of the shareholders. Hence, every single activity of the company will be done for shareholders. Every single activity of the company will be done by the shareholders. It is belonging to the shareholders. It is of the shareholders. But problem is, every single activity will be done by the shareholders, but shareholders are fools. We have established this multiple times now. Shareholders don't have enough knowledge to come and run the business. Shareholders don't have enough time to come and run the business. Shareholders don't have enough experience to run the business in a profitable manner. Hence, they started delegating their powers to the board of directors. Who delegated them up? Shareholders delegated their powers to whom? Board of directors. Now the board of directors started exercising their powers in the separate meetings called as board meetings. But while the powers were being delegated, we did not delegate all the powers, we delegated most of the powers. Give me the basics here. Who delegated? Shareholders delegated their powers to the board of directors, but they did not delegate all the powers. They have delegated most of the powers, and some powers have been reserved by the shareholders to be exercised, to be decided in the general meeting by the shareholders. That means, sir, you are stating that not all powers have been given. Some powers have been kept with the shareholders. Majority powers have been given to the board of directors. If I put this sentence together, powers of the companies are in the hands of, they're actually in the hands of shareholder as well as board of director. Not only shareholder, not only board of director. Powers of the Companies Act have been divided between board of directors as well as shareholders. Board of directors exercise their power in the board meeting. Shareholders exercise their power in the general meeting. But while exercising their powers, they'll not exercise it by an individual person. Will go based on democracy. Will go based on majority. That's where the logic again comes in. Majority rules and minority follows. The board of directors have been delegated the powers through the major constitutional documents we have, MOA and AOA. That's how the business has been run. So it is now very obvious that it is not possible for a single shareholder to control. It is possible for the majority shareholders or majority board of directors to control or exercise the powers under Companies Act. But always, whenever the majority takes decision, it will always be in conflict with the interest of the minority. Decision taken by majority will not be liked by the minority, obviously. But at the same point of time, you have to protect the minority. It is very contradictory to each other. Try understanding it. Majority will rule. This law have to be applied. But at the same point of time, while the majority is ruling, I don't want the minority to suffer. I have to give the basic rights for the minority. We have to somewhere strike a balance between them that majority will rule, minority will listen, but minority should not suffer because of the wrong decisions taken by the majority. That's where the process comes in. Minorities have to be protected in the Companies Act. How do we protect them under Companies Act? That's how this exception comes in. I hope you're able to stitch together all the different categories we have learned. So, exceptions to the rule Foss versus Harbottle, or it is also called as, the question may be also drafted as exceptions to majority rule. Now, try imagining this in your head here. The exceptions to the majority rule or Foss versus Harbottle are of two categories. One, which is given under Companies Act. Listen carefully, ma. This nobody is going to teach you. Listen carefully on this. The Companies Act have expressly stated that we will try to protect those minority. We'll try to protect or give the chance for the minority to raise their voice against the company by the concept called as prevention of oppression and mismanagement. The word oppression is not defined under Companies Act, but it actually translates to the word harmful. If some harmful activity is done in the company, we'll prevent it. Will give a chance to the shareholders, the minorities, to raise their voice against the company, will prevent such harm in the company. That's what Companies Act has expressly given under chapter number 16. But remember, this case study happened in 1840s. From 1840s to till date in 2026, what happened was nobody told it, but the courts, judges have accepted it as an exception. Nobody told, Companies Act did not tell you that it was an exception, but court, by applying the logic, have come to conclusion that there are certain exceptions which have not been spoken but which have been applied, which have been utilized, or which have been decision passed by courts regularly over a period of years. This is a logic called as common law. So exception given under common law, nobody told you that it is an exception, but it has been an exception followed by the courts and judges over a period of time. The exception given by Companies Act is oppression and mismanagement. Let's start with the easy part. The exception under common law. We have a total of 6 exceptions given here. Try understanding it again. Nobody told you that it is exception, but it is being utilized as an exception by the courts. The first exception is any transaction which is ultra vires. Any transaction which is ultra vires. We know this. Ultra vires are 3 categories. Ultra vires the Companies Act, ultra vires the MOA, ultra vires the AOA. If any of the ultra vires transactions have been exercised by the board of directors, the shareholders of the company have a chance to stop the board of directors, pass an injunction order, stay order, and stop them. And who can take this action? Not majority. It need not be majority. It can be individual shareholder who has a right to bring an action against the company if the company is entering into a transaction which is ultra vires beyond the powers given to the board of directors. That's the first exception. Second exception, when the straightforward, the majority are conducting a fraud against the minority. Imagine this. Majority are conducting a fraud on the minority. Who will suffer? Minority. Who will get benefit out of it? Majority. Will the majority file a suit? Obviously not, because they're getting benefit out of it. They'll not file a suit. Who will continue to suffer? Minority. Now I have to give chance to the minority to speak up and prevent such harmful activities on the companies, on the minority shareholders. Individual shareholder has a right to take an action. Who has a right to take action? Individual shareholder, whenever there is a fraud on the minority. Or, this is interesting, this will open up an extra door into the process. Extra logic will be opened up. Listen carefully. Third point. Say, assuming the board of directors have done wrong. Okay, I'll take it slow here. If the board of directors have done something wrong, the majority shareholders, will they have a right to take an action? Yes, sir. The minority, will they have a right to take an action? As per the majority rule, minority will not have power, but at least who will have power? Majority. Now start understanding. Sir, I am the board of director who have done a wrongful activity in the company. You are the majority shareholders. You, by passing a ordinary resolution, have asked the company to file a suit. On whom? Board of directors. Listen carefully. Who will file a suit? Shareholders will file a suit on that is shareholders by passing ordinary resolution. The company will file a suit on the board of directors. But company is an artificial person who will actually go file a suit. Who will actually submit the documents? Board of director. Board of director filing a suit on the board of director. If the wrongdoers are in the management, if the wrongful person itself in the management, nobody can stop him. Forget minority, even majority cannot stop him. Then the logic states that we don't bifurcate between whether you are minority, we don't bifurcate whether you are majority. Every member of the company will have this right. I hope you guys understood. It is a law not being created just for the minority. It is sometimes also useful for the majority to take an action on the company from harmful activities. So this logic is, remember, not only for minority but also for majority, but predominantly it will be useful for whom? Minority, but also for majority. If the wrongdoers are in management, they will not allow you to file a suit. Then I can directly go and file a suit. It is one of the exceptions. Then, interesting logic. A resolution which is as per the law is requiring to be passed by special majority. What do you mean by special majority? Today in the modern law, we call it as special resolution. Originally, it was called as special majority. A resolution which is requiring a special majority, but the company have not passed a special resolution. Say, assuming 78% of them voted in favor, 22% voted against it. Is a special resolution passed? Yes. If the special resolution is passed, the company acting on such transaction or implementing such transaction makes sense. But if a resolution which requires a special resolution, but company has got 70% in favor, 30% against it, the resolution, special resolution was not passed. Even though it is not passed, the board of directors started acting upon it. They started implementing it. Is it allowed or not allowed? Then I can stop it. Give me the wordings here. A resolution requiring special majority is passed by a simple majority, or otherwise in the modern law we call it as what? Ordinary resolution. If I have to put it in simpler layman language words, a resolution requiring special resolution was passed, but passed by a ordinary resolution. Can they implement it? No. Can I have a right to stop it if they're implementing it? Yes. Who can stop it? All shareholders, majority shareholders, minority shareholders, or every member, individual shareholder? Individual member has a right to do that. Then next, personal rights of a shareholder. What do you mean by personal rights, sir? I as a shareholder have a lot of rights, lot of powers under Companies Act as a shareholder. I have a right to receive notice of general meeting. I have a right to attend the general meeting. I have a right to speak in the general meeting. I have a right to eat snacks. Do I have a right to eat snacks? Yes. I have a right to eat snacks in the general meeting. Do I have a right to vote in the general meeting? Yes. Now try understanding. Everybody was given a chance to speak except me in the meeting. Who was affected? Majority, minority, or individual shareholder? Individual shareholder, his personal right was being suppressed. If my personal right is suppressed, obviously me alone will be affected. Will I be able to file a suit? Yes. Individual person can file a suit. An individual has a right to go against the company and file a suit on the company. Last point is very vague. With the Companies Act and the logic was very smart here. They have mentioned it as a vague point. Whatever duties of the board of directors that have been delegated and been put as a responsibility on the board of directors, if they don't fulfill those responsibilities, if there is a breach of the duty they have been supposed to do, we'll have a right to make an application and stop the process in the stop the director from doing such activities. So I want you guys to repeat it for me. Exceptions to Foss versus Harbottle have been divided into two parts: Common Law and Companies Act 2013. Under Companies Act 2013, we have the logic called as prevention of operation and mismanagement. Under Common Law, we have a total of 6 exceptions. First exception, ultra wires transactions, any ultra wires transaction. Second exception, fraud on the minority. Third exception, wrongdoers in the management's control, wrongdoers in the management, top level management. Fourth point, resolutions requiring special majority passed by simple majority, or personal rights of a shareholder, or last point, breach of duty. All these are exceptions to the Foss versus Harbottle under the common law. Next, approaching the company law aspect, we have the concept called as prevention of operation and mismanagement. But this operation mismanagement to be understood, to prevent it, we have to first understand what is operation and what is mismanagement. Let's understand them. But the benefit you guys have here is the word operation mismanagement is not defined by Companies Act. You can write whatever comes to your mind. I'll give you the basics. You frame it on your own. Whatever is comfortable for you, you can frame it about. So logic starts with the word. The affairs of the company have been in the past or have been conducted in the present. The affairs of the company have been or are being conducted in a manner which is prejudicial or harmful or oppressive or detrimental. You can use any of these wordings you want. Anything which is harmful, basically, which is prejudicial. Prejudicial to whom, sir? It is harmful to whom, sir? It is harmful to either of a three category of people. We'll remember them in ascending order. It is harmful to a group of members, usually the minority, or It is not harmful to a group of members. It is rather harmful to the entire members, all the members of the company. I'll put it as it is harmful to the company. So it is not harmful to the company, but it is harmful to the not to company. Company is getting benefit out of it. All shareholders are enjoying it, but it is harmful to the society. It is harmful to the public's interest. Now add the wordings for me, Amma. If the affairs of the company have been or are being conducted in a manner which is prejudicial to the interest of members or the company or the public's interest, then there is said to be a case of oppression. You don't have to be perfect with it. You just have to remember the basic words. What are the basic important words you have to remember? Prejudicial to three category of people: members, company, and public's interest. Then, sir, what is mismanagement? Mismanagement is also very close to oppression, but the logic arises when there is a material change in the management. Why is mismanaged? Why is oppression happening? Because of a material change. I want this word remember. Material change in the management or control of the company. It is likely that the affairs of the company in the future will be conducted in a manner which is oppressive, prejudicial to the members or to the company or to the public's interest. Then the topic of mismanagement comes in. But don't have to worry, don't have to bifurcate. The word oppression or let it be mismanagement, Companies Act treats both of them in the same manner. Both oppression and mismanagement are treated in the same procedure as well. So coming to section number 241, logic states that if there is oppression mismanagement, you come file a suit. You come file a suit, I'll conduct a proper investigation about the process. Let me draw a proper chart for you to understand it. What's going to happen? You go make application. If you have operation mismanagement in the company, you make an application and you make an application to the NCLT. The NCLT will make sure that the investigation is properly happening and will confirm whether there is operation mismanagement. Get the logic clear, Ma? You are not confirming that there is operation. You are stating that, sir, I believe there is operation. Please do conduct investigation. Who will conduct the investigation? NCLT. But what are you doing? You are just making an application stating that, sir, I believe that the affairs of the company might be conducted in a manner which is oppressive, or it might be mismanagement. I believe there is oppression. I believe there is mismanagement. I'll make an application. Application to whom? NCLT. Then what will NCLT do? They'll not blindly pass an order. NCLT will properly conduct an investigation. After investigation is completed, if NCLT is satisfied that there is oppression, the NCLT will pass an order. But sir, who will make application? That's a big question we have now. Who will make application? This is clarified, Amma. I hope this is clarified. Once we make an application to NCLT, NCLT will conduct and they'll then decide whether there is operation mismanagement. If there is operation mismanagement, they'll pass an order. So who will make this application, sir? If the members are getting affected, if the members of the company are getting affected, obviously who will make application? Members. The members will make an application. If the company is getting affected, can I say members will make application still? That might be sometimes majority or even minority. The members will make application. But think about it. The company started a illegal business. They started selling drugs illegally in the market. Selling drugs is legal or illegal? I know there are some students out there still shouting, sir, they're legal. No, they are illegal. Selling drugs is illegal. We cannot sell drugs in the market. It is not allowed to do or done. Even possessing drugs is illegal. You will be punished for it. Now try understanding it. If you start selling drugs, the company starts selling drugs and the company making huge profit because of it, the company comes back and distributes to all the members of the company. Try answering it. Try answering it. Is it harmful? Yes, it is harmful to the society, public's interest. But can I say it is harmful for the society, but it is still beneficial for the shareholders? Members are benefiting. Now, if imagine the members, if they're getting benefit, why would they file a suit? There's a chance that members will never file a suit because they are getting benefit of it, and the harm is not for the members but to the public's interest. If public are affected, there comes a topic. Central government will make an application. Will make application? Central government. Now, I hope section number 241 is getting clear. This is section number 241. This is section number 241. Once this investigation is completed, the NCLT will pass an order under section number 242. This is section number 241 where we make an application to tribunal. Then 242, the NCLT, the tribunal will pass an order. Come back to the process. Where are we? Wait a second, I'll find the document. So what happened under 241? We make an application to whom? NCLT, and NCLT will conduct investigation. But who can make application? Application can be made either by a member or application can be made by the central government. When will the member make an application? A member will make an application. Every member has a right to make application when he believes that the affairs of the company are conducted in a manner which is oppressive or mismanagement. But there's still a catch to it. The logic here states that every member can make application only when he has a right to apply under section number 244. If every member is given this option, try assuming it. If every member is given option of every single company, imagine how many cases will be pending with NCLT. It's not practically possible. We'll not assume that they are genuine until you have a right to apply under section number 244. At the wordings, which member can make application? Every member who has the right to apply under section number 244. But obviously, central government being the central government will not obviously have any eligibility criteria to fulfill. Central government will straight away make application. But central government will make application only when they believe there is the opinion that the affairs of the company are conducted in a manner which is prejudicial to whom? Not to the members, not to the company, only prejudicial to the public's interest. Then CG will make an application. But before we continue and understand section number 241, we have to first complete section number 244, one of the most important sections of this chapter. 244, a right to apply. I hope you guys are remembering the chart we have drawn for this in the classroom. We divide the process into two parts. Either companies having share capital or companies having no share capital. If possible, I'll share the document in the comments, in the description. If I have forgotten it, please remind me, I'll share it out. We have divided the logic into two parts, either company having share capital or having no share capital. If the company is having share capital, we'll divide the topic into again two parts based on number or based on value. Based on number, the wordings will be not less than 100 total number of members or 1/10th of the total number of members, whichever is lower. Not less than 100 members or 1/10th of the total number of members, whichever is lower, that is number. Or I can also fulfill based on value. I'm a single member, but I'm holding 1/10th of the issued share capital of the company. I'm still allowed to file a suit. Who has a right to file a suit? Come back. A member or the central government. Member, which member can file a suit? Every member who is having a right to apply under section number 244. Who has a right to apply under 244? We'll divide them into two parts. Company having share capital, company having no share capital. If the company is not having share capital, if the company is having share capital, it is divided into two parts again. Number or value. Number, not less than. Repeat it after me. Not less than 100 number of members or 1/10th of the total number of members, whichever is lower, or those members who are holding not less than 1/10th of the issued share capital. Be careful, this is one of the rare cases where Companies Act uses the word issued share capital rather than paid up share capital. Not less than 1/10th of issued share capital. But if the company does not have share capital, will not have this point. Not less than 1/5th of the total number of members. Those are basically guarantee holders. But imagine this. There was actually a fraud in the company. Nobody else knows about it. I, as a shareholder, know about it. I hold only 8% in the company. Listen carefully. It's a company having share capital. I hold 8% of the issued share capital. I know that fraud has happened. I know that harm is happening to the company. Nobody else knows about it except me. Can I, single person with 8% issued share capital, file a suit? If I file a suit, will it be accepted or will it be cancelled? It will be cancelled. It will be dismissed. But NCLT states that if I feel that the suit was genuine in nature, I'll waive off all the requirements of section number 244, waive off every requirement of 244, and I'll allow it, even though it is a single shareholder, even though he's holding only one share in the company, I'll still allow it. If I believe there might be oppression in the company, I will waive off all the requirements of section number 244. There's a proper question on this point of waiver of all or any of the requirements of this section. The tribunal has a power. And another note point, you can write it out. Another note point, there's a question on this. I'm not sure whether they'll ask it or not, but be on the safe side. If the application was made by 101 members, 101 members, not 100, 101 members, is it acceptable? Yes, sir. It was made on, say, 10th of March. We have made application to the NCLT with 101 members. Then later what happened? On 15th of March, a couple of members, say 3 members, have withdrawn their approval from making application. Now it has come down to 99 or 98. Now the question is, will the case be still continued or will it be cancelled? Will it be dismissed? The right answer is it is still continue. There's a chance that, try understanding, there's a chance that these three people have been forced or applied with coercion to intentionally, forcefully withdraw their application. NCLT states that I'll check it not on the date of investigation, I'll check it on the date of application. If on the date of application you have fulfilled the requirements of 244, I'm satisfied. Whether it is been withdrawn later part, I don't care. Even though it is withdrawn, I'll still accept and continue the investigation process if the limits were satisfied on the date of making application. Come back. Now we are done with the members part. Members have made an application. Then the central government. Be a little quick. The central government. Central government is making application only when there is effect on the public's interest. And they have given 4 scenarios where central government believes that there is an effect on the public's interest and they'll pass an order. I've put them in an ascending order. Try to read them and understand them in the same order. It will become easy for you. But try understanding it. Central government has obviously not given all the circumstances. If you give all the circumstances in which a police will get caught of a thief, the thief will find if we have given 4 options, the thief will find a 5th option. And you guys are thieves. You're all robbers. You're all gonna do frauds. If there are 4 options given by Companies Act, obviously people will start finding the 5th option. Then Companies Act states that I am not giving all the options I consider. I'll give you some examples of it, 4 examples of it. There are still a lot of other factors in which central government may make application, but they are not disclosed to you. They're internally kept. But for public's purpose, to understand the perspective of the thinking of the central government, I'll give you 4 options. 4 examples, that's it. And ascending order states that not the company has done any wrong, not the company, but the person who is concerned in the management of the affairs of this company is guilty of fraud. Who is guilty of fraud? The person who is concerned in the management of the company is guilty. Then there's a chance that company might have also done something wrong. Second option, the company's business are intended to be defrauding the creditors. They have not done, but they have an intention to defraud the creditors or the members or for any fraudulent purposes. We can make an application. Now, the company has actually been managed in a manner which is likely to have a serious injury to the entire industry, entire trade. Say, for example, Geo. I shouldn't take it, but that's what happened. Geo has applied some concept. If you have done your competition act, you'll understand this. Geo has done something called as predatory pricing, selling the goods at lower than the cost, which has killed the entire competition. If you name out all the telecom companies which are existing before 2016 and telecom companies existing today, lot of companies have gone into liquidation because of the false activity or because of the wrongful strategy that was established by Geo. The company is being managed in a manner which is seriously injuring the entire trade of the industry. Then, sir, what was central government doing when Geo was doing it? I hope you know the answer, right? Next point. The business of the company is being carried out not as per the sound business principles, not as per the standards that are followed in the industry. You're not following it, I'll file a suit with the NCLT for operation and mismanagement. These are the 4 cases. First point, the person is concerned in the management is guilty of fraud. The company's intention is to defraud the creditors, members, or the fraudulent act for fraudulent purposes, or the company is managed in a manner which is causing a serious injury or likely to cause a serious injury to the industry or the trade or the entire business entity, or the business is not being carried out as per the sound business principles. Then we'll make an application to the NCLT. A special concept here. The central government may also request the NCLT to consider investigation into a person, asking whether the person is fit and proper to hold any position of management in the company. Whether this person is the right person to manage a company or not. If he is not the right person, we'll take obviously actions against such person later part. Once application is done, the order has to be passed. Looks very easy, but is tricky. Listen, is a little tricky into it. Listen carefully. What's going to happen is, once the investigation is done, there are multiple options in the hands of NCLT. The NCLT states that, sir, there is no operation. We have done investigation thoroughly, very detailedly. There is no operation and mismanagement. Or the NCLT states that, yes, the company has done operation mismanagement. If there is no operation mismanagement, we don't have to pass any order. We don't have to give directions. We don't have to take any action on the company. No order is required to be passed. But if there is operation mismanagement, we have to pass an order. Sir, what kind of order can I pass? I'll pass an order for winding up of the company because the company has done something wrong. I'll pass an order for closing of the company, wind up of the company. But listen carefully. Winding up of a company will obviously liquidation process will be a loss for the shareholders. But think about it. This operation was not done by shareholders. Operation was done by the board of directors. Operation was done by the management. Operation was done by the top level executives of the company. But because of that operation, if the company is going into winding up, it will be loss. It will be detrimental to the shareholders. If the NCLT believes that winding up is the only option, they'll pass an order for winding up under chapter number 20. Not part of your syllabus, chapter number 20. But if they believe that winding up is a loss for the shareholders, then they'll pass an order under section number 242. So, sir, when does section 242 arise? I hope you're able to navigate through the chart now. When does section 242 arise? When the NCLT believes that the affairs of the company were conducted in a manner which is operation and mismanagement, and NCLT also believes that winding up of a company is detrimental to the shareholders. They'll pass an order for winding up. I hope the wordings are clear. Where the NCLT is of the opinion that the affairs of the company were conducted in a manner which is prejudicial, and NCLT also of the opinion the winding up of a company is prejudicial to the shareholders, members, then they'll pass an order under section number 242. What happens under section number 242? What orders will be passed? Obviously, how they will remove all the persons who were in charge of these wrongful activities, removal of the managing director, manager, whole-time director, or such officers who are responsible for it. And once it is removed, how to manage the business in the future, I'll give you conditions, I'll give you instructions, how the affairs of the company shall be complied with or followed with in the future period. Now, these persons have been removed, that is good, sir. Before they are removed, they might have already entered into agreements with the company which are beneficial for them and detrimental to the shareholders. I'll terminate all the contracts agreements between the company and the managerial person. Sir, before we terminate it, they might have already gained some advantage of these transactions. We'll ask them to recover all the unfair advantage that the managerial personnel got out of these wrongful activities in the company. But while all this process is happening in the company, obviously the price of the shares in the stock market will start falling. To make sure to protect the innocent shareholders, we'll put a restriction on the transferability of shares or allotment of shares, making sure that stock market is kept silent until this entire process has been completed, so that the market will not crash on a single date. That's one thing. Then once the removal of process is done, the position has become vacant. Now we have to appoint a person in this position, and the persons are appointed here. A small point, if you guys remember section number 169, the person appointed by NCLT under section 242 cannot be removed by the shareholders. The person appointed will be able to be removed only by the NCLT themselves, and he'll be reporting directly to the NCLT. We'll appoint a person, we'll appoint a new person in this process. And if any contract of properties have been entered in the last 3 months, those contracts will be cancelled, will be set aside. During this entire process, investigation, passing order, NCLT might have incurred a lot of cost. The cost will be recovered from the company, or the person who was responsible for doing such operation mismanagement will recover the money. These are some examples. Such other orders as may be just and equitable in the opinion of the NCLT will be passed. Once the order has been passed, one guy is very curious on what the order has been passed. ROC. We'll go file it with the ROC within 30 days. And after this order has been passed with the NCLT during this process of investigation may also pass an interim order to remove the person immediately, not until the entire investigation is done. Just assume this. We started investigation, and on the first 5 days of investigation, we got to know that Mr. A, one of the directors of the company, is a fraudulent person. But investigation is still pending. We are still going on through the investigation. If I allow him to continue in the office until the entire investigation is done, he'll still do other fraudulent activities and continue to apply or harm the company. I'll pass an interim order to remove him immediately, even though entire investigation is not completed. Are you getting the point? I hope yes. Now, once the instructions have been given, the company has to follow the instructions of the NCLT and apply the provisions or instructions or directions given by the NCLT. Hence, we are not allowed to alter our MOA and AOA unless we got in prior approval from the NCLT themselves. Then, sir, once a person has been removed from his office under section number 242, he was not removed for just a random reason. He was removed because he conducted operation mismanagement. He has done something wrong in the company. If he has done something wrong and has been removed from the office, obviously he will not have a right, shall not be entitled to claim any compensation from the loss of office. If you remember section number 202, compensation for loss of office. If a person has been removed from his office abruptly without any reason, he'll have a right to receive remuneration for the remainder of his term. But here, he was not removed without any reason. He was removed because of the oppression mismanagement. Obviously, he'll not be entitled to any compensation for loss of office. And the person who has been removed under section 242 will be disqualified under section number 164, but he'll be disqualified for a period of 5 years. This 5 years is mentioned under section number 243. He will be disqualified for how many years? 5 years. I know it is taking a little longer than expected, Amma. I should be completing this chapter within maybe another 10 minutes. Stick with me. I hope you guys are still focused and you are still with me. You are not roaming around your dreams, but you are in the prevention operation mismanagement chapter. And if you are liking the session, if you are understanding the concept, if you are appreciating the efforts which are put in, like the video, share it, and comment on how you are liking the sessions. It will be well appreciated. Your comments will be boosting me to make more videos about CMA Final or CMA Inter as such. So leave a like or put a comment on this video. So let's continue. The managing director, manager, or directors who have been removed from the office will be disqualified under section number 164, but they will be disqualified for a period of 5 years. The 5 years logic is mentioned under section number 243. Sir, why is it mentioned under 243 rather than 164? NCLT states that if it is mentioned under 243, I'll have a power to come back and reduce this 5 years period and grant them something called as leave. I'll reduce it. I'll reduce the amount of punishment imposed on this set of people. If I believe that they have grown to be a better person, I can reduce 5 years to 3 years. Original answer, how many years are they disqualified for? They're disqualified for how many years? 5 years. But this 5 years can be given as a leave. But who will provide the leave? Tribunal, NCLT. If NCLT is satisfied, they'll provide you a leave. But before providing a leave, the NCLT have to forward this information to the central government and give the central government a reasonable opportunity of being heard. The central government should be given a chance to speak and give their opinion whether leave should be given or should not be given. But remember carefully, the NCLT has an absolute power. They don't have to listen to the opinion given by the central government. We just ask the opinion. We may not listen to the opinion given by the central government at all. That's one thing. Then last logic. This is interesting point. Listen carefully. Third point. Whenever a person has been declared not fit and proper, you just learned this word. A person will be declared as fit and proper or not declared as fit and proper by the NCLT, but by an application made by the central government under section number 241. If such is the case, the person who is being disqualified for a period of 5 years, he can be granted leave. But this time, because this was initiated by the central government, the power is also in the hands of central government. The leave can be granted only with the prior approval of NCLT and central government. Both of them have to agree. But if it is not about the fit and proper case and it is just the simple process of removal, who removed it? NCLT. Then who can grant you leave? NCLT. But a reasonable opportunity of being heard must be given to the central government. That's your section number 243. We have done with section numbers. Give me the flow. We make application under section number 241, but a right to apply for a member is given under section number 244. Once the application is made, investigation is conducted, and after investigation, NCLT will pass an order under section number 242. The consequences of such termination under 242 given under section number 243. That's your 241, 242, 243, and 244. I hope the linking is also clear now. Then comes section number 245. 245 is a very interesting topic where it talks about something called as class action. All this charts, fine. Class action, what does it do? Say, don't question my India, this is India. I know this looks like an ice cream for some of you, this looks like a melting ice cream for some of you, but trust me, this is India, ma. This is India. So what happened? The company was located here. Say, assuming the company's business is being done from Hyderabad, from Telangana. Now, the company doing business from here, try understanding it. The shareholders might be located and scattered throughout India. The shareholders will not be located at one place. They will be obviously located in multiple places. A couple of more in Goa, maybe. A couple of in Hyderabad, a couple in Maharashtra, a couple in Madhya Pradesh, couple in Maharashtra, couple in Gujarat, couple in Delhi, Assam, etc., they are scattered throughout India. So if they're scattered throughout India, try understanding it. If the company has done a uh, harmful activity, oppressive activity, and it is oppressive to all the shareholders. Think about it. If it is oppressive to all the shareholders, the person in Ladakh will file a suit, the person in Assam will file a suit, the person in Ahmedabad will file a suit, the person in Hyderabad will file a suit, the persons who are in Goa will file a suit. People filing suit with multiple different jurisdictional NCLTs throughout India. Can I say it is wasting our time? For the same problem, for the same offense, for the same defendant, for the same company, we are filing multiple cases throughout India. We are wasting our time. We are wasting lawyer fee. We are wasting court fee. Forget about our time. NCLT's time got wasted. Then NCLT here states that all these cases which were filed multiple times throughout India will be consolidated into a single action. A class of people which have the similar problem, class of people, a group of people will take an action together. That's where the word comes in, class action. Class action under section number 245. So class action will be applicable not only for members but also will be applicable and open for depositors, but unfortunately not for the central government. Central government has power only under section number 241. So what's the bifurcation, sir? Class action is also operation mismanagement, but it is happening only for 7 specific reasons. I want this very, very clear. Lot of people get confused in this. So what's the difference between 241 and 245? Both of them are class act. Both of them are operation mismanagement itself. Both of them talk about operation mismanagement. 241, who can make applications, a member or even the central government. 245, who can make applications, a member or the depositor can make application. 241, it is generalized section. We can make application whenever we believe that there is operation mismanagement. But 245 will make application only when 7 circumstances of operation are existing in the company. Only 7. So what will be the processor? If I see the word depositor under question, I'll apply section number 245. If I see the word central government in the question, I'll apply section number 241. If the question is silent about it and they've simply stated, generally stated operation mismanagement, I'll apply section number 241. If the question has stated any of these specific 7 circumstances, then I'll apply section number 245. So what are these 7 circumstances? Once you have understood that, then we'll understand whether 245 or 241 clearly. So if you guys read the sentence properly here, the members or depositors, if they of the opinion that the affairs of the company have been conducted in a manner which is prejudicial to the interest of the company or the members or the public's interest is not there because central government is not involved here. Only 2 points, company and the members. If you observe until here, can I say this is also actually copy paste from the operation definition itself? But extra point, it is for whom depositors also, and it will be making an application tribunal in any of the following cases itself, only for the following factors. Start. How many actions are there? 7. Any of the 7 actions. The first 2 points, you have to read them in this order itself. First 2 in a bit, second 2 combined together, then next 5 and 6 combined together, and the last 7 separately. Chalo, start. First 2 points. When the company, to restrain the company, to stop the company from acting for an ultra-wise transaction, ultra-wise the MOA and AOA. Now, look at how smart the Companies Act here is. Ultra-wise transactions are of 3 categories, right? Ultra-wise the Companies Act, MOA and AOA. But the first sentence have given only about restraining the company for an act which is ultra-wise the MOA and AOA. What is missing out? Ultra-wise the Companies Act. Read the second point. To restrain the company from doing something which is contrary to the provisions of this act. What do you mean by contrary to the provisions of this act? It is nothing but ultra-wise transaction beyond the powers of the Companies Act. They did not mention it as ultra-wise, but the wordings are stating that it is indirectly ultra-wise. Give me the wording, Sema. To restrain the company from doing an act which is ultra-wise, the MOA and AOA, or to restrain the company from acting in contrary to the provisions of this act. Next point. Third point, where to restrain the company and its directors to act on a void resolution. So what do you mean by that? Resolution was never passed. Resolution was put before the shareholders. 40% of the shareholders were in favor, 60% were against it. Resolution was not passed. It is called as void resolution. If it is a void resolution, can I start implementing it? I'm not allowed to implement it. Start the wordings. To restrain the company or its directors from acting on a void resolution. Point number 4 is very interesting logic. Imagine this. 60% of them were in favor, 40% of them were in against of it. Whether resolution was passed? Yes. So if a valid resolution is passed, can the board of directors actually implement it? Yes. But they have to implement it according to the instructions or the terms and conditions which the shareholders have agreed. Can they change the shareholders' terms and conditions completely? No. Though, just imagine the company has passed a special resolution to give a loan to an outsider worth at an interest rate of 12% per annum. Company shareholders felt that this was beneficial, so they passed an order. Then later, can the board of directors do it for 2%? No, listen carefully. Understand the words carefully. To restrain the company from doing anything which is contrary, opposite to the resolution which is passed. Are you getting the difference from point number 3 and point number 4? Point number 3 is the resolution was never passed. Point number 4, resolution was passed, but the board of directors are acting in opposite, contrary to the resolution that has been passed. Then point number 5, whenever alteration of MOA and AOA happens, if you guys remember section number 13 and section number 14, alteration of MOA and AOA happens, such alteration have to be done only with sending a proper explanatory statement giving you full details of why the alteration is happening. If the explanatory statement suppresses any material fact of the process and passes a resolution, resolution is passed without giving full information to shareholders is as good as no resolution passed. If such is the scenario, the alteration is allowed or not allowed? Not allowed. Then, point number 6. The Companies Act has placed trust on 3 set of people on behalf of the shareholders. The shareholders trust these set of people. They do activities on behalf of the shareholders and run the business activities. The first person we trust is board of directors. The second person we trust is, because board of directors might do something wrong, we appoint auditors, the board of directors and auditors. And not only them, we want completely independent party. Sometimes experts and advisors will come in. These are the 3 set of people. But what if these 3 set of people themselves misuse their positions and fiduciary trust on them, the trust upon them has been broken? We'll suffer loss. The losses suffered by me, I'll collect damages from them. What's the logic? Point number 6, to claim for damages. Damages from whom? Directors, auditors, experts. For providing what? A misleading or a falseful, unlawful information. I will claim damage from them. Point number 7, such other as may prescribed, but have to be put in a proper polished language. Such other remedy as the tribunal may deem fit. Such other cases where the tribunal may accept it, they may accept under 245. So if the concept has been accepted, so we have to have a right to apply. Again, there's a chart for this. I'm not sure I'll find it right away. I'm not sure I'll find it, Amma. So again, remind me if I forget, I'll put it in the description of this chat. Section number 245. Who can make application? Member as well as a depositor. 2 to 3 minutes we should be done. We are at the end of the process. 245, who can make application? Either member or the depositor. But for them to make an application, they should, similar to 244, they also have a right to apply under section number 245 subsection 2. To make application under section number 245 subsection 1, they should have a right to apply under section number 245 subsection 2. So what's going to happen? The right to apply is divided into 2 parts, for obviously members separately and depositors separately. Let's talk about the members part first until here. Then we'll talk about the depositors part separately. Let's just talk about the members first. Members logic is divided into 2 parts as usual. Copy paste everything from 244. Company having share capital, company having no share capital. Company having share capital will be again divided into 2 parts, number or value. Number, 100 number of members, or wherever you had 1/10th under 244, use the wordings 5%. Wherever you had 1/10th under 244, 245 subsection 2, use 5%. Start. Not less than 100 number of members or 5% of the total number of members, whichever is lower, or not less than 5% of the issued share capital. But there's an exception here. If it happens to be a listed company, rather than 5%, I'll use 2% of the issued capital. Regular answer, how much? Not less than 5%. But if it happens to be a listed company, not less than 2%. This is your members category if the company is having share capital. And if the company is not having share capital, don't get confused, Amma. What did I say? If it is 1/10th under 244, replace it by 5%. If it is 1/5th, continue that. Not less than 1/5th of the total number of members. But again, lot of people get this wrong also. 1/5th doesn't mean that I see 5, I'll apply it as 5%. 1/5th is 20%, not 5%. Be careful while you're calculating it. Here it is 5%. Then coming to depositors part, Obviously, depositors will not have the share capital process, so they'll copy paste the entire process. 100 number of depositors or not less than 5% of the total value of the total number of depositors, whichever is lower, or those number of depositors who are holding not less than 5% of the outstanding deposits, total deposits of the company. They can make an application to the NCLT. While they have made an application, the NCLT, change this if you have this material. This is point number 3, this is point number 4, this is a note point. The NCLT will have a power to pass 4 orders. This was the question already asked, four orders passed by NCLT under class action under 245. And remember them in the same order. I've drafted them in the same order. You have to remember in the same order. What happened? By the time we have entered into the class action, multiple cases might be filed in the process. Imagine this. What the diagram, small diagram we had. Where was it? The small diagram for this class action. Try imagining it. If a class action have been consolidated in say Hyderabad, we have consolidated everything in Hyderabad. But can I say the class action which is applied in Hyderabad will not be known to the shareholders who are residing in Ladakh, Delhi? The person in Ladakh or the person in Delhi might think that class action has not been initiated. If it is not initiated, he'll go file a suit with the NCLT. It will be duplication of the cases. It will waste NCLT's time. Then NCLT states that as soon as we accept class action under 245, we'll make a public notice. Make a public notice informing the public at large that a class action have been accepted, informing the public, informing the members, informing the creditors and depositors that a class action have been accepted. We have admitted class action. But by the time this public notice is served, try understanding. Once a public notice is served, the future new application will be stopped. But by the time this public notice is served, there will be applications which have already been filed. All those similar applications, because class, all those similar applications have to be consolidated into a single application. What happened? All similar applications which have already been filed will be consolidated into a single application. So if that is the case, we'll have only one applicant, one plaintiff, one representative. If we have 5 cases filed, we have 5 representatives. If all of them have been consolidated into a single application, we'll have only one applicant. Then the NCLT states that once it is consolidated, you guys choose who will be the lead applicant. But if you fail to choose who is the lead applicant, in those cases, the NCLT will appoint one of them as a lead applicant. First option is given to you, you guys choose. But if you're not able to come to a conclusion on who will be the lead applicant, NCLT will decide who will be the lead applicant. And then, can we consolidate them into 2 class actions? The entire process and the reason of class action was to save time of the NCLT. Having the similar case being filed with only one NCLT will save time, and evidences will be even better presented. It will be beneficial if we consolidate everything into one. Having 2 class actions for the same or similar case or similar application is allowed or not allowed? Shall not be allowed. For this entire process and investigation to be done by NCLT, obviously NCLT will incur a cost. The cost have to be bared. The cost and expenses in connection with this entire application has to be bared by the company or the person who are responsible for this act. We have done this already in the 242 order as well. This entire section is not applicable to a banking company. This can be an MCQ. Section number 245 is not applicable to a banking company. They have a different procedure as per the Banking Regulation Act. And the last, you can forget it. You can read it once and leave it. Mutatis mutandis. Repeat it after me. What is it? Mutatis mutandis. As far as possible, the provisions of section number 337 to 341, which is relating to penalties for providing false information, will be applicable for the applications made under section number 241 and 245. Will not be asked unless your bad luck is so good. This question will not be asked. If even asked, it will be asked for an MCQ. Just remember the section number 337 to 341. If all the penalty sections will also be applicable for operation mismanagement under 241 and 245. I hope the section numbers are very clear. Watch it multiple times, 3-4 times. Put it on, have your headphones or earbuds and watch it multiple times and revise it along with me and underline all the keywords along with me while you're listening to the class. I'll make sure that this will fetch you easy 7 marks out of this chapter. That's all for this particular topic. We'll meet you in the next one. Thank you guys. Let's get started with the next chapter. We have compromises, arrangements and amalgamation. This chapter will be divided into 2 parts, where the first part will be talking about compromises and arrangements, and the second part will be talking about mergers and amalgamations. But before we dive deeper into these sections and understanding the procedure aspect of this chapter, we have to first understand the meaning of these terms, what is compromise, what is arrangement, what is amalgamation. That's where the sections will become easy. A lot of people face this difficulty in this chapter. They don't understand the flow of the chapter. So for the first 15-20 minutes, we'll have a detailed discussion of the section 230, which will make sure that your conceptual clarity is also on point, which will make sure rest of the chapter becomes easy from there. Be focused on the first few minutes of it, Amma. It will be very interesting to understand the logics. Starts with the word first, compromise. Forget about the company. Let's imagine a randomized, generalized example. Just imagine there's a dispute in your household. If you have a dispute with your parent or your brother or your sister, we don't take this dispute to the public platform and start interfering, letting a third party interfere into the dispute. Whenever there is a dispute between two parties within the family, we sit down in the four walls and start discussing matters and negotiating matters, compromising the expectations of each parties and coming to a conclusion on a mutually agreed basis. Every word you have used is having importance to it. Compromise is something where there's an existence of dispute between the parties, and the dispute between the parties has not been interfered with third party. No third party comes into the process, but within the four walls of the household itself, we'll sit down, discuss matters. While discussing, we'll negotiate. No one party is going to force the other party. I know a lot of negotiation happened in our previous 20 25 years of your life where your parents were dominating you, but try understanding it. Here we have two equal parties. It is not that one party, your parents are not dominating and forcing upon you. Remember, whenever we had a dispute, we were forced to listen to them. But here the logic is we have to have a compromise which is mutually agreed by both the parties, where not one party but both the parties have to reduce the expectations. That's where we call it as compromise. Now start understanding it for the company. What do you mean by within the household? What do you mean by internally for the company? Whenever there's a dispute between, obviously if we are discussing Companies Act, one of the parties to dispute would be company. Then sir, who is the other party? When there is a dispute between company and its members, or when there's a dispute between company and its creditors, that's where we will sit together. No third party interfered. We will sit together, company and the members, or company and the creditors will sit together, discuss matters, negotiate matters, reduce expectations, mutually agree for a conclusion. That's where the word compromise comes in. Then sir, what about arrangement? Arrangement is also very similar. Arrangement is also a place where we'll negotiate, also a place where we'll reduce the expectations, also a place where we'll try to mutually agree with each other, also a place where no third party is interfering. It is still done within the four walls of the company. So then what's the difference between compromise arrangement? There is no need of existence of a dispute under arrangement. Try understanding it. If I have taken, the company has taken a bank loan worth rupees 10 lakhs and the bank has sent a notice to the company stating that the bank loan along with the default penalty, along with the interest, everything sums out to be 15 lakhs. But the company argues stating that, sir, we are not responsible for 15 lakhs. We are responsible according to your regulations only 12 lakhs. There is a dispute between the company and its creditor, the bank. If there's a dispute, we call it as compromise. But on the second side of the story, if the company says that, sir, we agree that the amount is 15 lakhs, you also have stated 15 lakhs. There's no dispute between the parties, but the point is, my pockets are not heavy enough to have 15 lakhs in them right now. I don't have money to pay. Let's come down, negotiate terms, and make sure that we mutually agree on terms and conditions. Give me 3 more months of extra time, I'll pay. Or convert your debt amount, creditors, into shareholders. You'll become the owners of the company. Or I'll pay you money after 6 months with extra interest paid. Rearranging the structure of your debt will be called as arrangement. But try understanding the common points in both the logics. The similarities in both the topic is internally done. No third party involved. There is rearrangements or there is expectations being reduced. It is being done mutually. Both the parties sit together and discuss matters with each other. But the difference was there is dispute, there is no dispute. There is no need of rearrangement. Here there is rearrangement. But you don't have to focus much on the differences. Why, sir? Companies Act does not differentiate it. Companies Act states that let it be compromise, let it be arrangement. The procedure for compromise arrangement remains the same. I hope the introduction is well set in your brains. We'll come back and do the definition of amalgamation which is required. We'll come back to it. Let's start with section number 230. What is section number 230? Compromises arrangements under Companies Act 2013. Sir, how does a compromise arrangement happen? As we were discussing it, guys, there are two parties. I want a complete focus on this topic, otherwise you'll not understand it. There are two parties who are gonna enter into a compromise. Let for the next 15 minutes your brain be accepting the fact that we are doing compromise. There is existence of dispute. You are one party, I am the other party, right? We'll both of us will come together, sit in a room. That's a room where we have met. That's, don't question my drawings, okay? That's a table where we have sat opposite to each other and we started discussing matters. I have discussed matters, you started arguing, I started arguing. Both of us started discussing matters, both of us started explaining each side of the story. We started reducing terms and conditions. And while we are discussing all these matters, can I say, on one end, the terms and conditions of compromise are being slightly being drafted. I'll say one thing, you say one thing, we'll discuss matters, we'll reduce it, we'll write one term. We'll write the second term, we'll write the third term. Over a period of time, over a period of maybe a couple of hours, we'll discuss together, come to a mutually agreed terms and conditions of compromise. This is called as scheme of compromise and arrangement. Concept is done. Concept is done. Scheme of compromise arrangement is completed. But the problem here is the Companies Act does not have two individuals in which we do compromise. Same story, same, imagine it, a room, a table, two parties involved in the dispute. We were just discussing about it. The dispute might happen between whom? Between the company and its creditors, or between the company and its members. Now imagine this room back. One side we have the company. So company is an artificial person. What do you mean by company? We have the board of directors. And the other side we have members. Can I say this will be the right representation of members? We have thousands of members, lakhs of members sitting together and discussing matters. Who will be discussing matters? Just I've drawn some number of members, but imagine for an actual company, there will be thousands of members. Now, who will be discussing matters? Now tell me, fish market or compromise arrangement, which is better? Obviously, fish market. They start throwing chairs at each other, they start throwing tables at each other, they'll start fighting. It will not be practically possible for me to discuss matters with everybody and sit and draft a document. Hence, Companies Act comes with a solution for it. Companies Act states that, boss, we cannot sit and discuss with all the members creditors in the meeting. It is not practically possible. So what are we going to do is, even before coming to the meeting, we'll prepare a draft document. We'll prepare a draft document and we'll bring the draft document to the meeting. You guys check it. If you're satisfied, please give the consent. If you have given consent, can I say both the parties have consented? Because I prepared it, I've already consented it. Now who also consented? The members or creditors. Now if you have got the consent from both the parties, the process is done. Compromise arrangement has been completed. But if at the same point of time, this draft was not accepted, compromise arrangement cannot be entered. But are you getting the point? It will not be prepared in the meeting. It has to be done even before the meeting, and the people have to be informed about it. People will come and either consent or they will object it. Accept or reject, I'll have the word consent or object. So what's going to happen? This draft have to be prepared. But because shareholders are not having much brain cells to understand everything in the meeting, I'll give it to the shareholders even before the meeting is conducted. And they'll come and attend the meeting and they'll discuss the matters. But remember, this is not only for shareholders, this can also include creditors. That's the reason I was very careful. I was not using the word general meeting. It is simply called as a meeting. I hope everything is put together. Start. The draft scheme of compromise arrangement is prepared by the, usually 99% cases it will be company, and the company will forward it to all the shareholders and creditors. Creditors will come and attend the meeting in which they will discuss matters and if possible required to make slight modifications required, consent it. Once consented, it is finalized. The scheme have been finalized, not drafted in the meeting, but finalized in the, approved in the meeting. But the problem is, these shareholders and creditors have no knowledge of the business activities. They are still fools. There's a high chance that the board of directors of the company can manipulate those shareholders and creditors and trick them into accepting or consenting this wrongful compromise arrangement. Then comes the NCLT. NCLT states that, let me make sure that I am protecting the creditors and shareholders. Before you go to the creditors, bring it to me, I'll check it first. Entire section 230 is completed here. Bring it to me, I'll check it first. Once I have checked it, if I'm satisfied, then I'll give you the permission to conduct the meeting in which you can do compromise arrangement. But be careful, Amma. NCLT does not state that I'll come to your meeting and be negotiating between you, the parties. No. NCLT states that I'll give you permission to conduct the meeting. Whatever you guys discuss in the meeting will be up to you guys. A third party, NCLT, will not interfere into the discussion of compromise arrangement, but I will check that the creditors and shareholders, members are not being manipulated or defrauded in the process of compromise arrangement. I'll protect them. So what's going to be the process? Frame this in your brain. Imagine reality. Imagine the practical way in which you'll do this. The company or any party to the compromise, if they have drafted the scheme, they'll forward it to the NCLT. NCLT, after going through the entire scheme, if they're satisfied with it, NCLT states that the scheme is good, I'll give you a permission. A permission to conduct a meeting in which you guys will discuss the compromise or arrangement. Once a meeting is conducted, for the meeting to be conducted, you have to send a notice of the meeting, explain everything about the proposed compromise arrangement. Once you have explained everything, all the shareholders will come and attend. If all the shareholders have attended the meeting, then we'll take their consent. Once the consent have been obtained, now can I say compromise is completed? Still no, there's a chance that it might have been modified in the meeting. If it could have been modified in the meeting, NCLT states that file it to me, I'll pass an order. After it has been consented by your members or creditors, file it to me, I'll check it again. If I'm fully satisfied, then I'll pass an order. Are you observing it? The compromise diagram which we have drawn is still not been interfered. No third party interfered it. But NCLT will act as an head, NCLT will act as an tail to make sure that the creditors and members are properly protected. I hope you have understood it. If not, please go back and watch the last 4, 5, 6 minutes of introduction we have done, the story we have done. If this is understood, entire section 230 is understood. If entire section 230 is understood, rest of the chapter should be understood. Entire chapter is depending on 230, so spend some time on this. If you're not fully comfortable, go back and watch it again, guys. Chalo, continue. So put it in wordings. First, we'll make an application to the NCLT. NCLT will pass an order giving permission to conduct the meeting. Then we'll send a notice of the meeting. Then they'll come and attend and give their consent. We'll file it with the NCLT. NCLT will pass an order. During this entire process, one guy is watching at the corner. They want to know what's happening in the company. Who? ROC. We'll go file the NCLT's order to the ROC. Within 30 days, chapter closed. Let's add flesh into it. The skeleton is done. The draft is done. Let's go more details into it. So what's going to happen? Compromise arrangement may enter between company or creditors. Sometimes it is not about all creditors. I'll enter into compromise only with my bank, only with SBI Bank, only with HDFC Bank, only with my debenture holders. I can enter into compromise with either creditors or any class of the creditors, or compromise with members or any class of the members. Then we'll start the procedure. Now, on paper, the draft scheme can be drafted, created either by the company or member or creditor. But let's be practical about it. Who will do it usually? Company itself. They'll have better knowledge to do it. But on paper, we have all the options. And if this process happens after the company has been declared to be going into liquidation process, the official liquidator will take care of it. So we have 4 options. Try imagining it. Who is making the application? Either the company or the creditor or the member or the official liquidator will make an application to the NCLT. Once an application is made to NCLT, if NCLT is satisfied, the NCLT will pass an order giving a permission to conduct a meeting of the creditors or the members. While giving this order, the NCLT will give you directions on how the meeting shall be. I want these words remembered. How the meeting shall be called, held and conducted. How to call the meeting, how to hold the meeting, how to discuss matters. Everything will be as per the instructions given by the NCLT. How the meeting shall be called, held and conducted. But point is, the NCLT will not pass an order blindly. They have to understand who you are. They have to understand what position you are. They have to understand whether compromise is actually required or not. They have to understand whether this compromise will benefit the members or creditors or not. They have to understand whether it is detrimental to the society or not. Hence, explain about who you are along with the application. Submit following documents. Are we with me? Yes. So what's happening? There are 4 set of people who made an application to the NCLT. While making application, they have to submit certain documents, and if NCLT is satisfied, they'll give you a permission. Okay. I know we have drawn charts in the classroom, but I want you to understand the technical words also, right? If you are not comfortable, I'll also make sure that I'll share the charts PDF of this chapter compromise. You can go through that after the session is done, but I want to revise it from the wordings of the act itself. So be careful with it. Chalo, let's start it. While you are making application, you have to submit it. Submit 3 documents there. What are 3 documents submitted, sir? I'll explain who I am as a company, all material facts about the company. All material facts of the company includes the latest financial position of the company, latest auditor's report, which will give me a clarity on the financial statements, and investigations any pending on the company, pendency of investigation on the company. Financial position, auditor's report, and pending investigation has to be submitted to understand who the company is. Now, if the company is entering into a compromise or arrangement with the members, we have discussed this, both the parties will reduce their expectations. What do you mean by shareholders reducing their expectations? Can I say the share capital will be reduced? It will be called as reduction of share capital of the company, if any. Why did I use the word if any? There's a chance that I'm entering into compromise only with my creditors, not with my members. I'll not have the second point. If I have compromise with my members, I'll have this point. If I have compromise with my creditors, I'll have debt restructuring scheme. What is it called? Debt restructuring scheme, because it is happening in a corporate entity, corporate debt restructuring scheme. This is a scheme which has been already approved by not less than 75% of the secured creditors. Already 75% of secured creditors accepted it, and we have to, whenever I have corporate debt restructuring, we have to submit 5 additional documents to be submitted, stating that the creditors of the company are my responsibility. I'll make sure that the amount has been properly paid after the rearrangement is done. A creditor responsibility statement. Not just a promise that we are going to pay money on time, also provide me the in detailed safeguards you'll provide for the purpose of protecting your creditors. Safeguards for protection of other creditors. Why, sir, other creditors? Because this scheme was already approved by how many guys? 75% of the secured creditors already accepted it. That means the other unsecured creditors will be at loss, and also that 25% of the secured creditors will be also at loss. We have to protect, make sure that we'll provide safeguards for protection of all the other creditors, which includes both secured and unsecured. Creditors responsibility statement and safeguards for protection of creditor. But for this all to be understood, we have to understand the current position of the company properly. To understand the current position of the company, we'll provide a valuation report given by a registered valuer valuing all the properties and liabilities of the company. Once the valuation report is also fine, next point is very important. Try understanding it. Why did we do this compromise? Why did we do arrangements? So that we'll be able to revive the dispute in the company, revive this situation in which you are not able to pay your creditors members properly, and be a going concern in the future. To be a going concern in the future and to be able to be solvent and able to pay everything to everyone, we should have enough liquidity in the company. Liquidity, we don't have liquidity today. That's the reason we are doing compromise arrangement. But at least after the compromise arrangement, I should be in a position where I have liquid assets to pay everything on time. We have to prepare a liquidity report. A liquidity report given by the auditor post the debt restructuring, stating that we are solvent to pay the rest of the creditors correctly. What's the logic? The auditor has to give a report called as a liquidity report. Report on liquidity, stating that we are able to pay everything on time. When is this happening? After the scheme has been introduced, post the debt restructuring. I hope you guys understood it. But answer this to me. Whenever we talk about creditors of the company, majority of the creditors of the company will not be money lender, other companies, etc., etc. Majority of them will be banks and financial institutions. If it is banks and financial institutions, they're highly regulated by RBI. Then the law states that you have to give a statement, a promise, stating that you will comply with all the guidelines given by RBI. Quickly run through them. All material facts. Is this clear? All material facts, latest financial position, latest auditor's report, pendency of investigation, if any, on the company. Second point, reduction of share capital, if any, of the company if you are going for compromise with members. Or a corporate debt restructuring scheme which has been already accepted, approved by not less than 75% of the secured creditor, which should, in addition to that, we have to submit 5 more documents. What are the 5 more documents I have to submit? First document, I have to make sure that the creditors are my responsibility. Creditor responsibility statement. Second point, safeguards for protection of all the other creditors, which includes both secured and unsecured creditors. Then valuation report given by the registered valuer, a liquidity report given by the auditor post the debt restructuring scheme, and a statement that I'll comply with all the guidelines given by RBI. Once all these documents have been submitted, if now the NCLT is satisfied, they'll give you a permission and give you directions on how, give me the wordings, how the meeting shall be called, held, and conducted. Once these instructions have been given, let's call for the meeting. Send a notice. Very basic information, 3 questions I'll ask. Who will send? To whom will I send? What will I send? Who is sending it? Who is sending it? To whom will I send it? And what will I send it? Who will send it? Obviously, the documents will be sent by the company. To whom will I send it? I'll have to get consent from whom? Members and creditors. Send it to them. All the members are class of members, all the creditors are class of creditors, and they've added a special point stating that I'll also send it to the debenture holders. But sir, debenture holder is also a creditor. If I have used the word all the creditors already, can I say debenture holder will automatically fall under this category? Yes. They've given special importance. That's it. Start. What are the documents I'll send? I'll send out 5 documents. You have to remember them. And 5th is your favorite. Such are the documents as may be prescribed. We have 5 documents in total to send. The first document is obviously the draft scheme of compromise and arrangement. After the draft scheme of compromise arrangement, to understand the compromise arrangement's consequences correctly, I'll submit the valuation report given by the registered valuer. But a small loophole here, try to understand, they have tried to cover it obviously. The loophole here is, so this draft scheme was drafted by, prepared by, created by board of directors. There's a chance that the board of directors might have prepared it in such a manner that they personally might get benefit out of it. They personally might be a shareholder of the company. They personally might be a creditor of the company. They might be connected in the company in some other way. And the scheme prepared might be indirectly benefiting them. If it is indirectly benefiting those set of board of directors, it is indirectly a loss for rest of shareholders. There's a chance that they might have drafted in this way. Then the Companies Act states that provide a proper detailed explanation on the consequences, effect of such compromise arrangement on promoters, non-promoters, creditors, class of creditors, members, class of creditors, debenture holders, key managerial personnel, employees, etc. Everybody who might have been affected by this, give me a detailed effect of such people, explaining everything about it. So all is good, but you've forgotten one word. Directors was forgotten. That's the main person we started this discussion with. Directors might misuse it. That's the reason we started this logic. But we missed out the word director. They did not miss out. They have given a separate point for the director. Clearly explain the effect of such compromise arrangement on the interest of the director. Every single director, whatever he might get benefit or loss out of it, explain it to me. Once you have explained all this, now can I say I have clearly, transparently understood why the document was drafted and whom is it getting benefit to, whether it is getting benefit to me or not, whether I should consent it or not. Are you getting this logic right? Once the notice has been received, the notice is not only required to be sent, not every person will be able to receive the notice on time. Post it on the website of the company. Post it on the website of the company. It must be placed on the website. But if at all you happen to be a listed company, not only posting in the company, it also should be published in a newspaper and should also be sent to SEBI and all the stock exchanges in which your securities are listed, so that it will be posted on the website of the SEBI and stock exchange. They will be posted on their website. I'll send it to the SEBI and stock exchange. They will post it on their website so that everybody basically has knowledge about it. Once this entire information is done, these documents will also be available for inspection at the registered office of the company free of charge, making sure that everybody gets the right information at the right time. Notice is sent, posted on the website, published in a newspaper, kept it open for inspection at the registered office, and also given it to the SEBI and stock exchange so that they'll post it on their websites. Everybody has been informed about it. Now a little rules, a little more detailed answer on how the notice and what is mentioned in the notice, a little more detailed answer now. It will be duplicating. You have to remember it. You can, if at all you in the exam hall are not able to remember this part, write whatever information we have given till now. It will be more than 60% correct. So what are the information? Let me help you out. Audited financial statements, we've already given it. Scheme of compromise agreement, we have already given it. Copy of the order passed by the tribunal. Such other information. This is easy. Then all the effect of such, disclose the effect of interest of such scheme on the KMP, directors, promoters, non-promoters, depositors, creditors. We already discussed this, right? Then if there is no interest, give a declaration, give a statement that there is no impact on the directors, key managerial personnel, officers. Investigation on the company if it is any pending. Can I say all these points have already been discussed, have been little more detailedly explained in the process of giving transparent information to the members or creditors. Now this is something which is new for you. The directors of the company might also be shareholders, ESOP, sweat equity shares, or he might have purchased shares of the company. Now try understanding it. Who may predict that compromise arrangement may happen in the near future? Shareholders or directors? Directors have better understanding of the company's financial position. They might have predicted this compromise arrangement that might happen in the near future. So if imagine this, if compromise arrangement is going to happen and they know that their shareholding might get affected in the future, will you hold on to the shares or sell the shares? You will sell the shares. That is nothing but insider trading. If you have studied the chapter insider trading already, you will understand it better. This is nothing but insider trading which has to be stopped. Then we have to disclose the shareholding pattern of each and every director of the company or the managerial personnel of the company, along with the change in the shareholding in the last 6 months. In the last 6 months, whatever changes that happened, have you purchased more shares? Have you sold your shares? Have you hold the shares? Whatever changes that have happened in the last 6 months, disclose it clear to me. I'll understand what you have done and what should I do to protect myself from the process. One of the important concepts. Not only about the members' creditors, there's a chance that your compromise arrangement might have an impact on the other regulatory bodies. We'll send it out to all the regulatory bodies. Whatever regulatory body comes to your name it. Official liquidator, IBC, SEBI, SCRA, Income Tax Department, GST, Customs Duty, Central Government, ROC, whatever comes to your mind, name it amount. And they're being given a time limit of 30 days to send their objections or suggestions. If they have any objection suggestions, they'll send it within how many days? 30 days. If they don't send it within 30 days, we'll assume that there is no objections and suggestions. Any doubt? Now, we'll actually have sent the notice. I hope you are with me with the story. We made an application to NCLT. We got an permission from NCLT. We have sent a notice to everybody. We explained everything transparently to everybody. Then we finally have conducted, holding the meeting now. In the meeting, I have to get consent, approval from the members or creditors. This is a dual majority. I have to obtain the majority of the persons having 3/4 in value. Assuming the company has a total of 100 members, I have to get approval from at least 51 of them. Majority of them, those majority must be having at least 3/4 in value. And this might be either with members or with the creditors. Once the consent has been obtained, then I have to submit it to the tribunal. And the tribunal will, based on this, pass an order. Once it has been sanctioned by the tribunal, it will be binding on all the parties, members, creditors, company, everybody will have to follow the order passed by the tribunal. But there's also chance that this is an MCQ. There's also chance that it will not be consented, but it will be objected. Objection can be raised. If the objection is raised by shareholders, they should have not less than 10% of the share capital of the company, equity shares of the company. Or if the objection is raised by creditors, they must be holding not less than 5% of the outstanding debt. They may object it, but they should be holding either 10% or 5% respectively. Then, if at all the NCLT feels that the compromise arrangement is required, they'll pass an order. They'll pass an order under section number 230. 230, where they'll state that the convertible preference shares will be converted, but what about the dividend? The dividend amount will be either given in cash or the dividend amount will be converted via equity shares. We have to protect all the creditors. Variation will happen under section number 48. If there are dissenting shareholders, they must be given an option to exit. Such are the orders as may be prescribed. While all this is happening, we have to do the accounting treatment as per section number 133, and we have to file all these orders of the NCLT within 30 days with the ROC. A special point. Two special points actually. Compliance report. We'll submit something called as compliance report given by a CMA CS, stating that we have followed all the procedures of the Companies Act while complying with this compromise arrangement, and we have to file it within 210 days from the end of the financial year. And the last topic, if this all concept of conducting meeting can be dispensed off, can be cancelled off, can be waived off, if the scheme was approved by not less than 90% of the value of the creditors. Imagine if 90% agreed for it, none of this chaos was required, we can directly approve the scheme, directly pass an order. There's no need of conducting meetings, etc. Then once an order has been passed under section number, it took a little more than expected time, Mama, but I hope you have understood section 230 properly. That's basically a majority portion of this act. The rest of the sections should happen a lot more smoother and a lot more easier. Power of the tribunal. Quickly run through this. Section number 231 states that once an order has been passed under section 230, the NCLT also has a power to come back and supervise whether the implementation of the process of scheme of compromise arrangement is happening correctly or not. Just try understanding it. Section 230 only talks about compromise arrangement. Whether it is implemented correctly or not is not being talked about. 230 only talks about preparing it on paper. Once it is prepared on paper, we have to start implementing it. Whether you are implementing it correctly or not, I'll come and supervise. While I came for supervision, if I'm not satisfied with how you are implementing it, I'll give you directions. Or if I'm satisfied that the scheme was not able to be implemented correctly, I'll give you modifications on implementation process. Once I've given you directions and modifications, I'll ask you to report back to me on a regular basis. If the company is existing company, if the company is going to liquidation, official liquidator or the company has to report it to the NCLT. Any doubts until here? Next, if after passing these modifications also, if the NCLT felt that the scheme cannot be implemented satisfactorily, implemented or cannot be implemented satisfactorily, and the company is unable to pay the debts, then why to prolong this process and unnecessarily try to revive something which is not able to be revived? The NCLT will pass an order for winding up of the company. But there is also a chance that, imagine this correctly, NCLT came for supervision. By the time they came for supervision, it was already beyond hand of repair and modification. It is not able to pay the money at all. Even after modification, it cannot be paid. Then why to give modification and delay the process? They'll pass an order for winding up with or without modification. Without modification. So, winding up order can be passed either sometimes with modification or without modification. That's your section number 231. Then the first part of the chapter is done, compromise and arrangement. Then coming to the second part of the chapter, we have mergers and amalgamations. Merger plus amalgamation starts under section number 232. I want section numbers very clear in this one. Otherwise, you'll get confused in the process. 232 talks about what? Merger and amalgamation of companies. Try understanding the words first. Whenever we talk about amalgamation, when two or more companies come together to form a new company, it is called as amalgamation usually. Whenever one company is getting, it is called as merger. Whenever two or more companies come together to form a new company, it is called as merger. Or when one company is getting absorbed into the other company and the first company is losing its identity, this is called as amalgamation. End of the day, to be called as merger amalgamation, there should be transfer of business. Just not transfer of the word company, but transfer of business entity. Try understanding it. If there are two companies, one company who is selling the assets will be called as transferor company and the other will be called as purchasing transferee company. If imagine the transferor company sold all the assets, settled all the liabilities and transferred the name to the transferee company, will it be called as amalgamation merger? No, sir. Amalgamation merger can be used only when the business is transferred. What do you mean by business is being transferred? Assets and liabilities have to be transferred. If the properties and liabilities of the transferor company are transferred to the transferee company, only then I can call it as merger or amalgamation. But it doesn't mean that I have to transfer all the assets. I have to transfer either all or any part of the assets. Either whole of the assets or part of the assets have to be transferred between two companies, and it is called as properties, undertaking, liabilities are transferred to another company, either whole or a part. Then it will be called as merger amalgamation. But you have now understood it clearly. Merger amalgamation does not happen within the company. There's involvement of another company. External forces come in. This is external reconstruction. Compromise arrangement is internal reconstruction. I hope you are getting clarity as we go through the chapter. Now, this merger amalgamation states that will follow mutatis mutandis the provisions given by section number 230. What is it? Mutatis mutandis. As far as possible, we will follow the procedures given by section number 230 to follow merger amalgamation under section number 232. That means application to NCLT, NCLT's permission, notice has been sent, conduct a meeting, got the approval from shareholders, consent or objection, then go give it to the NCLT. NCLT may pass an order. If NCLT passes an order, go give it to the ROC, etc. All the process has to be followed, but with slight modification, obviously, because this is external reconstruction this time. What is slight modification we have? The notice which you are sending will have different documents. Obviously, the first two documents are copy pasted among. The draft of the, this time what, not compromise arrangement, draft of the merger amalgamation have to be submitted. Valuation report given by the registered valuer. Then the agreement entered between the directors of both the companies which have sat together, discussed matters and come with a swap ratio, share exchange ratio, on at which ratio the shares will be transferred from company to company. If I hold one share in transferor company, how many shares will I get in transferee company? That's end of the day, the basic understanding of the entire reason of merger amalgamation is this transfer. At how did you come? Give me explanation on the conclusion of this exchange ratio and what valuation difficulties have you faced and what difficulties have you faced to come to this particular number. Give a proper detailed explanation about it. Then this is interesting logic. Fourth point. Financial statements of the company are prepared on 31st of March. If the company is going into merger amalgamation here in the month of April, say 5th of April, on 5th of April, the financial position of the company on 31st March more or less will be similar to each other. We can still rely upon that information. But if the merger amalgamation is happening assuming in the month of December, the financial statements prepared as on 31st March gives information as on the date of 31st March, which might not hold true on the month of December, there might be a lot of changes that might have occurred during this period. I cannot rely upon these old financial statements. I have to prepare financial statements as close as possible to the merger amalgamation. To prepare them as close as possible to the merger amalgamation, logic states that if they are old, prepare it. Otherwise, not required. If they are very new, very recently prepared, no need to prepare it. So, what is the time limit given by the Companies Act? Companies Act states that if at all you have financial statements which are older than 6 months period, how much? Older than 6 months, then you have to prepare something called as supplementary accounting statement. The supplementary accounting statement will give you a true picture on the current financial standings of the company. What is the document we are preparing? Supplementary accounting statements. If your financial statements are older than more than how many months? 6 months. Once the notice has been filed, remaining consent process remains the same, then NCLT will pass an order. Who is passing order? NCLT. Slight difference in the order of the NCLT. NCLT states that there should be transfer of properties and liabilities. But on which date will they be transferred? What if date will be considered as the date on which it is transferred? I'll tell you. Because the scheme might have been drafted on one date, consented by one date, order passed on one date. Because there's a confusion on this, I'll tell you the date on which the assets and liabilities of the transferor company will be transferred to the transferee company. The date will be called as appointed date. What is it called? Appointed date. On the appointed date, they'll transfer all the assets and liabilities to the transferee company. Along with assets and liabilities, can I say all the legal proceedings which are pending? We cannot walk away from them simply by getting merged amalgamated. All the legal proceedings pending on the transferor company will now be transferred to transferee company. Not only legal proceedings, can I say the employees of the company will also be transferred. Legal proceedings will be transferred. Now, if even though it has been approved by 75%, that is 3/4 of the value, there are still descending shareholders. The descending shareholders must be given an opportunity to exit. And how will they exit? Tribunal will pass an order. But during this entire process, try understanding it. The transferor company has transferred all assets liabilities to the transferee company, and the transfer company will now indirectly lose its identity, will go into dissolution. But the dissolution will happen without winding up because there's nothing left to settle. Everything has been transferred. Once everything has been transferred, they'll dissolve the company without any winding up procedure. But if at all there is non-resident involved, foreign exchange is involved, they'll create a special procedure for them. After all this is done, go file it with the ROC within 30 days. We have to follow all the accounting standard as per section number 133. We have to prepare this is all copy paste. I'm going a little fast on it. We have to prepare compliance report by CA, CMA, CS and submit it to the ROC within 210 days from the end of the financial year. All the procedures have to be followed according to the accounting standards. Section number 232, compromise arrangement of companies. But if you observe the concept correctly, Amma, if you observe the procedure correctly, we have to wait for NCLT's orders to be passed. Head and tail of NCLT was logic good, sir. But waiting at the NCLT's office for getting permission to conduct a meeting, then passing order, NCLT is not free. They have a lot of cases which are already pending. Hence, if NCLT is not having enough time and we are waiting at the NCLT, there's a delay in the process. If there's a delay in the process, will escalate this merger amalgamation procedure. It will be difficult for the company. Then companies that comes up with a topic called as fast track merger and amalgamation. Fast track merger amalgamation, which is also called as merger amalgamation of certain companies. Not all companies. Certain companies will merge amalgamate with each other. Not in the, try imagining it, not in the regular route, not in the regular highway you have, regular process you have, but to reach the same destination, I have a shortcut. That's the worst drawing, but I hope you have understood the concept. You don't go through the original route of 232 and wait with the NCLT's procedures. Rather, you'll take a shortcut and reach your destination in a lot quicker manner by a concept called as fast track merger amalgamation. Now you have understood. Where was there a delay in time? Because of the NCLT. Let's eliminate the NCLT and create a separate procedure under section number 232. Section 232 has a proper procedure to be followed. It is available for certain companies. I have a small chart for it, so it will become easy to understand. There are certain companies to which this concept of 232 arises as an option. Try understanding, imagine the road again. The regular path you have is 232. Now you have a shortcut where you can either take a shortcut, but this shortcut is available only for certain companies, not large companies. This is a very narrow road. Not everybody can go through it. Only few companies are allowed to go through the shortcut, are possible to go through the shortcut. But it is not mandatory that you have to go through the shortcut can you still choose a main procedure under 232? Yes. 233 is just an option available. You may either go through 233 or you may you may go through 233 a shortcut, a fast track, or you may stick to section number 232. I hope it is understood. This is just an option available for certain companies. Sir, what are these certain companies? Either there's merger amalgamation between two or more small companies. Sir, why two or more? Can there be three companies merging also? Yes, sir. There may be a minimum of two or maybe three companies are merging together. It will be called as two or more small companies. Or the merger amalgamation is happening between a holding company and a wholly owned subsidiary company. What do you mean by wholly owned subsidiary company? We are having two pockets of the same people, merging them together into one pocket. There's no change in the shareholders, there's no change in the business, there's no change in the circumstances. Only point is one legal entity is eliminated and we have single legal entity without any change in the business activities. You do it whatever you want. Holding company with a wholly owned subsidiary company. Or the merger amalgamation is happening between two startup companies. Startup companies are very rare to survive. Help them out by getting merged amalgamated with each other in a easier manner. Two or more startup companies, or one or more small company, or with one or more startup company, whatever way you put it. One or more small company with one or more startup company will get merged with each other. Can I have two startup companies with one small company? Yes. Can I have one startup company with two small companies? Yes. Can I have two small companies with two startup companies? Yes. Can I have one startup company with one small company? Yes. That's the reason words are not two or more, one or more. Or such other companies as may be notified, prescribed by the central government in the future. Actually, these 2 points were prescribed in the past, and central government still has the power to prescribe in the future as well. If these companies are getting merged amalgamated with each other, what will happen? They'll not follow section number 232, but they have an option to follow section number 233. It is given as an option. Focus on me, not on the chart directly. You will not understand it straight away. Focus on me. What's going to happen is the transferee company is going to send the draft scheme they have prepared to the ROC and official liquidator. I guess understanding, we have replaced the NCLT with the ROC official liquidator, inviting them to send their objections or suggestions to the companies. And they've been given a time limit of 30 days to send their objections and suggestions. Once objection suggestions have been received, the companies, both the companies, transferor and transferee company, will take them into consideration and decide whether to consider, whether to implement, whether to incorporate such objections and suggestions or not. But sir, what if there is no response within 30 days? If there is no response received within 30 days, we'll assume that there is no objections and suggestions. I hope this is understood first. Then, once objections are received, it is not mandated that I should consider. I may or may not consider. Whether I'll consider or not will be decided in the general meeting by the shareholders by passing a ordinary resolution. So I have decided it. Once I have decided it, now can I say this document which you have prepared as a draft is been now fully prepared, not approved among, but it is been prepared. Once it is prepared, now we have to get consent of the members and creditors. This was a lot easy and quick as compared to NCLT. That's the reason it is called as fast track. Now, once we have got the approval and we have prepared this document, prepared is done, we have to get approval. Approval from whom? Members and creditors. But sir, we have already conducted a general meeting, shareholders have already attended. Can I say shareholders are already available? You'll not ask them to go home today and come back for another meeting tomorrow morning again. It is not practically going to be possible. Hence, the logic states that in the same general meeting, you'll ask the members' consent by obtaining 9/10th of the total number of shares. Very wrongful drafting, but you have to learn the wordings given by Companies Act. It is not 9/10th in value. Logically, it is value amount, but words are 9/10th of the total number of shares. So it is not number of shareholders, it is number of shares. Indirectly speaking, the concept is value. So we have got the approval from members, that is fine, but we also have to get approval from creditors, for which we have to conduct a meeting of the creditors. We'll send a notice with a length of 21 days and we'll conduct a meeting of the creditors. The creditors will in the meeting give approval. Approval, dual majority this time. For members, what was the concept? 9/10th of the total number of shares. For creditors, majority of the creditors having 9/10th in value have to approve it. Once it is been approved by both the companies, this has to happen in both the companies. Both the companies, transferee have approved it, then we'll go ahead with the final order to be passed. But again, are we going to go to the NCLT for order? NCLT delay the process. I'll not go to the NCLT. I'll go to the central government. Continue the logic. Once this all process is done, we'll go to the central government. But before going to the central government, we have to file a formality document called as Declaration of Solvency, stating that the company is still considered solvent. We are not going for merger amalgamation for the purpose of, for the fact that we are insolvent. We are doing it for the escalation or growth of our business rather than to cover up the topic of insolvency. They're stating that they're still solvent, file it with the ROC. From here on, listen carefully, from here on, the process will be taken care by transferee company. The transfer company's role has completed. They've approved it. Now the transferee company states that I'll take care of the process from here. I'll send it to the central government. But there's a chance that there's a small loophole we have discussed here. There's a chance that the objections the government has given, the ROC and the official liquidator has given, might not have been considered. They might have been ignored by the company in this process. If they have been ignored, will they still accept it? No. Then the logic states that once you have approved the approved scheme have to be forwarded not only to the central government but also to the ROC and official liquidator. They will check whether you have correctly considered their objections or not. If they still have objections, they'll raise their voice. But they're not going to come and raise their voice with the company because they know the company will not listen to them. They've not listened to them in the first place. They'll send it to the central government and complain it to the central government. But this document has to be sent within 7 days from the date of approval. Put everything together, the transferee company has to send the approved scheme of merger amalgamation to the central government ROC official liquidator within 7 days, and this ROC official liquidator will have a chance to raise their voice against objection suggestions within a period of 30 days. There are two possibilities. Either we'll have the easier possibility first. Within 30 days, if they have no objections, if they're satisfied with the document, then central government states that I'm also satisfied. I'll pass an order confirming the merger amalgamation under section number 233. But if at all they have objection suggestions, who have objection suggestions? ROC or official liquidator. If they have objection suggestions and they have it within how many days? 30 days. They'll send it to whom? Not to the company but to the central government. Once they have sent it to the central government, if central government is also of the opinion, also believes that the compromise arrangement, merger amalgamation scheme is going to have an impact, a negative impact or a effect on public's interest or creditors. Who believes it? Central government believes that there is impact on the public's interest or the interest of the creditors. I've used some shortcuts here. I hope you're understanding. Public interest or the interest of creditors, then they will take an action or give me the positive end first. If they feel that there's no impact, who felt there is objection suggestion? ROC official liquidator. But central government states that we don't have a problem. We don't see a problem in this. Then we'll pass an order. Pass an order for what? Confirming the compromise arrangement under confirming the merger amalgamation under section number 233. But if at all the central government believes that there is public interest affected, central government will accept or reject it. Accept or reject it. They don't have the power to reject it. They have a power to send it back to the NCLT. Now the NCLT will come into the picture. NCLT. If you observe it, if everything was positive, order was already passed by central government. But if it comes to the topic of rejection, the central government cannot reject it. It has to be rejected by the NCLT. They'll forward it to the NCLT within 60 days. But 60 days is not counted from the date of receipt of objections. Rather, 60 days is counted from the date of receipt of the scheme. That means out of the 60 days, sir, out of the 60 days you're talking about, the first 30 days was eaten up by ROC and official liquidator for giving those objections and suggestions. Then indirectly speaking, central government has how many days in their hand? 30. But how would you frame it? 60 days from the date of receipt of the scheme by the central government from the transferee company. Then NCLT states that who is central government? I'll decide it. If NCLT states that I am accepting the scheme is all correct, you are doing drama. Who? Central government, ROC, official liquidator, you guys are doing drama. NCLT states that everything is correct. I'll accept it. I will confirm the compromise arrangement under section number 233 and they'll pass an order, and the order passed here will be exactly same as section number 232. Legal proceedings, dissenting shareholders, non-resident, employees transfer, or the appointed date being fixed, transfer of assets, accounting standard, all the order you have passed under 232 will continue under section number. End of the day, this is also merger amalgamation. But if the NCLT also rejects it, then your shortcut is closed. Barricades are put in, stating that application under section 233 has been rejected and giving directions that you don't have this road available, but can you go through the original road? Take a U-turn, go back and go through section number 232. 233 is closed, but I'll give you directions for the company to make a fresh application under section number 232. That is your 233. Compromise arrangement of not all companies, only certain companies happens under section number 233. You can go through these wordings also. Because it was way too difficult, I've gone through the chart. Otherwise, the wording should make sense now more detailedly. Fine. Shall 234 mistake by company side, but we'll still learn the mistake and we'll understand the mistake. 234 states that whenever there is a merger amalgamation between a company and a foreign company, whenever there is a, that is India, that is India. This is a company in India. There's a company which is located outside India, incorporated outside India. Whenever there's a merger amalgamation between companies incorporated in India, a company and a foreign company, there will be involvement of foreign exchange. If there is involvement of foreign exchange, which is very, very important, you have done your FEMA chapter, you should know this. It is very, very important for the company. If it is so important, logic states that I will not allow this process until you got a prior approval from RBI. Straightforward. Whenever there's a compromise arrangement between a company and a foreign company, you have to get a prior approval from the RBI. Prior approval from RBI have to obtain. After getting approval, the procedure, the rules and regulations, and the process of merger amalgamation will be slightly different for them. It will be decided by the central government. Central government will make rules and regulations in consultation with the RBI. A small point, small note point you have to understand here. Just give me yes or no answer. If merger amalgamation is happening between a company which is incorporated outside India and they're having a place of business in India, we call it as what? Foreign company. You know this definition, right? Foreign company means a company or a body corporate incorporated outside India but having a place of business in India. I don't want a full definition. It is just the basic information that it is incorporated outside India and having a place of business in India. Now, if this is the situation, the merger amalgamation between these two companies, will it involve foreign exchange? If it involves foreign exchange, will it be having impact on the Indian market? If it is having impact on Indian market, RBI will approve. RBI's approval is required. Second scenario, think about it. I don't have a place of business in India. If I don't have a place of business in India, but still they're getting merged amalgamated with each other, can I say still this will have an impact on the Indian market? Still there's involvement of foreign exchange. Still there is an effect on the Indian market or competitors. Is this still required to be regulated by RBI? Yes, but the word foreign company means only when you have a place of business in India. The word foreign company does not include those companies which does not have place of business in India. Then how so? They've made a blunder mistake on adding this word foreign company here, but they realize their mistake. Once they have realized the mistake, making sure that their mistake is not shown as a mistake, they have stated that we have not made a mistake, we'll actually change the definition of foreign company altogether. What do you mean by foreign company? For the rest of the companies are incorporated outside India but having a place of business in India. But for this section 234, logic states that foreign company means a company incorporated outside India, whether having a place of business in India or not. If you're having place of business or not having place of business, you're still called as a foreign company, which is not true when it comes to the rest of companies. For the rest of companies, it is called as foreign company only when they're having a place of business in India. But for section 234, it states that even though you don't have a place of business in India, it will be still called as a foreign company. That's irony there. But last point, the purchase consideration. Whenever there is merger amalgamation that happens between an outside company, there will be difficulties in payment of consideration. How would they pay? They can straightforward come pay cash. Either foreign currency, Indian currency, whatever that might be, they'll pay cash. If not, they'll give you securities. But the problem is the foreign company securities might not be listed in Indian market. Hence, rather than going through the entire process of listing, rather than issuing shares, they'll issue depository receipts. I hope you guys remember it from the inter syllabus. They'll issue what? Depository receipts, or otherwise partly in cash and partly in depository receipts. Partly cash, partly depository receipts. Section number 234. I'll come back to these three sections in a bit. 235, 236 and 238. They have to be learned in a cluster. They have to be learned together. We'll complete this section 237. Now, if you guys observe the merger amalgamations we have done, the merger amalgamation happened under section number 232, under section 233 and also under section 234. Now, the last merger we have under section number 237. 237 is a merger amalgamation which is slightly different from the rest of the group, where 237 states that it is not a voluntary merger amalgamation. It is not mutually agreed with the parties. It is not consented by the members or creditors. Rather, it is forced upon us. Sir, who forced it? It was forced by the central government. Why would the central government do so? For public's interest. Whenever central government wants something to happen, something to make, they'll use this weapon called as in public's interest. They're not doing it for political parties' benefit. You're not doing it for a political leader's benefit. We're not doing it for a political family's benefit. We're absolutely doing this only for whose benefit? society's benefit for the public's interest. Now add the wordings. If the central government is of the opinion that in the public's interest, the two or more companies, it is necessary, it is essential for two or more companies to merge amalgamate with each other, the central government will pass an order. Central government will pass an order because it was never mutually agreed between the parties at all. The terms and conditions of such transfer, properties, liabilities, contracts, arrangements, everything will be decided by the central government by passing an order and placing it, notifying it in the official gazette. But sir, companies don't even have a chance to speak about it, raise their voice about it. We are so-called we live in a democratic entity, democratic country. Are we a democratic country? At least on paper, we are a democratic country. Try understanding it. We are a democratic entity on paper. At least we have to give the option to the companies to speak and raise their voice and raise their concerns about such terms and conditions. Who decided for merger amalgamation? Central government. Who stated it is public's interest? Central government. Who passed an order? Central government. Who decided the terms and conditions? Central. Then what are we? We should also be given a chance to speak about it. We should also be given a chance to raise our voice and raise our concerns on the scheme of compromise, scheme of merger amalgamation. Democracy comes in, states that the order passed by central government will not be allowed unless the draft scheme has been forwarded to each of the companies beforehand. And each of the companies have been given a chance to raise their objections and suggestions. Whatever objections you have, whatever suggestions you have, raise it. We will receive it, we will consider them. We, if required, will make modifications. This itself tells you the entire story. We'll make modifications if any, if required. Can I say this process of objection suggestions is just a formality? If the central government wants to make it, they'll do it. But it is just a prolonged delayed period of time that you will be given a chance to speak, but your voice will never be concerned about it. Obviously, they have a right to make modifications, if any. If any, they'll make modifications, otherwise not. And this objections and suggestions can be received by the central government for a particular period as mentioned in the notice. But if they intentionally provide you only 2 days, 1 day, 5 hours, 10 hours, they're intentionally suppressing you from raising your voice. They have to give you a time limit of not less than 2 months. But don't remember it as 2 months. It has to be mentioned in the official order passed by the central government. If order passed by central government states 3 months, 3 months, 5 months, 5 months, but it shall not be less than 2 months. Now, once the order has been passed, I hope you guys are understood it. Forced by whom? Central government. The order has been passed. Order states that basic understanding of merger amalgamation. All the legal proceedings which are pending on the transferor company will continue in the name of the transferee company. How to transfer assets, liabilities, properties, etc. will be decided by the central government. Effective date given by central government. Order passed by central government. All the procedure is fine. But can they do injustice to the members and creditors? No. Remember this word. All the powers and rights of the members, debenture holders, creditors, all the powers and rights. Where is that word? Rights and powers. All the powers and rights I had in the transferor company should, as far as possible, as close as possible, should be same in the transferee company. That means I should not have any injustice. I should get the same rights that are existing in the transferor company. It should be continued in the transferee company. Whatever I have in the transferor company, same rights and powers should continue in the transferee company. But if at all you at any point of time were unable to provide me the same powers, if those same powers and have been given with less than those interests and rights available in my original company, that is transferor company, you will pay compensation to the person who has lost his rights. Will pay compensation. And how much compensation will I get will be determined by the authorities prescribed by them. So obviously they'll decide it low. They'll not give you the right amount of money. If you have not got the right amount of money, compensation was not correctly received, you have a right to appeal. A right to appeal to the NCLT within 30 days. What happened here? You should get the same rights. If you don't get the same rights, if you got the lesser rights, for the rights you have sacrificed, you should get compensation. But the compensation will be decided by the prescribed authority given by central government. But if you don't get satisfied with the compensation they have given to you, you have a right to make an appeal with the NCLT within 30 days. Section number 237. I hope that is very clear to understand. Then the last 3 set of sections, actually speaking, section 235, they have given only 2 lines in your material. 236 is not given in your material, but they have. I know you are questioning it already. There's a question on this on practice manual. Sir, they don't even have 236 in your syllabus, but they do have a question asked. Welcome to CMA Final. Then we have section number 238, which is actually a supporting section of 235 and 236. 238 does not have value in its own. 238 has value only when you have understood 235 and 236. Look at the irony the ICMA is doing. They have not given you 235, 236 fully, but they have given the supporting section 238. How would it make sense unless you have knowledge of these two? But they're still asking this in the exam hall. I don't know when and how will ICMA will change on this part, but what can we do other than blaming ICMA and crying about it? Accept it, move forward, do your best, give your best, never do selective study because there will be questions out of syllabus. If you have even prepared for the entire 100% of the syllabus, there will be still questions you will not be able to answer them correctly. So don't do a selective study at the final level, especially. Go make sure that you are studying the entire syllabus, especially with law where you don't have a fixed pattern to study. I hope you will take this as a lesson, even though this is not a part of your syllabus, even though 236 was not even given as a reference in your syllabus, I've asked as a question. So be careful with it. Let's start with section number 235. 235, 236, I don't want to spend much time into it, but at the same point of time, I want to give you a brief introduction of both the sections here. 235 especially, what happened is, there was one guy, one company, transferee company who wants to acquire the shares of the transferee company. For acquiring those shares, what have they come up with? They have given a scheme on a public platform stating that the market price of your shares today is say rupees 100. I'll straight away give you 150 rupees and purchase your shares. I'll give you 50% profit. How much profit? 50% straight away I'll give you profit. Sell your shares. I'll give you a scheme. This scheme will be kept open for a period of 4 months. If in case during this scheme procedure, during this period of scheme, if 9/10th of the value of the shares have been purchased, acquired by this person. Now, let's give technical words. This 9/10th will be called as majority. What happened? There was a scheme or a contract, which was approved by the majority. Then the section 235 starts now. This was a background number. This is a situation that is existing. In this situation, the section number 235 states that in the next 2 months, if the acquirer, the transferor wants it, if he intends to do it, he will have the right to compulsorily acquire, mandatorily, forcefully acquire the rest of the dissenting shareholders, minority. Who approved? Majority. Who did not approve? Those will be called as dissenting shareholders. And we now have a power to acquire, not voluntarily. We're not giving them a choice. We are on a forced manner asking them to sell their securities to us, and we have to inform our intention within 2 months. And we have to make an application to NCLT applying it. And in the next 1 month, I'll actually go and purchase, acquire, grab, snatch those minority descending shareholders. That's where the heading also comes in. Now you will understand the heading. Power to acquire shares of dissenting shareholders. Shares of whom? Read only till here. Power to acquire shares of dissenting shareholders. They're dissenting from where? From a contract or scheme approved by majority. I hope you have understood it. The contract or scheme which is approved by majority has to be now was dissented by certain shareholders. Now we are having a power to acquire this on a mandatory basis. Then what's going to happen? This procedure has to be followed. The procedure is not given on a syllabus. I'm not going to go much detail into it. We have to send a notice to the dissenting shareholders stating that we are intending to purchase you. We have to make an application to the dissenting shareholders may apply to the tribunal to stop the process, or we have to deposit the money. Obviously, if you are purchasing a huge amount of company, you're not purchasing a single asset, you're not purchasing a single property, you're not purchasing one machinery, you're purchasing an entire company, which is basically a cluster of huge set of assets and liabilities. That means there will be huge amount of cash outflow. You have to deposit the consideration payable to the transferee company in a separate bank account, which will be an escrow account, which will be used only for the purpose of payment to the transferor company's shareholders. 236, 235, very close to each other. Sir, what happened under 235? Can I sum up entire section 235 into this word? Compulsory acquisition of the minority. Same process happens here, but this time it happens in a lot more smoother, lot more calm basis. Voluntary acquisition. If a acquirer, I hope you guys have done your takeover code. and you're not watching these classes as a substitute for your regular classes. These are just revision classes. I hope you have already gone through your takeover code. It will help out now. The acquirer along with his PAC. Are you guys getting a recollection of these words? Acquirer along with PAC, person acting in concert. The acquirer along with his PAC, if by any reason, amalgamation, conversion, share exchange ratio, whatever the reason might be, they have ended up to be having not less than 90% of the value of the shares. So that's what we have discussed here, 90%. Yes, exactly same. But this time, as I was telling this is not compulsory acquisition, this is voluntary acquisition. If the acquirer along with his PSC has already have some other way become a shareholder of 90% of more of the equity shares, by whatever reason that might be, he may give his intentions to acquire the remaining equity shares. I'm not stating that I'm going to come and snatch everything, grab everything from you, but I'm stating that I have an intention to acquire it. Then you, if you want, you can sell it on a voluntary basis. You can sell it at a price which is determined. Obviously, if I determine it, I'll give you low price. If you, the minority, will decide it, you'll obviously quote an unreasonable price. Let's give it to the registered value, decided by the registered valuer, and a minority may sell off. Say, assuming I already have 92%. You, the descending share, sorry, you, the minority, will have how much? 8%. You will decide to sell or not to sell this 8% according to the instructions given, according to the price given by registered value. Forget all this, sir. 92% did not have intention. I did not take the first move. 8%, the minority made the first move. Minority made the first move stating that, sir, we want to sell our shares. We don't want to stay in this company anymore. 8% is not giving us any rights in the company, nor it is giving a chance to raise our voice properly. Why should we stay in the company? We want to sell. Whose intention to sell this time? Minority's intention to sell it, and the majority will purchase it. Majority will purchase again at the price which is determined by the registered value. Same logic, but whose intention this time? The minority's intention. But all this process will happen according to the instructions, according to the valuation done by the registered value. Next point. So we gave 8%, the 8% either my intention majority or your intention minority. Out of the 8%, only 6% decided to sell it. It means after applying 236, I'll have 98%. There are still minority 2% left. Can I apply 236 again in the future? Yes, because it is voluntary. 236 can be applied multiple times in the future. But observe it for 235. You didn't have an option. You, the 8%, did not have an option. You had to compulsorily sell them. If you had to compulsorily sell them, there's no chance of repeating this again in the future. 235 will apply only once. 236 might happen multiple times because it is voluntary in nature. I hope you guys are comfortable till here. Next category, the majority of the majority shareholders have to make sure that money is available. Money is available, hence they have to deposit equal amount of money that is required to acquire that minority in a separate bank account in a scheduled bank. As usual, escrow account, regular process. This account has to be utilized to pay money to the minority shareholders within a time period of 60 days. But this account has to be kept open for a period of 1 year. That means, sir, even after 60 days, if you come back to claim money, whatsoever reason you were unable to claim it within 60 days, can you claim it after 60 days also? Yes, it will be open for a period not less than 1 year. This is obsoleted. I'll probably remove it from the material next time. But what the logic here is, if you have physical shares and you don't, the minority has physical shares. Obviously, who has physical shares? I don't have papers. If the minority has physical shares, assume this is share certificate amount. If the minority has the physical shares and the minority is not surrendering this physical shares back to the company on time, then the company will assume that the physical shares have been considered cancelled, and in lieu of the physical shares, in lieu of the cancelled shares, the transferred company will issue new set of shares to the transferee company. But this is not practically going to be possible because all the shares now are held in a dematerialized format any which ways. Last point, this is very, very interesting. Give me 2-3 minutes more, we should be done now. If you observe, first 30 minutes was eaten up by section 230, rest of 30-40 minutes we have done the entire chapter. Section 230 is the basis for the entire chapter. If that is understood, the rest of the chapter should become easy. I hope you have understood that. Last point of section 236 states that, listen carefully, 75% of the minority. What? Minority was how much in our example, sir? 8%. 75% of this 8%, 75% of the majority will have a right to come and negotiate a higher price with the majority. Who will come and talk? Not the one minority shareholder, two minority shareholders will have 75% of the minority, that means in our case, in our example, 75% of that 8% will come and talk, negotiate the terms with the majority to have a higher price. If the majority have, the negotiation was successful and the majority stated that, okay, fine, we'll pay you extra 50 lakhs in total. Now, this additional amount of compensation which we were able to attract based on the negotiation, but who made the negotiation? 75% of the minority. What about this compensation? So, who will get the benefit of this compensation? Will it be enjoyed only by the 75% of minority? No. It has to be on a proportionate basis, on a pro rata basis, distributed among all the minority shareholders. All minority will enjoy the proportionate basis. Higher price, that additional compensation will be enjoyed. But who will demand it among? 75% of the minority shareholders. That's your section number 236. Now you'll understand 238 lot better. What is section 238 is, I'll come with the concept first, then the heading later. Once the assets have been sold, who gave a scheme? Transferee company. Transferee company gave scheme to whom? The shareholders of transferor company. Now, the shareholders of transferor company will not exactly know whether the scheme is beneficial for them or not. What consequences will happen, what financial benefit or financial loss will incur, whether it is possible to take this scheme or not, will not be understandable by the shareholders. There comes a help. If they don't understand it, we'll explain it to them. We'll clearly, transparently explain everything to them. Once they've understood everything, then they'll be able to take a decision whether to sell or not to sell. But they don't have knowledge to understand it. Hence, the directors of the transferor company will help them understand it. They will give a circular. They'll give a circular, a statement, a document in which they'll provide their recommendations whether to accept or not to accept this scheme of compromise arrangement. So, give me the basic summary. Who is giving this circular? The board of directors of the transferor company are giving a circular which has to provide recommendations to the members whether to accept the offer or not to accept the offer, with all the relevant information explained very transparently and clearly. Once it has been clearly explained to you with proper information and proper manner, then you have better information about it. Now you will decide whether to sell or not to sell, whether to accept or not to accept the schemes, either 235 or 236. Now continue the process. If you have accepted, the transferee company should have made necessary arrangements so that cash will be available. Whose responsibility to make sure the cash should be available? Transferee company has taken steps that necessary cash will be available for such payment. We were just discussing about it. It has to be put in a separate bank account so that it will be used for the purpose of payment of shareholders of the transferor company. Small problem here. Sir, this circular you're talking about is drafted by whom? Board of directors. There's a chance that the board of directors might be connected with this transferee company and they have intentionally given wrong recommendations, false information, incorrect information, and trying to manipulate and bluff the shareholders of the transferor company. To make sure that this document does not have false information in it, logic states that before it is circulated to all the members, it has to be registered. It has to be filed with the ROC. You have to give it to the registration. And the ROC will have a time limit of 30 days. How many days? 30 days. If the ROC does not object it within 30 days, it is assumed that it has been approved. You circulate it. If the ROC objects it, if the ROC feels that it is been giving false information or manipulating them, they within 30 days will give you an objection. They will refuse the application. If they have refused it, can you circulate it? No. If the ROC has refused it, who got affected? Who is not satisfied with it? The directors of the transfer company, they can make an appeal to the NCLT. Who rejected your circular amount? ROC. Within how many days? 30 days. If you're not satisfied, you can make an appeal. Appeal to whom? NCLT, stating that the circular was unreasonably refused by the ROC. You will basically file a case on the ROC stating that it was not, it was refused without proper grounds. You may appeal, but usually people will not appeal on a practical sense. That's your section number 238. I hope 238 is better understood with section 235 and 236. 239 and 240 are not part of a syllabus, but they're small sections itself. They're not part of your syllabus as such. That's your chapter, compromises, arrangements, and amalgamation. But focus on the first section very clearly. That's when you'll understand the chapter. That's your compromise, arrangement, and amalgamation. That's all for this video. We'll meet you in the next one. Thank you, guys. Inspection, inquiry, investigation. We have to always read and understand this chapter in two different parts, or two different legs. The first category will be inspection and inquiry, which will be ranging from section number 206 and going on till section number 209. Once the process of inspection and inquiry is completed, then we'll go ahead and understand what's the process of investigation, which will be discussed from section number 210 until the rest of the chapter till section number 229 as a whole. But try understanding it. Inspection and inquiry and investigation are those words which are very interlinked and very close to each other. Before we can start understanding the process of inspection, the procedure of inspection, who will conduct investigation, how the investigation is conducted, for what purposes or what reasons the investigation inspection is conducted, what procedures have to be followed into it, we have to first understand what exactly inspection is, what exactly inquiry is, and what exactly investigation is. Once we have understood and have clear clarity on these words, then we can start applying logics on these words to apply procedure for it. The chapter has to be read as a single flow amount. This has to be a single flow. Only then you'll understand the linking of all the procedures here. But for that to happen, you have to understand the word inspection and inquiry and investigation first. Let's understand the word inspection first. Inspection is a process which states that the authority does not have a negative mindset. Authority states that I believe that you have followed the procedures. I believe that you are complying with the procedures of Companies Act. You are following everything as per the requirements. But if I don't come and check, there's a chance that there will be few companies which will take advantage of it and will not obey with the law, will not follow the rules and regulations. Imagine this as similar to as your exam squad in your final examination. The exam squad will come not to find something wrong, to make sure that the college or the institute which is conducting your exam is conducting everything as per the requirements. It is a routine check which is conducted without any negative aspect. But while doing this inspection, without negative activity, to make sure that everybody is obeying the law, to make sure that I'll carefully observe whether I'll do an official visit or I'll ask you to submit documents, everything is correct or not. But while I'm doing it, if I have a doubt that you might be doing something wrong, I have a suspicion that you might be conducting something wrong in the company, then I'll escalate the topic from inspection to inquiry. So inquiry is something which happens after inspection is done. After inspection has given a suspicious doubt for me, I'll have to clarify my doubt. I have to resolve my problem. I have to make sure that the problem or the doubt I have to be resolved by collecting proper facts, for which I'll conduct inquiry. But try understanding it. My mind is also in negative mindset that I've seen something wrong. There's a chance that you're actually doing wrong. My mind has already gone into the negative aspect. Inquiry is done with a negative mindset to find something that might have wrongfully done in the company. Something bad is existing in the company. Some bad might be existing. I'll check it. But if while in the process of inquiry, if my doubt is resolved and it comes out to be a fact that nothing wrong is there in the company, on face it felt wrong, but on conclusively, when I dig deeper into the process and do the inquiry, I felt it was nothing wrong. It was all as per the requirements. I'll give you a clean sheet. If I give you a clean sheet, the problem will close here, the story will close here. But after inquiry, it is proven that you have done something wrong. You have done something wrongful activity. You have done something criminal activity. There is some problem in the company. But the court will not listen to my words. Court will not listen to my emotions. How much ever I cry with the judge, he will not listen with me. He'll listen to evidences. He's listening to the facts. He's listening to the documents. So what should I do? I will, if inquiry is proving that there is something wrong, I'll escalate it from inquiry to investigation. What will happen on investigation? I'll go through thorough examination of the documents to discover the truth behind the company, to gather all the information and evidences, so that it will be supportive in the court of law for punishing you, prosecuting you, and taking action against you. So if you guys have observed it carefully, all three are linked with each other. All three happen in a single process. First will happen inspection, positive mindset. If I'm not fully satisfied, then I'll have a doubt, then I'll come for inquiry. If inquiry has confirmed that there is something wrong in the company, there is something bad in the company, then I'll come for investigation. There I'll collect evidences for the prosecution and evidence to prove it in the court of law. So what will be the procedure, sir? We'll first understand inspection. Then if you're not satisfied, then we'll go for inquiry. Sir, what happens if you're satisfied? Close the story there itself. But if you're not satisfied, then we'll start inquiry. Sir, if I'm satisfied with inquiry, stop the story, end card there itself. But if at all you're not still satisfied with inquiry, then you go for investigation. I hope you guys have understood this 5 minutes of introduction on what is inspection, inquiry, investigation. Now we can actually start understanding the sections. All the sections have to be read with proper charts. We'll start from our chart from the classroom itself. I'll share this document. My suggestion would be, if time permits, pause the video. If you have time, pause the video, write it, so that you'll understand the flow and you'll grasp it in a better manner. If not, I'll share the PDF. You can go through that. Start understanding it. The topic of inspection is done by the ROC. Look at me, not the chart. Don't read it. You'll get confused. Let me explain it. Then I'll tell you what to read and how to read it. The inspection process will be done by the ROC, and ROC states that I have thousands and lakhs of companies which are registered under my jurisdiction. We have total of 31 ROCs in India, but more than 20 lakh companies which are active in India. More than 27 lakh companies which are registered in India. It is not practically possible for those 31 ROCs to inspect every single company every single year. Then what am I gonna do is, I'll select few companies to which I want to do inspection. I'll not do inspection of every company. I have other works to take care of as an ROC. So what will I do is, I'll do inspection only when I feel, in my opinion, there is requirement of inspection. But when will I come to this conclusion? When will I come to this opinion? On the basis of the documents you have filed. Sir, what documents, sir? There are two documents which are regularly filed by every single company: financial statements and annual returns. While I'm going through this document, if I have a doubt on it, if I know that there might be something wrong, I'll come to your company. Give me the wordings here. On the basis of the documents filed by the company, or forget about the company filing it, some other person gave information to me, some other person gave complaint to me that, sir, this company is doing something wrong, go check it. I'll start the process of inspection. But because I'm not going to believe this information straight away blindly, I'll start with inspection. If I get a suspicion while inspection, then I'll go for inquiry. Inquiry happens after the inspection topic is completed. So I'll start with what logic, guys? I'll start with inspection. When will I start with inspection? Start repeating it after me, along with me, with these wordings. On the basis of the documents filed with by the company, or on the basis of the information received by the ROC. If ROC of the opinion that additional information, additional explanation, or additional documents are required, what happened? I want information. You have not filed information at all. I want this additional information. You have filed information, but why did this information exist in this manner? I don't understand the reason behind it. Give me additional explanation. Forget information. I don't even find this document you have filed correctly. Submit that additional document. I want three things: information, explanation, or documents. If I want it, I'll ask it. I'll ask it by sending a written notice. Observe the words careful again with me. Repeat it. By the time the revision of this chapter is done, you should be comfortable with all the words somehow. Start. On the basis of the documents filed by the company, or on the basis of the information received by the ROC. If ROC is of the opinion that additional information or explanation or documents are required, I'll ask it. Ask it by sending a written notice to the company as requested by the ROC. Observe the word careful. I'm not ordering. I'm not demanding. I'm requesting, because I'm still in a positive mindset. I'll give it to the company, and the company has to provide what? Obviously, such documents, information, and explanation. But the company is an artificial person who will actually provide it. It will be actually given by the officers and employees of the company. Who should provide the information? Officers and employees of the company. The employees and officers of the company have to provide such information to the best of their knowledge. What information? Such explanation, or such documents which have been requested by the ROC. But while doing it, because I'm not familiar with your books, I'm not familiar with your business activity, I'm not familiar with the nature of your business, you have to provide me all assistance possible for me to complete my inspection process. All assistance. Give me the answer, Amma. I'll ask 3, you give me 4. I'll ask 3, you give me 4. What will I ask? Information, explanation, documents. What will you give? Information, explanation, documents, and all assistance. Are we comfortable till here? Who has to provide this? All the employees and officers. But there's a chance that I'm giving this written notice in 26-27, but I'm asking explanation regarding 2021. In that case, an employee who was appointed in the year 26-27 will not be able to give explanation for 2021. Then I'll go ask whom? Not the current employee, not the present employee. I'll go ask former officers or employees. The word employee officer here includes former employees and officers, they have to provide information if the information is relating to the past period. Now, while all this is happening, the ROC may also come to your office for inspection. While he has come to your office, if he is not fully having enough time to inspect while sitting at your office, he can take copies of those books. Can I seize the books? Can I seize your? What seizing, sir? You are doing in a positive mindset. You don't doubt the company yet. You don't have a problem with the company yet. It is not proven that company has done something wrong. If I ask the same question, sir, if I can seize the books in case of investigation, it is proven that you have done wrong and I'm collecting evidences. Can I seize your books? Absolutely. But when it comes to inspection inquiry, because it is not proven that you have done something wrong, seizure of books is allowed or not allowed? Not allowed. Not allowed, but I can, for the purpose of helping me to complete the inspection inquiry process, I will have the right to take copies or the extract of those books and papers of the company. But to make sure that I have taken a copy, but you will not alter with these documents, I'll place an identification mark stating that this was the original document which was shown to me at the time when I came to your office. I can place identification marks. Again, this style of teaching will be, methodology of teaching will be slightly different for this chapter, for these set of sections. I'm not discussing section numbers if you observe it yet. I'm not discussing whether it is 206, 207. It will be a combination of all 206, 207, 208, 209. Once I'm done with the entire process, I'll come back and segregate what is 206, what is 207, what is 208, and what is 209. I hope you guys will be comfortable with this flow and story first, then we'll understand section numbers later. So what happened? You gave information to the ROC. Now, once you have given information to ROC, there are two possibilities. Either ROC is stating that, okay, fine, whatever problem I had, it's been solved. I'm satisfied with the information you have given. I'm satisfied with the explanation you have given. I'm satisfied with the documents you have submitted. I'm fully satisfied. If you're satisfied, then there's no need of inquiry. We can close the story with the topic of inspection. If I'm not satisfied with inspection, then I'll go for inquiry. But if I am satisfied, the story will end. Further inquiry is not required. But if I am not satisfied, when will I be considered as not satisfied? There are three circumstances in which I will be considered as not satisfied. Either the information is not even filed. Such information explanation is filed or not filed. Is not filed. No information has been filed. If information, documents, explanation is not filed, I am not getting clarity on the company. I'll have a doubt on the company now. Second point. If documents were filed, but the documents filed were not adequate, they're not sufficient for me to get a proper picture on the company. Are you getting the difference between first point and second point? First point, information was not even filed. Second point, information was filed, but information was filed in an inadequate manner, insufficient manner. It is not sufficient for me to get a clear picture on the company. Or third point, all the affairs have been submitted and it is conclusive. Proper words. ROC is satisfied that unsatisfactory state of affairs exists in the company. The ROC is satisfied, not satisfactory affairs exist in the company. Unsatisfactory state of affairs exists in the company. Then the ROC states that I'll start the process of not inspection. We'll start the process of not inquiry already. We still have one more stage of inspection. States that, sir, we have sent a written notice. Sir, we have sent a written notice asking the company to provide information. There's a chance that the company might have not understood my written notice properly, might not have understood my intention properly through this written notice. I'll send an additional written notice to the company asking documents again, asking information, explanation again, still in the process of positive mindset. There's a chance that you might have not understood my original written notice. I'll send an additional written notice. But even after additional written notice, if I'm still not satisfied, stop. Enough of inspection. I've given you multiple notices. I've given you time to provide information, but you're still hiding something in the company. Now I have a doubt on you. Then I'll start what? Inquiry. Inquiry will be started. So what's going to happen in inquiries? Inquiries again of three categories. Who will do the inquiry? On whom will I do the inquiry? When will I send this inquiry of written notice? Three questions to answer. Who will do it? On whom will I do it? And how will I do it? And when will I do it? So start the process. Again, inquiry will also be done by ROC. But inquiry can also be done by a special authority called as an inspector appointed by the central government. So if central government has reasons to believe that inquiry is supposed to happen, then central government may give instructions to the ROC to conduct inquiry, or if the ROC is busy enough not to be able to conduct it, or the central government does not believe the ROC will conduct it properly, the central government may themselves appoint a person called as inspector for conducting an inquiry. So give me the conclusion on this. Inquiry can be done either by the ROC or by the inspector appointed by the central government by sending a written notice. Written notice to the company, same old format. Written notice to the company asking the company to provide information, explanation, documents. So what is different this time? I have doubt on you. If I have doubt on you, I want my doubt to be solved. I want my problem to be resolved. My problem to be resolved, I'll clearly explain the allegations I'll put upon you. What are the problems I have? I'll clearly explain in the written notice and send it to the company. And the company must be given an opportunity of being heard to present themselves, represent themselves, and to defend themselves and whatever allegations I put on the company. But when will I start inquiry? There are two cases where I'll start inquiry. Why? Because the ROC is of the opinion. Give me the wordings here. ROC is of the opinion. Can I, sir, also add the word inspector? Yes, sir. The ROC or the inspector is of the opinion that the affairs of the company are conducted in a manner which is fraudulent or unlawful, or they're not in compliance with the provisions of the Companies Act. Three categories among. I hope you're able to read and understand these words properly. Get it synced in. Why did I send written notice for inquiry process? If the ROC or the inspector is of the opinion that the affairs of the company, business of the company is conducted in a fraudulent manner, they're doing something fraud, or it is for an unlawful purpose, it is affecting people, or they're not complying with the provisions of this act, that means they're hiding something behind the company, I'll send a written notice. Or on top of it, second option I have, this is first option, this is second option why I can start inquiry. Second option is that owners of the company, shareholders of the company, members of the company, their problems, grievances have not been resolved, have not been addressed. Imagine if the owners itself are not getting information. Shareholders themselves are not getting information. Investors themselves are not getting information. That means there's a high chance that the management of the company is hiding something behind this company. I'll start inquiry. I'll send a written notice. When will I send written notice? Start the process. Give me this entire chart we have discussed here. Either the ROC or the inspector will send a written notice along with the allegations put on the company. Sending written notice will be done in two situations where the ROC or the inspector is of the opinion that the affairs of the company are conducted in a manner which is fraudulent or unlawful or not in compliance with the provisions of this act, or the grievances of the investor shareholders are not been resolved, have not been addressed. I'll send a written notice asking them to provide information. If they have provided information, that's fine. If they have failed to provide information, can I stop with inquiry? No. If they have provided information and solved all my doubts have been solved. Now, I don't have a problem. I'll allow you to close the story here with inquiry. But whether this inquiry is done correctly or not, inspection is done correctly or not, we have to understand. If inquiry is sufficient, we'll close it. If not sufficient, we'll start investigation. But the point is, investigation is not a power in the hands of ROC. Investigation is an order passed by the central government, as we were discussing about the beginning of the chapter. Inspection and inquiry is one end, investigation is one end, which has to be done by the central government. So what will I do is, I'll prepare a report of whatever we have collected till now and submit it to the central government. And let the central government be the deciding factor whether the investigation has to be done or not to be done. So what will happen? I'll prepare a report called as report on inspection. We'll prepare it, sir. Not only ROC, there's also a chance that it can be prepared by the inspector. ROC or inspector will prepare a document called as report on inspection and give it to the central government. In the same report, they'll also include their recommendations to conduct further investigation. Imagine this. After ROC has done the inquiry, if ROC believes that investigation is required to be done, but I don't have the power to investigate, I'll at least recommend. I cannot give directions to a central government. I'll recommend to the central government, sir, please conduct investigation, there is something wrong. I'll give recommendations to the central government. Or I've conducted the inquiry, second scenario, I believe that there is nothing wrong in the company. I'll submit the report giving recommendation or no recommendation this time. No recommendation. But if I'm giving recommendations, the recommendation will have value to it, will have weight on it only when I submit all the other supportive documents to the central government to make believe the central government that investigation is required. Only then they will pass an order for investigation process. Any doubts on this part? If this is understood, the next logic should be easy. During this entire process, if the company has started, just imagine this, if the company has started inspection, if the ROC has started inspection, or the ROC or inspector has started inquiry process, if the company has actually done fraud, if the company has actually done something wrong, if the company is actually hiding something behind these books of accounts, there's a chance that I will start destroying the books, I'll start altering the books, I'll start making changes in the books, I'll secret the books, I'll hide the books. There's a chance that this destruction of books might happen. If the books are destroyed, it will detrimentally affect the process of inspection inquiry. Then we state that you can seize the books. Original answer, inspection inquiry. Can we seize the books? No. But if at all the ROC or the inspector are of the opinion that the books and affairs of the company, or books and documents, or books and papers of the company are likely to be, I want 5 technical words you have to remember, likely to be destroyed, completely put on fire and obliterated, or mutilated, not able to read the document correctly, not able to understand the information mentioned in the document correctly. Imagine you have spilled a tea on the document, you'll not be able to read it properly. Mutilated. Either, give me the wordings, destroyed, or mutilated, or falsified, or altered, changing information in it, bringing a new document altogether, falsified or altered, or secreting the document. I want 5 sentences, 5 words among. 5 words, understand here. Destroyed, mutilated, altered, falsified, and secreted. Who believes that they might be destroyed? ROC or the inspector. And now, even under inspection, they'll have a right to seize your books. They'll have a right to seize, but only with the prior approval of the special court. If this is understood, entire section is done here. If in the opinion of the ROC, read the wordings. If in the opinion of ROC or the inspector, the documents of the company or the director or the promoter, KMP, employee officers, company secretary in employment practice, whosoever is linked with the company, there's a chance that the document might be destroyed, mutilated, altered, falsified, or secreted. Then, and this destruction will detrimentally affect my inspection inquiry. I'm not going to sit silently until they destroy the book. I will immediately go make application to the special court and get an approval. If I receive the approval from special court, now I'll have a right to search, enter your entity, enter your organization, search for all the books required and seize them. You've seen many movies, right? As soon as an authority or department comes to your office, the first thing the villain or the hero will ask is, sir, where is the search warrant? Do you have search warrant to come in? I'll show a paper. I'll show a piece of paper stating that I got an approval from the special court. I have search warrant. I have a right to seize the books. I have to get approval from the special court. I will now be able to, once I got the approval, I'll be able to search and I'll be able to seize such documents. Seize such document. Can I seize them for an indefinite period? That should be in infinity. Can I seize them for indefinite period? No, because it is still inspection. It is not something that you have done something wrong. You are likely to do it. Hence, the logic states that you can freeze those books, seize those books for a period of not more than 180 days. Frame the sentence. The books and papers of the company seized shall be returned back to the company within a period of not more than 180 days. So, what the maximum I can see is 180. But sir, indirectly speaking, can I say this 180 days period is the time in which I have to complete my inspection and inquiry? But if at all the company is complex in nature and I was unable to complete within 180 days, I can apply for a written extension for another further 180 days. What's the original time limit? 180. But I can go for an extension of another 180 days. Then after 180 days, if the inspection is not done, can I go for another extension? No, you can't keep your books for indefinite period. You have to return them back. But so if, genuinely speaking, if my concept of inspection is not fully completed, I still want those books to conduct inspection, but the logic states that I should return them back. While I'm returning them back, I have the power. I hope you will be able to answer this. I have the power to take copies of the books and papers or place identification marks on those books and papers. So whatever we have discussed in the last 24 minutes, or should I say, keeping aside the introduction part, 20 minutes, is section number 206, 207, 208, 209. All 4 sections of concepts have been done. The first part of the chapter is done, inspection and inquiry. Let me segregate the sections for you. This entire process where the inspector will actually come and conduct and the employees will have an obligation to provide. This process is from section number 207. So what is 207? Conducting of inspection and inquiry. Conducting of inspection inquiry states that employees officers, including former employees officers, have the obligation to provide information, explanation, documents and assistance to the best of their knowledge. While they are doing it, I, the ROC, will have the power to take copies and place identification marks. This is section number 207. But this all process started because of inspection as per section number. Rest of this entire chart is section number 206. Inquiry is also section number 206. This entire process happens under section number 206. This inspection logic as well as this inquiry process. But to help this inspection, the office employee has obligation and the ROC has an power. This is given under section number 207. So what is section number 206, sir? Give me the wording, give me the heading. Power to call information. What happened? I have the power, ROC has the power to send a written notice and call for information. Power to call for information. Once I've called for the information, I will inspect the books. So what's the wordings? Power to call for inspection, inspection of books. If I'm not satisfied with the inspection of books and conducting of inquiry. All three logics are forming part of section number 206 itself. Give me the wordings. Power to call for information, inspection of books and conducting of inquiry. After this entire process of inspection inquiry is completed, I'll prepare a report. This happens under section number 208, report on inspection. We'll give it to the central government along with our recommendations. But while this inspection inquiry is happening, if I am of the opinion that documents might be destroyed, mutilated, altered, falsified, secreted, I'll have a power to get approval from the special court and search and seize your documents under section number 209. I hope you guys are comfortable till here. Now comes the process, section number 210. 210, wait a second. This is 206, 207, 208, 209. I hope you'll be able to now go through the material and understand all those words very, very clearly. Now let's jump into the second stage of this chapter, which is going to talk about investigation process. How does the investigation start? And we were just discussing about it. Investigation is done by whom? The central government. If the central government is of the opinion, that investigation into the affairs of the company is required, they will appoint one or more inspector. I know the word does not make sense. He's not called as investigating officer, he's called as an inspector. That means that the inspector can conduct inquiry and the same inspector may also be appointed to conduct an investigation also. But who will appoint him? Central government. The wordings are, the central government, if it is of the opinion that investigation into affairs of the company are necessary, the central government will appoint one or more inspector. If the company is very large in nature, doing business in a complex basis or doing business at a very voluminous basis, I'll appoint 2 inspectors, 3 inspectors, 5 inspectors. If the business is very small, I'll appoint 1 inspector. Wordings are, I'll appoint 1 or more inspector. But the point is, entire section 210 is very simple. Investigation into affairs of the company done by the central government if they believe it is necessary. They'll appoint a person called as inspector, but the only question is, when will they do it? When will they appoint it? Based on the report received from the ROC or inspector. Who gave the report? ROC or the inspector gave a report under section number 208. Based on the report, if the central government is also satisfied investigation is required, they'll pass an order under section number 210. That's the first option. Or on the basis of a special resolution passed by the company. Company states that somebody has done something wrong on the company. Please do conduct investigation so that company will be protected. We passed which resolution? Special resolution. Forget about somebody asking me to conduct it. If the central government felt it is required for public's interest, central government will pass an order on its own, suo motu, in whose interest? Public's interest. These are the 3 cases in which central government may pass an order if they are of the opinion that investigation into affairs of the company is necessary. But last point is something where the central government shall pass an order. Why? Because central government's opinion is not gonna be important. It was the opinion of the NCLT or the court. And the court or this NCLT passed an order on the central government asking central government to conduct investigation. Then the central government shall appoint 1 or more inspectors as may be required to conduct investigation based on the order passed by court or NCLT. The court or NCLT may pass an order under section number 213. It will make sense within next 5-10 minutes. Section 213 gives power to the NCLT to pass an order on the central government to conduct investigation. Then the central government will come under section number 210 and appoint the inspector for conducting investigation. I hope you are not confused, Amma. NCLT passed an order, but NCLT will not do investigation. NCLT wants investigation, but they'll pass order on CG. CG will pass an order for appointing inspector to conduct investigation. I'll show you a chart in a bit. Wait. Then we have section number 212. 212 states that we are still investigation being done, but investigation done by a separate high level authority called as SFIO. What's the full form, guys? Serious Fraud Investigating Office. Section 211 talks about establishment of SFIO, not part of a syllabus. Then investigation is done under section number 212. Who does the investigation? SFIO. But SFIO is also established by the central government. They're also working under the central government, but they'll not be appointed for every small case of investigation. They'll be appointed only when there is a serious fraud, when there is high level of category involved, or public, huge level of public are involved, or fraudulent activities are involved, which are complex in nature. We'll give it to the SFIO. Now, so combining both the sections together, can I say central government has two options? Either central government, if it feels necessary that investigation is required, they may appoint a inspector under section 210, or they may appoint the SFIO's director under section number 212 to conduct investigation. They're copy paste on the basis of report, or on the basis of special resolution, or in the public's interest, they'll pass an order. This is all may or shall. May. Last point is changed. Last point states that it is not based on the NCLT, it is based on the Department of Central Government or State Government. Any Department of Central Government or State Government got a doubt that something wrong is going on in the company, they inform it to the central government, and central government will start passing an order for conducting investigation as per section number 212 by the SFIO. Now, if you link all the sections together, I want the linking very, very clear here. Can the NCLT pass an order? Yes, under section number 213. Once the NCLT passes an order, the central government has to appoint on a mandatory basis under section number 210. That means 213 section is linked with section number 210. But the NCLT under section 213 cannot oblige the central government to appoint SFIO. But they can oblige the central government to appoint an inspector under section number 210. Chalo, start. If you have given such fancy name to this guy called as SFIO, obviously he should also be given fancy powers in the process. What are the fancy powers he has? If an SFIO is appointed, the point is very clear. I am superior. SFIO is superior than every other investigating agency under the Companies Act. If any other agency has already been appointed or already has initiated the investigation process, you should immediately submit all the documents you have collected till date, submit it to the SFIO and vacate your office, so that I will not be interfered, disturbed in the process of my investigation. I want a plain ground, plain playing field, so that I'll do whatever I want to do. If investigation is already initiated, all the documents have to be transferred to the SFIO, and SFIO will complete the investigation process. Until SFIO completes it, you're not going to come back. You have to stop your investigation process. But second option, once SFIO has been appointed, say investigation takes, assuming say 3 months here. In this 3 months period of time, can any other investigation agency be appointed? No. So, sir, if investigation agency is already appointed, you vacate, give me relevant documents. During a period which I am conducting investigation, no other investigating agency should come and initiate the process. That's how importance we give to the SFIO. Now, forget about importance. Let's start conducting investigation. Who will conduct the investigation? SFIO. That means what's going to happen? He'll come and do the inspection inquiry, similar process, come and collect evidences. To collect evidences, he'll speak with the employees, officers, past employees, former employees, officers. We have seen these words somewhere, right? Copy pasted, repeated. All the employees, officers, and including the former employees and officers of the company have to provide such, give me the wording, such explanation, documents, information, all the assistance for the investigation, not inspection inquiry, for investigation by the SFIO. Now try understanding the next set of logic. Say the investigation process happens, say assuming in our example 6 months, right? In the first few months or in the first few days, say assuming in the first 10 days, I got to know that one of the director was actually involved in fraud. If it is proven that he was actually involved in fraud, has my investigation completed? No. It will take more time to collect all the evidences until I go to the court of law. Until I go to the court, I'll have more time required to collect all the other evidences. But as of now, in the first 10 days, I got to know that you have already done a fraud. If I don't take an action upon you immediately and wait till my entire investigation is completed, you might abscond. You might falsify the documents. You may secret up the documents. You might change the evidences. You may tamper with evidences. Logic states that the SFIO need not wait for the entire process to be completed. He can give something called as interim report. Once the entire investigation is completed, he'll give something called as final report. And once this report, obviously we are working under whom, we are appointed by whom, we are working for whom, central government. So we'll be reporting, we'll give an interim report or even the final report to whom, central government. Then central government, after examining the report you have given, will pass an order asking the SFIO to initiate the process, take the process for prosecution, take it to the next stage, give it to the court. Court, after after reading all these evidences, will pass an order and take action upon you. I hope you have now imagined the entire story from routine check to the court and passing order also. I hope you have understood it. Routine check, inquiry, investigation, after investigation, evidences to report to the court, and court will pass an order. I hope this is clear. Now section number 213. A complicated point, section number 213. You'll be able to understand it with this small chart we have. Wait, let me find it. Section number 213. If this chart is understood, 90% of section has been completed. So what's going to be the process? Who passes an order? NCLT passes an order under section number 213 on the central government, asking the central government, sir, we believe that there is requirement of inspection inquiry. There is requirement of investigation. Who believes it? NCLT is of the opinion that investigation is required. They'll pass an order under section number 213, not for appointing inspector, but pass an order on the central government, asking the central government to appoint one or more inspector so that he will conduct investigation. But if you observe the logic careful, can I say this process happens under section number 210. Last point, shall appoint a inspector if it's an order passed by the court or tribunal. Right, come back. But point is, this is your section actually done, till here. Your section is actually done. But point is, when will the NCLT pass an order? The NCLT will pass an order under section number 213 in two circumstances. Either based on an application made by a specific member. I don't want to complicate it, but this is linked with operation mismanagement. If you guys remember operation mismanagement, this wording should become a lot more easy for you. If you have not done the operation mismanagement, go read it once and come back. This section will make more sense. Otherwise, complete this session, inspection inquiry, then go read operation mismanagement. That linking will have more sense. Remember, we have closely spent 1 hour on the class to have this linking of operation and compromise. But this is revision. I'm not going to go much deeper into the linking process. But give me the wordings. When will the NCLT pass an order? On an application made by a specific member or on a suo motu basis. If I feel it, I'll pass it. But on application made by specific member, what do you mean by specific member, sir? It will be divided into two parts. Either company having shared capital or company having no shared capital. If the company is having shared capital, you must be you guys are combined together not less than 100 number of members, or you're a single member or two or more members holding not less than 10% of the total voting power. 10% of the total voting power. Or if the company is not having share capital, having no share capital, not less than 1/5 of the total number of members. If these set of people come with a complaint to the NCLT, NCLT will pass an order. Give me the wordings. Pass an order under section number on the asking the central government to. Then the inspector will conduct an investigation. Very good. Then coming to the suo motu point. Who passes an order? NCLT. But when will the NCLT pass an order? On a suo motu basis. When will the NCLT require the need of passing this order? There are 4 circumstances in which NCLT believes that passing order is required under section number 213 on a suo motu basis. On suo motu basis, if the following circumstances suggest are existing in the company, I'll pass an order. Who? I in the sense who? NCLT. When will I pass an order? The first case. The person who is concerned in the management of the affairs of the company. The person who is concerned in the management. The person who is appointed as a KMP. The person who is appointed as a managing director, manager, whole-time director, high-level authority. The person who is managing this business is guilty of fraud. If this guy is guilty of fraud, there's a high chance that he might have misused his position in the company to conduct some fraudulent activities in the name of the company also. Investigate the company. Give me the wording, Satama. the person concerned in the management of the affairs of the company is guilty of fraud or iterance or misfinancing or negligence, any fancy name you use it. If he has done wrong, there's a chance that company might have also done wrong. Investigate the company. That's the first point. Second point, the company was, forget about the person, the company was even incorporated, formed for conducting fraudulent or unlawful purpose. Why was the company incorporated? Incorporated for the purpose of fraudulent or unlawful purpose. Or the company was not formed for unlawful purpose, but the company is conducting the affairs in a manner which is intended to defraud somebody. The intention of the company while conducting the affairs is to defraud. Defraud whom? Whatever comes to your mind, right? Creditors, debenture holders, members, company, public, or fraudulent activities, unlawful purpose, whatever oppression activities you are doing, I'll have a right to start instigate investigation process under section number 213. Our last point has been kept as a vague logic. A vague logic stating that if the shareholders of the company, members of the company, owners of the company have not been given the basic information they are expected to receive from the company, they have not been given a chance to inspect register of members, they have not been given a chance to inspect the minutes of the general meeting, they have not been given a chance to inspect the financial statements, they have not been given a chance to come and understand the transactions entered with related parties. If the members of the company have not been given all information relating to the company which is reasonably expected to be given, this is important word, not all information which is reasonably expected. Why, sir? What happens or what discussions happen in the board meeting are confidential, which will not be allowed for inspection with the members. Books of accounts are not allowed to be inspected by the members. There are certain information which are confidentially kept within the company which are not even allowed for the members. If you don't provide that information, it's justifiable, sir. But those information which are reasonably expected to be given, if they are not given, then you are hiding something in the company. I'll start investigation process under section number 213, but linked with section number 210. I hope the linking process is fine right now. Then jump into section number 219. Very interesting topic. It's going to probably take maybe 15-20 minutes from here, probably an estimate of 15-20 minutes. I hope you guys are still attentive and having proper concentration on the process. A lot more important sections are going to come out. Take a deep breath, guys. Hold it for 2 minutes. So let's start section number. Release it. Section number 219. 219 states that if an investigation has already been passed under section number 210, 212, 213, where investigation has been already passed under 210 or 212 SFIO or 213 by the NCLT, there's a chance that, try understanding it, the inspector was appointed to investigate into the affairs of a particular company. He can go demand information, demand documents, demand explanation from this company. But while he is conducting investigation to this company, he felt that there was a company which is linked with this company, and there's a chance that they both might have combined together done a fraud, combined together done non-compliances. Now, I'll not be able to complete the investigation of this company satisfactorily unless I will be able to also conduct investigation of that other related entity. Hence, the inspector, if he is of the opinion it is necessary to investigate into the affairs of the other body corporate to satisfactorily complete the investigation of the company for which he is appointed. I hope the sentence is clear. The inspector, if he is of the opinion investigation into the affairs of the other body corporate is necessary to complete satisfactorily the investigation of the company for which he is appointed, he has the power, give me the heading of this section, power of the inspector to investigate into such other company as well. But while investigating into such other company, I have to get the prior approval from the central government. Entire section is done, Amma. What happened? You have already been appointed as inspector either under section number 210 or 212 or under section number 213, but the investigation under these sections can be satisfactorily completed only when you investigate into other body corporate as well. But you can investigate the other body corporate, you have the power to do it only after obtaining a prior approval from the central government. After getting the prior approval, you can also investigate into the affairs of that other body corporate and submit a combined report for the process. Are you clear? But point is, when will it be called as related entity? When will it be called as other connected body corporates? There are 4 circumstances in which I'll call it as other connected body corporates. Try imagining it. First point states that A person talks with person, not body corporate name. A person who is a managing director or manager or employee of the company. There's a chance that the company is not doing fraud, the company is not doing non-compliance in the company's name, but it is being done in the name of the managing director or manager, or I have appointed the watchman of the company or any other peon of the company or any other small employee of the company as an binami. I'll investigate into the affairs of the managing director, manager, or even any other employee of the company. There's a chance that the illegal activities, the wrongful activities might have not been done in the company's name, but have been done in their name. They might have got benefit out of it. I'll check them, I'll investigate them so that I'll understand the company's wrongful activities in a better manner. A person who is at the relevant point of time acting or being appointed as an managing director, manager, or employee of the company. What the words you would remember? The person is acting as a managing director, manager, or employee. At what point of time? In the relevant period for which I'm conducting a investigation. But sir, I'm conducting investigation for the year say 2021. Say let's take an example. I'm an inspector. I'm conducting investigation for say assuming 22-23. I'm conducting investigation in the year 26-27, but I'm conducting investigation relating to financial year 22-23. You were acting as a managing director of 22-23. Okay, let's take as assuming say Akhil was acting as a managing director of 22-23, but he's not a managing director today. He resigned his office. Can I still investigate into him? Yes. Good. The wordings are the person who is or has at any point of time. Not exactly any point of time, during the relevant time. What's the relevant time for this particular example? 22-23. Now the words will make sense. Read it among. Where the person who is, today he is or he has, at what point of time? Relevant time has been appointed. Appointed as what? Managing director or manager or employee. There's a chance that he might have misused his position or done something wrong in his name. I'll investigate him. Or second point, where I'll not investigate in the person, rather I'll investigate into not to the company, but the company was being controlled by its holding company. The holding company might have done wrong. The holding company might have misused their position to control this company and do wrongs. I'll get a better picture of this company only when I also investigate into the affairs of the holding company. Or on the other hand, if I was appointed for the holding company, I can also investigate subsidiary company, or I can also investigate subsidiary of the holding company. What's the three categories? If this is your company, you can investigate the holding company, subsidiary company, or you can also investigate the subsidiary company of the holding company. There's a chance that this holding company might have controlled both of your subsidiaries and in a cluster might have done a fraud. Together might have done a fraud. They have increased the conducting of fraud. Then there's a chance that this company might also be involved. I'll conduct investigation of that company also. That's the second point. But it is not necessary that they have to be holding subsidiary now. If they were subsidiary at any point of time, they might have conducted it together. I'll investigate. Wordings are. I'm going through these wordings because they're complicated. You have to read it along with me. Well, I'll investigate the affairs of the other body corporate who is there today or they has in the past acted as a company's subsidiary or holding or subsidiary of the holding company. Next point, third point. Third point is very complicated logic. Let me hide some information. It will be easy for you. Sure. Think about it. There are two body corporates. There are two body corporates out there. Say assuming there are two body corporates, A Limited and we also have B Limited. Quick. We have A Limited and B Limited. I was appointed as an inspector, or you were appointed. Imagine yourself. You were appointed as an inspector of A Limited. And there was a person who was acting as a managing director or manager of B Limited. He was managing B Limited by acting as a managing director or manager. The same person who was acting as a managing director manager of B Limited is also acting as a managing director manager of A Limited. There's a chance that he is controlling both B Limited and A Limited, and by exercising his powers and positions in A and B, though the companies might not on paper be linked with each other, because of the linking from this person, they might have done something wrong. Add the wordings, think about it. I'll also investigate in the affairs of the other body corporate, which is managed by a person acting as a managing director or manager who is a managing director manager of the company. Have you understood it? Let me repeat it again. I will also investigate into the affairs of the other body corporate. I was appointed for A Limited, but I will also investigate into the affairs of the other body corporate, which is managed by a person acting as a managing director or manager who is a managing director or manager of our company. Then I'll conduct investigation into other body corporate as well. Slight extension of it. Think about it. What happened? A slight extension of the example. I'll investigate into the affairs of the other body corporate. Listen to the words. I'll investigate into the affairs of the other body corporate, which is managed by a person who is acting as a managing director or manager. But what happened is, he resigned from his office here and he joined our company as a managing director manager. Now, can I say he used to be in this company? He used to be in this company. Now he is no more a part of the company. He has resigned there and he has joined A Limited. Now, if he has joined A Limited, give me the wordings here. I'll conduct investigation into the affairs of the other body corporate, which was at any point of time managed by a person who was acting as managing director or manager who is now a managing director manager of the company. Have you understood it? I'll investigate in the affairs of the other body corporate, which is or has been managed by a person acting as a managing director or manager who is a managing director manager of our company. Or on the other hand of it, this can happen in this way. He was originally a managing director manager of A Limited, but he resigned from this office and he went back to B Limited. Now give me the wordings here. I'll investigate into the affairs of the body corporate, which now, should I use the word is or has or was? Should I use the word is or was? Is managed by a person who is managing director manager who was a managing director or manager. That means, basically speaking, he was a managing director of that company back then and he's a managing director today. I'll investigate that company. Or he was a managing director today in this company. He's not a managing director today, but he was a managing director in the past and today he is managing director of another company. I'll investigate that company as well. Basically, I'll investigate all the companies in which we have this common managing director topic. Now read this entire sentence properly, you'll understand it. A body corporate which is, if I'm talking about other body corporate, imagine the chart we have drawn. This is talking about B Limited. Other body corporate which is or has at any time being managed by a person as a managing director or manager who is today or he was acting as a managing director or manager of the company. If you're still facing difficulties in the words, go back and watch the last 2-3 minutes, twice, thrice, 4-5 times, you'll understand it. Make sure that the wordings are very comfortable. You have to present the words, otherwise you'll not get marks. The suggestion answer will not match, otherwise you'll not get marks out of it. Last point is a vague topic, stating that I'll also investigate into the other body corporate whose board of directors, whose management are accustomed to act as per the instructions given by this director or this company. That means that company is indirectly controlled by me, even though I don't have the topic of holding subsidiary. I'm able to control such company. If I'm able to control such company by giving instructions, I will be allowed to be considered as related companies. Then the inspector will be allowed to inspect into such other body corporate as well. That's your section number 219. So if you observe the investigation process we have investigation under 210, 212, 213 and 219. Then the last investigation we have under section number 216. To stop Binami transactions, section number 216 was introduced to understand who is the true owner of the securities of a company. There might be a lot of situations where the person in whose name the securities are held will not be the actual true owner. There will be a person behind him who is controlling him as a puppet and using all the benefits of the company. We have to now conduct investigation not into the affairs of the company. If you observe all the other sections we have done, let it be 210, 212, 213 or 219, we conducted investigation into the affairs, the business of the company. But 216 states that not into the affairs of the company, will conduct investigation into the ownership of the company. Will decide the ownership of the company. Will try to find the person who has true ownership of the company. Will try find the true person behind the company, hiding and not showing himself. Benami transaction, illegal activities, wrongful black money laundering might be possible. I'll stop it by conducting investigation. But I'll investigate to find whom? True person who is financially interested. I want these keywords, Amma. A person who is financially interested in the success or failure of the company. Where is he interested? In the success or failure. If the company is getting successful, he is also getting personal benefit. If the company is losing, he is also losing. Say, assuming he incorporated a company and all the raw material of our company is being purchased from this company. If the company is successful, this company is also successful. If the company loses, this company might also lose. There's a chance that there might be connection with them. I'll try to find that person who is financially interested in the success or failure of the company, or a person who is not controlling the company based on finances, but he's not linked with finances, but he's trying to control the company. Say, assuming Mukesh Ambani, he doesn't want extra 10 rupees of finance. He wants control over entity. He wants control over organizations. So what will be the wordings? A person who is able to control or significantly influence the policy making of the company. What's the wording, Sama? A person who is able to control or significantly, materially influence the policy making of the company. Then he might be a true owner. I'll check. I'll investigate to find whether he's a true owner or not. Or last point is given as a vague logic. A person who is having beneficial interest in the shares. You're not a registered owner, your name is not entered in the register of members, but you're having beneficial interest in the shares, or you have been classified as a significant beneficial owner under section 90 of the Companies Act. Significant beneficial owner, SBO. A person who is holding at least 10% of the beneficial interest of the company is called as what? Beneficial owner, but significant percentage, significant beneficial owner. To find these persons, I'll conduct investigation under section number 216. So investigation can happen either of the 5 cases. Original 3. This is supporting the remaining 3. Or if I have to segregate in this manner, this is for affairs of the company. This is for ownership of the company. Give me all sections, Amma. Section number 210. Investigation into affairs of the company. Second, 212. Investigation by SFI. 213. Investigation into affairs of the company by NCLT. 219. Power of the inspector to investigate what? Related companies. Then we have section number 216. Investigation into ownership of the company. Make sure that you have clarity on all the investigation sections properly. Then, linked with section number 216, we have section number 222. What does 222 states that? The NCLT has a power to do a certain activity to help section 216 investigation to happen properly. When, sir, what happens? Listen carefully. If investigation under section number 216 has been drafted, and we started investigation into the ownership of the company, and this guy continuously transfers the shares from one person to another person, it will be difficult for me to complete investigation. They pass investigation on one company, one person, and this person continuously transfers the shares to multiple people. As soon as I come close to investigation process, it transferred it to some other person. So it will be difficult for me to complete investigation process. Then the logic states that NCLT has the power, if it believes that investigation into the affairs of the company to find facts about the securities is necessary, and this could not be done unless they put restriction on the shares, restriction on the transferability of shares. They'll pass an order. They'll pass an order imposing restriction for a period not exceeding 3 years. So can the NCLT pass an order for 6 months? Yes. 2 months? Yes. 5 months? 1 year? 2 years? 3 years? Yes. But it shall not exceed 3 years for a maximum period of 3 years. But when will this NCLT start this process of restriction? When I require it under section number 216. After investigation is done under section number 216 or based on a complaint made by any other person. Some other person told that, sir, there is something wrong in the securities, you have to check it. I'll put restriction. Or investigation has already been initiated under section 216 and the inspector is it is becoming difficult for the inspector to do it under 216. I'll help him out by passing order under section number 222. But remember, this is not central government now. NCLT, tribunal will do it. That's your 222. Because of the investigation under 210, 212, 213, 216, 219. I hope section numbers are comfortable for you. Because of this inspection, during this inspection process, the inspector will obviously come and do this investigation process, questionnaire process. I'll come and ask questions, collect information from all of your company, especially from your employees and officers. If the employee officer have given such information to me, there's a chance that because of the fact that the employees have given information to me, you'll start targeting him. You'll start targeting him and giving this. You might dismiss him, remove from his office, discharge him from his office, or you might suspend for a certain period of time, or you might change his employment in such a manner it is detrimental to him. We shifted him from India. We shifted him to Africa as an deputation for next 10 years. He's losing his position in the company properly, or we are punishing him by dismissing him, demoting him, stopping his promotion, stopping his bonus amount, stopping the amount of bonus, reducing the amount of bonus, by targeting him. Then NCLT states that if you, the company, target the person who has given information and helped investigation, nobody in the future will come and give information. If nobody gives information, investigation process will be difficult. Then we have to protect such employees under section number 218. And I know the section numbers are not discussed in order, and you have to discuss them in the same order, only then you'll understand. Whatever our material has, the order of sections, discuss and read them always in the same order. That's when you'll have a clarity on the section somehow. Protection of employees. Will protect the employees. Will protect the employees, stating that they cannot be dismissed, they cannot be suspended, they cannot be punished. But if I give them a complete immunity, absolute immunity, the employee will take advantage of it. Employee will intentionally do something wrong, and because he knows that he cannot be removed, he'll intentionally do something wrong in the company. Then NCLT states that I don't want the employee to misuse it, but I don't want the employee to suffer. If you want to dismiss him, you can dismiss him. You can dismiss him, but with the prior approval of NCLT. Come make an application to NCLT. If the NCLT approves it, you are allowed to do it. But NCLT does not actually give you approval. The NCLT will, within 30 days, if they feel it is wrong, they'll object it. If the NCLT does not object it, that means they have assumed to be, deemed to be given you approval. How many days of time? NCLT has a time limit of how many days? 30 days. If within 30 days nothing is received, it is assumed that it has been approved. If it is approved, can I dismiss him, sir? Yes. Can I remove him, change him, punish him? Yes. But if the NCLT objects it, can I remove it? No. If objections are received, and these objections, the conditions put by NCLT are not satisfactory in nature, whosoever the aggrieved party might be, let it be employee or the company who is not satisfied with the objections given by NCLT, they may make an appeal. Make an appeal within 30 days to the appellate tribunal, NCLAT. Who will make appeal? Company or the employee who is not satisfied with the order passed by the NCLT will have a chance to make an appeal with the NCLAT within 30 days. And once the NCLAT passes an order, it will be binding on all the parties. It will have to be followed by every party. NCLT, employee, and as well as the company. Everybody will be binding on such order passed by NCLAT. That means that indirectly means that there is no further appeal. We cannot go to Supreme Court for this small matter. Last 3-4 sections, very procedural aspect. I know the estimate has gone wrong for our time, but give me 5-10 minutes. It should be actually done. 217 talks about if you have listened to 206 to 209, this all should happen very smoothly. Very small topic is left. Start the process. While the investigation is happening, all the officers of the company, employees of the company, including the former employees and officers, will have an obligation to provide all their assistance to the investigation process. They have to preserve all the books they have in their custody and provide it, give it to the inspector along with all the assistance that is possible to help the inspector conduct investigation. So can I say we have discussed this already? Where? Section number 207, conducting of inspection inquiry. But this time what are we doing? Conducting of investigation, the procedure, powers, etc. of inspector. Sorry. Sorry. Next point. While this investigation is happening, remember this, we have already discussed this. This is a negative mindset. You have done something wrong. I'm trying to have evidences collected. Can I seize the books? Absolutely. Without any approvals, anything, I can seize the books. If the same question was asked under inspection inquiry, can I seize the books? No, unless the books are likely to be destroyed, mutilated, altered, falsified, secreted. Then with the prior approval of special court, you can do it under inspection. But here, It is proven that you're doing something wrong. I'm just collecting information and evidences for it. I have a right to seize your books without any orders, without any approvals from the special court for a period of 180 days. Or if the 180 days is not sufficient, copy paste it. 180 days is not sufficient. I, by written agreement, written order, will further extend it for a further period of 180 days. After that, I'll have to return the books back. But while this investigation is happening, the inspector will have all the powers as if he is a civil court. All the civil court powers will be available with the inspector. That means he can summon you, ask you to come to the office. He can come and search for information. He can discover the documents. He can ask you to produce documents. He can inspect the books of accounts. He can inspect any other person or people or documents in your office. He can ask you to come to the office and discuss matters, record you and have it as an evidence in the court of law. Summon a person and examine them on oath. Bhagavad Gita, Bible, Quran, or Constitution of India. Oath, take an oath on and start examining that person. But can I also visit the office? Last point, Amma. Can I visit the office? Yes. Imagine this. If actual investigation started, there's a high chance that you have done a criminal activity. Imagine this. There's a huge office where they have done criminal activities. They're criminals. They have done fraudulent activities. They have illicit activities. They have done illegal activities. They have black money. They have done criminal activities in the past. If this guy inspector alone goes for inspection of documents, he'll go, but he'll never come back. You have seen movies such as Raid, or in this inquiry process, Raid movie or Raid 2, or you might have seen these movies. Answer this. Will he go alone to the process? If he go alone, it's a threat for his life. He'll never come back. Because we are stepping into the compound of those people who have done criminal activities, who have illegal money with them. I'll take assistance of the local police department and the enforcement departments to come along with me, state government, central government, etc., to come along with me to properly conduct investigation at their offices. I'll take the assistance of the police department or the statutory authority to come along with the inspector for the purpose of this investigation process. 220 is copy paste. You should be able to answer it. Sir, while I'm conducting investigation, if the inspector is of the opinion that the books of the company or the concerned persons are likely to be destroyed, mutilated, altered, falsified, secreted, can I have a right to seize? Originally itself, I have a right to seize for 180 or further 180. If they are trying to be destroyed, will I be able to seize them? Obviously. For how much period will I seize them? If you go for section 209, they can seize it only, even though they're supposed to be destroyed, they can be seized only for a period of 180 days. But here, if it is investigation period, I can seize those works for indefinite period until the conclusion of the investigation. But sir, until conclusion of investigation, this might take number of years maybe. Until that point of time, can the business still carry on business? If the company is still allowed to carry on business, how would they be able to carry on business until they have books? I'll have the original documents. If you want, I'll give you the chance to take copies. What happened in the inspection? I'll take copies, I'll give you the original documents back. This time, because you have done wrong, I'll have the original documents. You take copies if you want. The inspector may seize the books, and while seizing the books, he may allow the company to take copies or extracts of the documents. But I'll seize the books for a indefinite period until the conclusion of the investigation. Once it is concluded, I'll submit everything to the company back, and evidence will be submitted to the court for the action to be taken. Now, action under inspection report is 224. Report under section number 223. So, what is 223? Report on the investigation. What was section 208, Amma? Report on inspection. 223 talks about report on investigation. Once you got the investigation report, if the investigation report after receiving it is appearing to the central government, if it is appearing to the central government that you have actually done something wrong, you have done fraudulent activity, you are guilty of something, you have done non-compliances, you have done criminal activities, whatsoever wrongful activities you have done, it is been appearing. If it's in the opinion of the central government based on the report the inspector submitted, then central government states that I'll take an action. I'll take an action on such company, asking the company to pay damages for all the losses you have suffered for the criminal activity. The central government will have a right to prosecute such company and ask the company to recover recover damages from such company. But sometimes the properties which the company holds today might have been purchased because of illegal activities. I'll not recover damages, I'll recover the entire property. I have a right to recover what? Two things, Amma. I'll have a right to recover what? Either damages or I'll have a right to recover the property. While the property is being recovered, try understanding it, property will be now held in the name of the company. While the property has been recovered, there's a chance that if the central government feels that entire company is fraudulent, I don't want this company to exist at all, they'll pass an order for winding up of the company as well. All these orders can be passed by whom? Central government. But during this entire process, for the process of investigation, the inspection, inquiry, or the order being passed, prosecution will incur a lot of cost. What to do with the cost is given here as well as section number 225. 225 was asked as a 7 marks question. I know it is not worth 7 marks question, but it has been asked for 7 marks question. What can we do? This is your section number 224, action based on the report. Then last point number, very simple logic, costs. Who will bear the cost first? So obviously, initially the cost will be bared by, for the first instance, it will be bared by the central government. But central government states that if it is been proven, I want the cost to be reimbursed. The money, whatever cost I've incurred for this entire process of inspection has to be reimbursed. But so reimbursement is good. Central government will get money back. From whom will I get reimbursed? I'll get reimbursed from the person who got convicted or prosecuted under this process. A person who got convicted. But there are chances that person might have been held guilty but not always been convicted. Then I'll collect money from the person who was ordered to pay damages. Are you getting the point, Amma? First person, the person who got convicted. Second case, the person got not convicted but he was guilty of the offense. He was asked to pay damages. I'll collect from them. Or forget about the person, I'll collect from the company against whom this order for investigation was passed. Investigation proceeds were initiated. I'll collect from the company from whom proceeds have been collected. If I'm collecting it from the company, that amount which I'm collecting as reimbursing as expenses will be considered as a secured debt of the central government. That means they will be creating a charge and they will be considering their charge as a first charge. I hope you guys remember it from your inter syllabus. What do you mean by first charge? If the asset is sold, the central government will have the first priority to settle the cost. To settle the cost of the process, then the rest of the liabilities will be settled off as second charge, third charge, and fourth charge. Central government will be put in the first priority. They will consider themselves as first charge on the property of the company. Section number 225. That's your entire process. You have to be very careful with the introduction part and also careful with all the investigation process. 210, 212, 213, 216, 219. You have to be comfortable with, and you should be able to be bifurcating which is required for which category and how the procedure works. If that is there, the chapter should be easy enough, Amma. Not the most important chapter. I'll not sugarcoat, or I'll not tell it as one of the most important chapter, but will be important, will be second priority, I would say. But end of the day, Companies Act as a whole is important. You can't skip any chapter in Companies Act. Entire Companies Act is not negotiable. For that matter, entire syllabus is not negotiable, but give importance to this chapter as well. That's all for this particular session. We'll have a next chapter discussed in the next topic, next session. Thank you guys. One of the important chapters of your Companies Act, accounts of company and audit and auditors. Usually, there will be one mandatory question from either of these two chapters, most probable than not from the accounts of company chapter itself. Accounts of company is your chapter number 9 of the Companies Act, which actually ranges from section number 128 to 138. But not all sections are part of a syllabus. There are few sections which are not being covered by ICMA syllabus for the final level. But before we get into the chapter and start understanding, the approach for this chapter will be slightly different. We have to first understand the background. We have to understand the flow of this entire chapter. Once the flow is properly stitched together, then we can understand each point in a little more detailed aspect. Try staying with me for the first 5 minutes. This is very, very important to understand the reasoning behind this act. So starts with the logic that the process actually starts with sole proprietorship. When we had sole proprietorship, how many owners were there? One owner. And the single owner was used to bringing in finances, and he was also used to manage the finances. The second aspect we had was we evolved from sole proprietorship into a partnership form of a business, and the same story continued here. The partnership firm also brought finances from partners, and the finances brought was also managed by the partners themselves. Because of the fact that the persons bringing finance and managing finance were one and the same, there's no need of reporting, there's no need of accountability, there's no need of maintaining transparency, there's no need of informing or passing on the information to another person. But The problem starts arising when it comes to the topic of Companies Act. Companies Act states that the company's procedure is being drafted in such a manner that the finance is brought in by the shareholders, but the finance brought in by shareholders will not be managed by shareholders, will be managed by the board of directors, the experts of the company. While these fellows are managing the business activities, they know where, how, and for what purpose the money has been utilized for. But who doesn't have knowledge about it? Shareholders, and shareholders are curious to know what's happening inside the company. They're not meeting on a yearly basis, they're not meeting on a daily basis, they're meeting only once in a year in the annual general meeting. They want to clearly know what's happened in the last 1 year. They also want to give you directions on the what to happen in the next 1 year. They want information about the company. Then comes the board of directors and stating that, so whatever that happened in the last 1 year, we have been maintaining proper records of it and we have to report it. Problem is, the books of accounts of the company which have been prepared are not something which are understandable for shareholders. Don't expect general shareholders to understand journal entries. Don't expect them to understand trial balances. Don't expect them to understand ledger accounts. Because of the fact that they don't understand this entire books of accounts, we'll summarize the books of accounts and call it as what? Financial statements. And the financial statements have to be reported to the shareholders. That's where the story starts. The story starts from preparation of financial statements. The financial statements are prepared for whom? For the shareholders, so that they understand the company in a better manner. They understand the where money, how money, and for what purposes the money has been utilized for. It is prepared for, give me the logic of it, it is prepared for whom? Shareholders. But it is prepared by whom? Not board of directors. A lot of people think that it is prepared by board of directors. No, it is prepared by the management. The accounting department does it, but the accounting department might have done it physically speaking, but it is a responsibility always of the board of directors. So conclude this. Financial statements are prepared for, but it is prepared by the management, but it is the responsibilities of the board of directors. But we cannot out of the blue, by a snap of a finger, we cannot prepare financial statements. Some financial statements are nothing but a summary of your original books of accounts. So what was the process? Shareholders stated, sir, we don't care what you do inside the company, we want financial statements. We want a proper reporting of the company. But to prepare financial statements, we first have to maintain what? Books of accounts. So the process starts from books of accounts, but the story, the logic starts from financial statements. But to prepare financial statements, we have to first prepare books of accounts. Did the shareholders ask you books of accounts? No, sir. Shareholders have asked you only the financial statements. But shareholders, because the financial statements were required to be prepared, the board of directors had to mandatorily, indirectly maintain books of accounts. The books of accounts are prepared for board of directors, which will facilitate them to prepare the financial statements. We are not preparing books of accounts for shareholders. They are my books, the board of directors books, which are prepared so that it will help me to prepare what? Financial statements. Prepared for the board of directors, again prepared by whom? Not me, management. Prepared by the management and responsibility of the board of directors. But not books of accounts. This is not where the process starts. Before books of accounts, we have to maintain something called as books and papers. What is it called? Books and papers. What do you mean by books and papers, sir? Everything of the company which is in a recorded format, either in writing or electronic, will be called as books and papers. Minutes of the company, vouchers of the company, registers of the company, books of accounts of the company, everything will be called as books and papers. Out of all the books and papers, if I segregate those things which are related to finances, it will be called as books of accounts. Then from the books of accounts, if I summarize them, I'll be calling it as financial statements. I hope this is very, very clear. Take a screenshot of it or write it and read it once or twice. Have a clear-cut clarity on this. Lot of provisions under section 128, 129 or section number 138 are drafted based on this particular paragraph. So have to have a clarity on this logic. Then comes the chapter. How do we go through this chapter, sir? The books of accounts have been prepared. Who prepared it? Very good. Management prepared it. Whose responsibility was it? Board of directors. Prepared for whom? Board of directors. They belong to whom? Board of directors. But we summarize those books of accounts and we then prepare what? Financial statements. Once the financial statements have been prepared, to make sure that these financial statements are giving a true and fair view, to make sure that these financial statements are comparable with other companies out there in the market, we have to prepare with proper standards. We have to follow all the accounting standards notified under section number 133. Once the financial statements have been prepared by the management, the board of directors will have to verify it. So why do we verify it? We cannot believe the board of directors. That's the reason we appointed whom? Stat auditor. But the stat auditor states that if at all there is something, some kind of deviation happened in the financial statement, they start blaming whom? But sir, I am innocent. I've never done something wrong. The management prepared it wrongly. How would I know about it? Then logic comes and states that the board of directors have to verify the document before it is given to the auditor. So who has to verify it? Board of directors. But what is the proof that you have verified, sir? After verification, put a signature on it. A signature will confirm that you have already checked the document, you have verified the document, you have accepted the document, approved the document, then you are giving it to the auditor. It is given to auditor after approval or before after approval. Then this verification has to be done. But the problem is, board of directors are not experts in audit. Board of directors are not expert in accounting. Board of directors are not experts in financial statements. They are not experts in company side. They might be experts in operations. They might be expert in sales. They might be expert in marketing. They might be expert in purchases. They might be expert in other categories of the business, but not about the company side financial statements. Then we'll appoint an internal auditor for the purpose of verifying documents on behalf of the board of directors. Internal auditor is appointed by, working for, he's working under, he's working as per the instructions given by, he can be removed by, his remuneration is fixed by. Everything regarding internal auditor is done by board of directors. Because it was originally supposed to be verified by board, but because board could not do it, they'll appoint a person called as internal auditor under section number 138. Once this process is completed, then we'll give it to the stat auditor. He'll conduct his audit process. Once audit has been completed from his side of the story, which is again the next chapter on audit and auditors. Once his side of the story audit has been completed, he'll give us an audited financial statements which are more reliable now. This audited financial statements, because he might have his opinion to express, he'll express in auditor's report. But we will respond back with the process with our own document called as board's report. And board report is also part of section number 134. Once all three documents are ready and correct information of the company, correct information about the company's past data is correctly available, then we'll give it to the every member. Every member will communicate to every member under section number 136. Then they'll come and attend the AGM. In the AGM, it is not mandatory that they have to accept it. They'll first consider. After considering, if they are satisfied with the information they have given, then they will accept it. But we'll use a technical word, consider and adopt. First, they'll do what? Consideration. After consideration, if they are satisfied, they will adopt. Once the document has been adopted by the shareholders, then ROC states that, guys, you might have manipulated these members to get the adopting of financial statements, even though there is something wrong in the document. I want to check it again. Come file it with the ROC. Section number 137. Give me the entire flow again, guys. First, what happened? We have prepared books of accounts. Then we summarize the books of accounts into financial statements. These financial statements were prepared in accordance with the accounting standards. Then they were supposed to be verified by the board of directors, but the board of directors did not have proper knowledge of it, because of which they appointed an internal auditor to conduct an internal audit. Then we gave it to the stat auditor. Stat auditor gave back two documents, audited financial statements and the auditor's report. Then we added our own document, board's report. Then we communicated every member of the company about all three documents. Members having knowledge about it have attended the AGM, considered it, and they have discussed matters and they have adopted it. Once the document has been adopted, then we'll go file it with the ROC. We'll file it with ROC in section number 137. The same story, add all section numbers also. Books of accounts under section number 128, financial statements under section number 129, accounting standards under section number 133, internal audit under section number 138, board's report and the signing of board's reports and financial statements under section number 134. Then we'll give it to the auditor. Auditor will conduct stat audit under section number 143. Then we'll come back and communicate all these documents to the shareholders under 136, and we'll conduct the AGM under 96, and we'll go file it with ROC under section number 137. This is your entire chapter for your CMA final syllabus. 128, 129, 133, 134, 136, 137 and 138. That's your entire syllabus for your CMA final gamma. I hope this introduction is fine. We have took close to 10 minutes on the introduction itself, but this will help you to understand the rest of the chapter very, very easily. If this is understood, chapter should become a lot more smoother for you to understand. I hope this was useful for us. Let's get back to the chapter and the wordings of the chapter more detailedly for each category. Let's start with the definitions of books of accounts, financial statements and financial year. Start with books of accounts. Imagine your books of accounts basically as your profit and loss account and your balance sheet. Let's cover both of the categories. First, we'll have all the assets and liabilities. Books of accounts includes all your assets and liabilities. Books of accounts includes your assets and liabilities. Balance sheet is done. Let's cover the P&L account. Out of the P&L account, which is the most important most important income and expense for you? Sales and purchases. All the sales and purchases of goods and services of the company. But so sales and purchases have not covered all the expenses. I'll cover them in the next point. All sums which are receivable and expended. Received and expended by the company will be called as basically all the other expenses of the company. And to add a cherry on the top, we have stated that if at all we are maintaining cost records, items of cost under section number 148, these cost records will also form part of the word books of accounts. Put everything together, assets and liabilities, sales and purchases, sum which is received and expended, and items of cost. Items of cost under section number 148 will also form part of this word called as books of accounts. Sir, but we don't end the story with books of accounts. We have to summarize them into financial statements. This is important. There are MCQs on this also. Financial statements is not a single document. It's a combination of 5 different documents. All 5 documents combined together will be called as financial statements. All 5 documents. What are the 5 documents? Sir? We have balance sheet, we have profit and loss account, or if at all it happens to be a non-profit organization, we don't use the word profit loss. We use the word income and expenditure, or we have cash flow statement, changes in equity, and we have explanatory statement. These are the 5 documents combined together called as financial statements. But sir, there is an exception. But don't get it wrong. Exception is not for financial statement. Exception is given only for cash flow statement. There are 4 set of companies which are not required to prepare they are required to prepare financial statements, but they are not required to prepare cash flow statement. That means for these 4 set of companies, the financial statements will include only how many documents? 4. Usual answer, financial statements is a combination of 5, but for these 4 companies, we'll have only 4 documents as financial statements. What are the exceptional companies, sir? We have OPC, small company, dormant company, and a private startup company which has fulfilled section number 137 and 92. That is basically filing of financial statements with ROC and annual returns with ROC. They have not defaulted under section number 137 and not defaulted under section number 92. If these are the 4 companies, they will be able to prepare it without the cash flow statement. Repeat the 4 companies for me. 1-person company, small company, dormant company, and a private startup company which has not defaulted under section number 137 and 92. Then we have the definition of financial year. Financial year means a period. It doesn't mandatorily have to be 12 months. It simply states that it is a period. It's a period which is ending on 31st March of every year. If it is ending on which date? 31st March of every year. Then the problem here was, if the company got incorporated on, say, assuming 20th of March. When did the company get incorporated? 20th of March. If I end the financial year on 31st March, for this 10 days of period, I have to follow the entire procedure of Companies Act. Prepare books of accounts, prepare financial statements, we send it to the all shareholders, we conduct audit procedure, we have to conduct board meetings, declare dividend, we have to conduct annual general meetings. All the procedures have to be followed just for the sake of 10 days. Essentially, where the first 10 days of incorporation, usually there won't be any much of transactions as well. Can I say we are wasting procedural formalities just for the sake of doing it? Then Companies Act says that we understand your problem. If at all the company got incorporated on or after 1st of January, when was it incorporated? On or after 1st of January, we understand for this little amount of period, we don't have to create the entire process of financial year. Hence, we'll extend for you. We'll extend for you and state that financial year will be ending on 31st March of the following year. Not this year, but the following year will end the financial year. But this logic arises only when the company is incorporated on or after 1st of January. Financial year will be ending on 31st March of the following year. Then we have an exceptional situation here where it states that if you, for the purpose of consolidation of financial statements, are facing difficulties, why did you face difficulties in consolidation process? Let me explain this process in a little more detailed basis. I might have explained it in the classroom here. Yeah, look at it. The financial statements of A Limited and financial statements of B Limited for the financial year 25 and 26. This is the scenario we have now. So what happened here? The financial statements have been prepared properly. One second. The financial statements of A Limited and B Limited have been prepared, but if at all you have a subsidiary company or you have a associate company, you have to prepare something called as consolidated financial statements. Now, I'm not going to go into details of why consolidation is required and etc. I hope you have clarity from your regular classes on that. If the financial statements are required to be consolidated, I have a small equation for it. Consolidated financial statements are nothing but separate financial statements, standalone financial statements of 2 companies combined together. Nothing but what's going to happen here is I'll have two financial statements in my hand. I'll have what? Two financial statements in my hand. And what am I going to do is I'm going to simply consolidate both of them and prepare a single financial statements. I have financial statements of holding company. I have financial statements of a subsidiary company. We'll consolidate both of them into a single place and we call it as what? Consolidated financial statements. For this consolidated financial statements, what's going to be the easiest way to understand it is, are we getting the word clear? What happened? We consolidated them into a single place. I hope you got the diagram right. This got consolidated into the financial statements of the company and they have been prepared. Prepared what? Consolidated financial statements of A Limited and B Limited. But sir, this was possible when both the companies are following a same financial year. But this difficulty arises when the subsidiary company or the associate company or even the holding company are located outside India. They're not following Indian law, they might be following a foreign law. If they're following foreign law, there's a chance that their financial year might be of a different period. If they're of a different period, now because of this different period, consolidation process will not happen properly. It will not merge with each other correctly, because of which the problem for consolidation arises. Then the Companies Act states that if at all you're facing problem for consolidation purpose, especially because you have a foreign subsidiary or a holding company or an associate company, then you come request the central government. The central government, after verifying if they're satisfied, they'll allow you to follow a different period as a financial year, so that it will be easy for you to merge the documents and have a consolidated financial statements prepared easily. Give me the wording, Sama. If at all you are a company which is having holding company or subsidiary company or associate company incorporated outside India, because of which they are following a different financial year, I am following a different financial year, because they are not able to match with each other, I'll allow you to go make application to the central government. Always remember, who is making application? The company which is in India is making application to the central government and requesting for a different financial year. Then central government may allow a different period as a financial year. I hope you have understood the logic. I know in the classroom, we for that single sentence have spent close to 1 hour of time to complete that logic. I'm not having enough time to complete it. This chapter is already hefty in nature. I'm not going to try expanding or prolonging the chapter. I'll try to make it as crisp as possible. I hope you guys understand. And again, if you have any doubts or any doubt on any or more clarity is required on any topic, feel free to drop a comment on this particular video. I'll respond back as soon as possible with a voice message or a text message as early as possible. I hope you guys understand the time constraint we are going through here, right? Section number 128. 128 talks about what? Books of accounts. If you see, there is a question on this already been asked in your exams. So be careful with this section number 128. What is 128? Sir, books of accounts. Not only books of accounts, we're not only going to talk about preparing, we'll also talk about preserving, we'll also talk about where to keep, we'll also talk about inspection, we'll also talk about the penalties imposed if you're not maintaining correctly. We'll also talk about maintaining in electronic format. Because we're doing a lot of things in this, we simply use the word books of accounts, etc. Books of accounts, etc. to be kept by the company. What is the wording, Sama? Books of accounts, etc. to be kept by the company. Now continue the logic here. The books of accounts, etc. to be kept by the company starts with a basic understanding. Let's prepare it. Which company is required to prepare it? Which company? Every company has to prepare books of accounts, books and papers, and financial statements. And they have to prepare which year, sir? They have to prepare it in every financial year. What's the keywords you have to remember? Which company? Every company. Which year? Every financial year. We must prepare or may prepare? Shall prepare. Must prepare the books of accounts. So preparing is also not only the agenda, preparing it in the right way is my agenda. We have to make sure that these are providing me a true and fair view of the affairs of the company. While they're providing a true and fair view, I have to follow two accounting principles out there: accrual basis and double entry system. There are MCQs on this. Can I prepare my financial statements in a single entry system? Absolutely no. Can I prepare my financial statements in a single entry system or cash basis? No. It has to be done only in a accrual basis, only in a double entry system. Once the documents have been prepared, the next question I'll ask is, where to keep it? Where should I place the books of accounts? Place of keeping books of accounts. It has to be. It is a legal document of the company. It has to be kept at the registered office. But remember, these books of accounts are belonging to the board of directors. They're prepared for the board of directors. They're the responsibility of the board of directors. Because the shareholders don't have a right on this document, logic states that it can be kept at any other place as decided by the board of directors, whatever they feel necessary, they'll do it. Original answer, where should I keep it? At the registered office. But sir, can I keep it outside the registered office? Yes, absolutely. But who has to decide it? The board may decide to keep it at any other place, but it must be within India. It cannot be outside India. You cannot maintain books of accounts in North Korea, in Pakistan. You have to maintain them in India, but it will be decided by whom? Board of directors. But say if the board of directors decided to keep it some other place, how would the authorities know? How would the ROC know? ROC has the right to come and inspect your books of accounts, investigate and inquire your books of accounts. You have done in this chapter, assuming inspection, inquiry, investigation. Section 206 states that ROC can come and inquiry and inspection can be done, or inspector can come and do investigation on the company. If that is so, they should know where the books are kept. If you're changing your books of accounts from the registered office, you have to inform it. Intimate it to whom? ROC within 7 days from the date of taking the decision to keep it outside the registered office. Give them the full address where the books have been kept, full address of such other place where the books have been kept, so that who also has knowledge about it? ROC. Once the books have been kept at a particular place, my next question would be, so what if I have a branch? Problem is, if I have a branch, the transaction will happen at branch. Contracts are entered at branch, but the books have to be maintained at the registered office. Say, assuming I have a branch office in Ladakh, and I have my branch office in Cochin in Kerala. The communication gap between the branch office to the registered office will be difficult for me to maintain books of accounts in a true and fair way. To maintain books of accounts in a proper format, proper manner, it will be difficult for me to maintain everything at the registered office. Or forget about it, if the company has branches outside India, if the company has branch in Australia, if the company has a branch in Bangkok, I'll have transactions in Bangkok, but I have to maintain everything in registered office, which is not going to practically work. Then the company that says that, fine, don't cry, I'll create an exception for you. Don't cry, I'll create an exception for you states that if at all the company has a branch, the books of accounts relating to the branch can be kept at the branch itself. Branch itself will keep it. All those books which are relating to what? Relating to the branch office can be kept at the branch office itself. But once you have kept at the branch office, you have to periodically send back to the company. How periodically should I send it? Nothing is mentioned in the law. You can decide it on your own. But if at all this branch is located outside India, we have decided the periodicity. Are you getting the difference, Amma? If the branch is within India, they have simply stated that send it back to the company on a periodical basis. How regularly, how frequently should I send it? Nothing is mentioned. But if at all the branch is located outside India, they have clearly given an instruction that it must be sent on a quarterly basis to the registered office or such other place where the books have been kept, so that I'll consolidate everything and maintain a proper entire books at the registered office. Give me one word conclusion. If it is relating to branch office, can it be kept at the branch itself? Yes, but it has to be sent periodically back to the registered office. But if it belongs to a branch office located, then it has to be sent on a quarterly basis to the registered office. Very good. Once the books have been kept in a particular place, can I destroy the books? No. There comes the topic, period for preservation of the books. The books must be preserved. They must be preserved for how long, sir? They have to be preserved for a period of not less than 8 years immediately preceding the relevant financial year. So what do you mean by relevant financial year? Say today, as we are recording this, as we are going to write exam for you, what financial year we fall under? 26-27. The financial year 26-27 books of accounts are not still prepared, sir. They're in the process of being prepared. We are still in the beginning part of 26-27. Books of accounts are not fully prepared. If the books of accounts are not fully prepared, we still have time to prepare the books of accounts. Can I say we cannot preserve it until it is prepared? So we'll talk about which year, the relevant financial year or preceding financial year. So 26-27 is my relevant financial year. I have to maintain books of accounts for a period not less than, repeat it after me, not less than 8 years immediately preceding the relevant financial year. What is my relevant financial year for this part? 26-27. Are you getting the point clear? Yes. If the books of accounts are to be maintained for 8 long years, but the problem is company got incorporated for less than 8 years. My company got incorporated 2 years back, sir. Then how in the heck will I be able to maintain 8 years of financial statements? If my company is only incorporated for 2 years, I'll be able to maintain only for 2 years. Logic states it. If the company is incorporated for less than 8 years, maintain the books for such period for which company is incorporated. If it is incorporated for 5 years, maintain for 5 years. 6 years, maintain for 6 years. 11 years, maintain it for 8 years. If it is for 9 years, maintain it for 8 years. If I've been incorporated for 7 years, maintain it for 7 years. I hope this is comfortable. But sir, can I say a company can do a fraud, and they have to preserve the books for 8 years. After 8 years, they can destroy all the books and no evidences for the fraud will be left. That means Companies Act is encouraging us to do frauds. Do fraud, but don't get caught within 8 years. After 8 years, nobody's going to question you. Go destroy those books. There's a chance that there's an investigation that has been initiated on the company. If you have done your inspection inquiry chapter, you'll understand these words. The central government may have passed an order and appointed a person called as inspector to conduct investigation on the affairs of the company. While investigation is going on, there's something wrong in the company. And you state that, sir, 8 years is elapsed, I'll destroy. If I destroy the books, the investigation never will be succeeding, will be fruitful. Hence, the logic states that if at all central government believes that during investigation we have to keep the books for a period longer than 8 years, they'll pass an order. They'll pass an order asking the company to maintain books for a period longer than 8 years. And if assuming the central government has passed an order giving directions to maintain for 20 years, so then I have to maintain for 20 years. If they pass an order for 15 years, I have to then maintain for 15 years. If no order has been passed, then I have to originally maintain for 8 years. But so maintaining books of accounts is fine, preparing books of accounts is fine, having access to books of accounts is fine. But once the books of accounts are prepared, we have discussed this logic that it is the responsibility of the books board of directors, but it's prepared by the management. So we have to verify it, na sir. Why don't we verify it even before it is completely prepared? During the preparation process, can I come and inspect? Whose responsibility? Then who will inspect? Board of directors. Which board of director? Any board of director, every single board of director will have a right to inspect the books of accounts. Can the shareholders inspect? No, shareholders have a right to inspect only the financial statements. They don't have a power to inspect the books of accounts. Books of accounts can be inspected by the board of directors. At what place? Obviously, regular answers. Some of these are inspection topics, regular processes, inspected by any director. Inspected at what place? And maintained at what place? Registered office or such other place as may be decided by the board of directors. Can I come at 2 a.m. in the morning to inspect? You and watchman will sit and inspect it. Who will be available to provide you books? No part of the management, no part of the employees, no part of the accounting department will be available to give you access to the books. How can you inspect it? You have to come during the business hours. I want 3 answers somehow. Who will inspect? When will he inspect? Where can he inspect? Who will inspect? Any director? Where will he inspect? At the registered office or such other place? When will he inspect? During the business hours. This is the logic where the books of accounts are kept in India. But a special case was created. A special case was created when the books of accounts are kept outside India. So if the books of accounts are kept outside India, what will we do, sir? We'll travel outside India and inspect. What travel? You are not only appointed to inspect, you as a board of directors appointed to manage the business. You have other headaches to take care of. You're not going to travel just to inspect. Because it's going to waste time for you to travel and go inspect outside India, let not waste time. We can't travel, let the books travel to India. Bring the books to India to inspect. Who can inspect? Same answer somehow. Who can inspect? Any director. But any director will not go to inspect. He will request the company, to send the copies of such books he wants, which are maintained where? Outside India. One word answer. Where the books are maintained? Outside India. Can I go outside India to inspect? No. Can I request the company to bring the books into India? Yes. Once I have requested, the books have to come to India within 15 days from the date of request. How many days? 15 days. Once the books have been received, can I start inspecting? Yes. While inspecting, all the officers, employees of the company shall provide me assistance. They know the books of accounts better than the board of director. They have prepared it. They know it better. They have to provide assistance to the board of directors while preparing it. Then a special case, these books of accounts, think about it. They're not even allowed for the owners of the company, shareholders of the company to inspect. That means they're very confidential information. So if they're so confidential, can a board of directors inspect? Obviously. But can any other person other than board of directors inspect? Can a board of directors appoint a representative to inspect? Can a board of directors appoint an agent to inspect? Can a board of directors appoint any other proxy to inspect? Appointing any other person to inspect is not allowed. We have to exercise this right as a personal right, individual right. No other person other than the board of directors himself can exercise this right. But a special point. If at all the books of accounts relating to subsidiary, not our company, to a subsidiary company, can we inspect those books also? Yes, sir, we can inspect, but not any director. It can be inspected only by such director who is authorized by the board of director. We had a proper chart drawn for this, if I'm not wrong. Inspection. Divide the inspection of books of accounts into 2 parts. Remember this chart. It is divided in how many parts? 2 parts. Either it is books of accounts of the company or it is books of accounts of the subsidiary company. If it is books of accounts of the company, there are two possibilities. It is maintained in India or it is maintained outside India. If it is maintained in India, three answers for me. Which director? Every director. At what place? Registered office during the business hours. But if it is outside India, I cannot go outside India, but I can request. Who can request? A director can request whom? Company, and the company shall provide those books of accounts requested within 15 days. Then rest of it is next logic. Here, if it is subsidiary company, can it be inspected? Yes. Not by every director, only such director who is authorized by the board of directors. I hope the inspection is also clear. So, on a nutshell, what are the different topics we have completed under books of accounts topic? We have prepared it first. Then we discussed on where to keep it, place of keeping books of accounts. Then once we have decided where to keep it, we decided how long to keep it, preservation of books of accounts. Once we discussed about place, we also discussed about branch office. Then we discussed about preservation. Then we discussed about inspection. And the last topic we have is, sir, what happens in the digital era we are living in? We are not going to maintain the books of accounts in a physical format. Can we maintain them in an electronic format? Absolutely. You can maintain the books in electronic format, but if at all you are maintaining them in electronic format, you have to follow certain rules and regulations. Certain formalities have to be fulfilled if you are maintaining the books of accounts in a electronic format. The first requirement is that they have to be accessible in India. Say, assuming taking TikTok. Is it an app which is accessible in India or accessible outside India? I can open this app TikTok, but only when I'm outside India. Say, assuming I'm traveling to US. I can use this app. But if I'm in India, can I use it? So this app is something which is based on geographical area. It is accessible only outside India. But if I'm maintaining my books of accounts in a software, in a system which is accessible only outside India, I'll not be able to conduct business activities properly. They have to be accessible in India, and they have to be accessible not on a part of part during the day, not for a particular period of the day. It has to be accessible in India at all times. Give me the one word keyword you have to remember. All the books of accounts of the company maintained in electronic format shall be maintained in such a manner that they are accessible in India at all points of time, all times. Once they are maintained in an accessible format, they should also be able to provide, this is very important, the system you are using must be able to provide four things, basic four things which are usually available in every system, but they had to mention it so that nobody will misuse the process. The system should be able to store the information. Look at me, what is happening? The system will be able to first what? Once I've given the information should be stored. So they'll have evidences for it. Once I have a doubt on the information, I want the information to be retrieved back. Once it is retrieved, I should be able to display the information. Once it is displayed, if I need it, I should also be able to take a printout of the information I have in my pocket. I get in the 4 points on same order. The system which are you maintaining shall be able to provide you what? Storage, retrieval, display and printout. Display and printout. Give me words again. Good. Then and the last point is good. Very good. Storage, retrieval, display and printout. But when they're displaying it, if they display in a binary language, ones and zeros, computer's language, or they display it in say any symbols, will I understand it? They display in any language, say Japanese language, will I understand it? No. They have to display in a legible form. It must be displayed in a legible form so that I can read, understand and make sure that if I require changes, I'll make changes. If not, I'll store the information. It must be in an accessible form. It must be in a legible form. It must be capable of storage, retrieval, display and printout. Are we comfortable till here? But problem is, there's a chance that the books which are kept in an electronic format might be lost. Server might be destroyed. Even your WhatsApp at least case has backup. What important information do we have in WhatsApp? No, nothing, but we still have backup. Your Instagram account has backup. All your chats, even you delete the app, there is backup for it. Try understanding it. Even such unimportant, unnecessary information is backed up. Don't you think the books of accounts of the company, the entire background of the company has to be backed up? It must be backed up for two major reasons. One, for the fact that information might be lost. Second, for the fact that if you maintain the original books outside India, say this is India, don't question my India at all. Okay? This is India. This is not an ice cream cone. This is not amoeba. This is India. Okay? This is India. This is Pakistan. Don't also question Pakistan. This is Pakistan. For your information, this is India. Say, try understanding it. Where is the company located? In India. If I am taking services from Amazon Web Services, imagine this. Amazon Web Services is having the service outside India. I am getting service from Google Drive. It is located outside India. Amazon Web Services located outside India, or I'm taking Microsoft Edge, Microsoft Drive, what is it called? Microsoft Drive or Google. I'm forgetting the name somehow. So fine, whatever the name might be, the servers are usually located outside India. These service providers are located outside India. If they're located outside India, try understanding it. If they're located outside India, the servers might be located outside India. Just imagine. It will not never happen, but just imagine. If at all we have taken services of a service provider whose server is located in Pakistan, and there is a war between India and Pakistan tomorrow, this server will be closed to access. Pakistan might stop that service provider in their control, in their country, to provide information to the companies in India. Then companies in India will suffer. Then the logic states that I don't only want information, I want information in India. So that if something goes wrong outside India, if geopolitics goes wrong, if the connections get disconnected with those countries, I still want information available in India. It must be located in a physical server which is located in India, so that I'll have a proper backup in India. If something goes wrong also, I still have my information ready. And this backup must happen not on a yearly basis, bi-yearly basis, half-yearly basis. It must happen on a daily basis. Three things remember. Backup is mandatory. It must be provided in a physical server which is located in India, and it must be happening on a daily basis. Then we have something called as notice to the ROC regarding service provider. If the service provider details are provided to ROC, ROC can also inspect this financial institution which the service provider which is providing this outsourced services for you. You have to provide basic details about the service provider, basically his name of the service provider, the location of the service provider, which is basically the physical address, the internal protocol, that means the electronic address of the service provider, IP address of the service provider, the address where the books are kept on the cloud, because we are not going to usually purchase the entire cloud, which is very costly. We'll purchase a part of the cloud, we'll go on a sharing basis. It is similar to share auto. You're not going to purchase the entire auto, you're going to share the auto. A cloud is not going to be fully purchased. I'm going to share it with other vendors, other customers. I want the address in the cloud where the books are kept, not the entire cloud. In the cloud, where is the exact address where the books have been kept. And if at all the service provider is located outside India, there should be one person in India who will be the point of contact. Give me his name and address. These are the details which are required to be filed with the ROC at the time of filing your financial statements under section number 137. Along with the financial statements, file this information also to the ROC. That's your entire section number 128, books of accounts, penalty section. Who will be held responsible, sir? We have done this already. Who is responsible? Board of directors. But try understanding, not all board of directors will be knowing knowledge about the books of accounts. Will segregate certain board of directors who are responsible for it. We have the managing director. Who? Managing director. Or a whole-time director who is in charge of finance. Or the CFO, chief financial officer, or any other person who is put in charge by the board of directors. These are the four set of people who will be held responsible under section number 128. If they don't prepare it, if they contravene the section, they'll be punished under section number 128 with a minimum amount of 50,000, maximum amount of 5 lakhs. Not much important, you can read it once and leave it off. That's your section number 128. Then section number 129. 129 talks about financial statements. Financial statement logic states the same three original requirements. It has to be prepared while giving a true and fair view. We have to follow all the accounting standards notified under section number 133, and it has to be prepared in a format mentioned under schedule number 3. These are the three requirements. It must provide a true and fair view. It must be it must be prepared according to the accounting standards under section number 133, and we have to prepare it in such a format that it follows schedule 3. But these three requirements are not required for banking company, insurance company, and electricity company. Why, sir? Because they are going to prepare their financial statements according to their requirements as per their special law, not as per the Companies Act. Once the financial statements have been prepared, why did we prepare it at the end of the day? We prepared it for whose benefit? Shareholders. Give it to the shareholders. In every AGM, the board of directors will lay this in front of the shareholders, the financial statements of the financial year, so that they'll consider and adopt the document if so required. Then comes the consolidation process. Consolidation is required when the company is having, give me the wordings, when the company is having one or more subsidiary companies or associate companies or joint venture companies. We have to consolidate the financial statements of all the companies together and prepare a consolidated financial statements. Now, this preparation of consolidated financial statements is an addition to the financial statements. It should contain the details of all the subsidiaries, associates, and joint ventures in a single place in a single document. Hence, what will be the process here? If you are a company which is having a subsidiary company, you have to prepare two documents. It should come back, wait. You have to prepare two documents. One is your SFS, separate financial statements. The separate financial statements will be prepared containing information only about A Limited, your company, and the B Limited will also prepare SFS of only B Limited. But in addition to the SFS, the A Limited is also required to prepare CFS of A Limited and B Limited. Two documents have to be prepared, CFS of A Limited and as well as B Limited. But we have done this equation, if you remember, SFS is equal to SFS of A Limited plus SFS of B Limited. But to understand the CFS, I should also have knowledge about SFS of both the companies. Because I don't have the knowledge, the company will give me a separate statement. Not the entire financial statement, but a separate statement which will contain silent features of all my subsidiaries, associates and joint ventures. In total, on a nutshell, how many documents will I get from the company? SFS, CFS and a statement containing silent features. I'll get 3 documents and all 3 of them have to be laid before the AGM in front of the shareholders for that particular financial year for adoption, consideration of such a document. But there is an exception. Exception states that we don't have to prepare consolidated financial statements. This was a huge example again. It took us more than 1 hour to complete this particular example itself. The exception, I'm probably not going to spend not more than 2-3 minutes also on this topic. It's already been 40 minutes. We're not even done with the second section. I know the number of pages might be less, number of sections might be less, but there's a lot of depth in this chapter. I hope you guys are understanding it. If you require, comment below in the video if you require me to give a more detailed, more crisp and very fast revision of just the words but not the logics behind it. I'll make another video of all the companies act, which is going to comprise of very less amount of time just going through the entire process. You can have your headphones and just hear for the entire topic in a go, where you'll not have logics. It will be only the wordings of the company law. It will be very, very quick. If you want it, please do comment. I'll come with that video as well. We have 3 companies here, Amma. Just imagine, I'm not going to spoil the chart. What are 3 companies we have? Ultimate holding company, intermediate holding company and subsidiary company. This is also holding company of the subsidiary company, right? So we call it as what? Intermediate holding company. Now the exception states that intermediate holding company is not required to prepare consolidated financial statements. Which company? Intermediate holding company is not required to prepare consolidated financial statements if 3 conditions have been satisfied. How many conditions? 3. 1, 2 and 3 we have written here. 3 conditions are to be satisfied. How many conditions are satisfied? 3. But which company exception arises only for CFS of the intermediate holding company? States that, sir, why do we even prepare CFS? We prepare CFS for the shareholders. But who are my shareholders? Ultimate holding company. But ultimate holding company already has that information. If ultimate holding company already has that information about the B Limited and C Limited, they state that I don't want information, don't have to prepare it. When will I not be required to prepare it? If the ultimate holding company has prepared and filed its consolidated financial statements with the ROC. Who has filed it? CFS. Ultimate holding company has filed CFS to the ROC. That means they already have the information. If they already have the information, the ultimate holding company states that I don't want information. If I don't want information, I don't have to prepare it. But there's a chance that the intermediate holding company might have other shareholders. At least for the other shareholders, I have to prepare it. If not for the ultimate holding company, I have to prepare it for whom? Other shareholders. For the other shareholders, how would I prepare it? Logic states that I still don't have to prepare it if my other shareholders give me a consent not to prepare it. So give me the logic, Amma. Why do I prepare a consolidated financial statement for my shareholders? Who are my shareholders? Ultimate holding company and I have other shareholders. If ultimate holding company already has prepared CFS, they don't want it. And if the other shareholders have given me consent stating that you don't have to prepare it, then indirectly, can I say all my shareholders don't want it, then I don't have to prepare it. Exception is given to you. When is the exception given to you? Give me the wordings. Read the wordings properly. The ultimate holding company has prepared and filed CFS with the ROC. Second point, the intermediate holding company have informed it to the other members. Other members have been intimated in writing, having a proof of delivery that the document has been delivered. You don't have to go through each and every word in the revision any which ways. Go through the word. The other members have been intimated in writing. After they have been intimated in writing, they have given their no objection for the company for non-preparation of CFS. Company stated that we don't want to prepare CFS. Do you have objection? Other members stated that, sir, we don't have objection. We don't have any problem if you don't prepare CFS. If the members, all the members of the company have no problem, I don't have to prepare it. But SEBI states that if these other members are public, what do you mean by public? The company is listed or the company is in the process of getting its securities listed. That means the public will be affected. I don't want to take any risk if it is money of the public involved in it. If the company is either listed or in the process of listing, I'll not allow it. But so when will the exception be given? When it is not listed, when it is not in the process of listing, then I'll give you the exception. Take a screenshot of all the three wordings or otherwise read it from the material. Otherwise, three categories. If three conditions are satisfied, exception is given. Remember, exception is only for preparation of CFS. They're still mandatorily required to prepare SFS. And the exception is not for the ultimate holding company. It is given only for the intermediate holding company. Then we have certain disclosures regarding deviations. Problem is, this accounting standards drafted. Let me give you the knowledge of accounting standards first. Section number 133. Read this part. Section number 133 states that accounting standards of the company are drafted by ICAI. Remember carefully, it is drafted by ICAI. It is recommended to the central government. Central government has the power to notify, but central government does not have knowledge. Understand the problem in that, Amma. ICAI has knowledge. ICAI has knowledge, but they don't have power. Central government has power, but they don't have knowledge. They have to work together with each other so that they can implement it correctly. ICAI will recommend it, I will notify it. Repeat again, ICAI will recommend it, central government will notify it. Put the words. The accounting standards are notified by the central government on the recommendations made by the ICAI. But because the central government did not believe that ICAI is doing their job correctly for preparing quality accounting standards and auditing standards, the central government has established a separate authority called as NFRA. And certain powers belonging to the ICA has been now delegated to the NFRA. Now, NFRA is also those set of people who understand and have power, they have knowledge about it. Then what does the central government state? Central government states that now I don't have to blindly believe on the recommendation given by ICAI. Once I receive the recommendation, I'll give it to whom? NFRA, and NFRA will give me, the central government, recommendations on the recommendations given by ICAI. I hope you understand this word. Who gave recommendations? ICAI. Then NFRA will give recommendations on the recommendations given by ICAI to the central government. So in total, what will be the process? Accounting standards are notified by the central government on the recommendations made by the ICAI in consultation with the help of the NFRA. I hope these three words are very comfortable, Amma. They are, give me the wordings, Amma. They are notified by central government in recommendations of ICAI in consultation with NFRA. That's your accounting standards under section number 133. But come back, if you understand the accounting standard topic correctly, they have been notified for whole of India. Is it practically possible that accounting standard prepared at the national level is exactly suitable for every single company? Remember, they are not prepared tailor-made for you. They're not prepared to be suiting you exactly as a company. They're prepared in a generalized basis. There's a chance that they're not suiting you as a company, and following accounting standard is not providing a true and fair view. Then the law states that if that is the scenario, you can deviate from accounting standards. Deviations are allowed. But once you're deviating, you have to come and disclose everything back in the notes to accounts, in the financial statements. In the notes to accounts of the company, we have to disclose if you're not complying with the accounting standards. What should I disclose? The accounting standard which I have deviated. Basically, the deviation from accounting standard. The deviation from accounting standard. After the deviation, I'll also provide the reason why I had to deviate. What was the reasoning or the justification behind the deviation? But I have deviated, my financial statements will have a different outcome. If I follow a different way of calculation of inventory and deviate from accounting standard, the closing stock will be in a different value. If it has a different value, my closing stock is different, my profit will be different, my financial position will be different, my financial statements will be different. I have to provide the financial effect of such deviation. 3 points on what is the deviation, the reasons behind the deviation, and the financial impact of such deviation. This entire section 129 can be exempted for certain class of companies by the central government. They have not given any exemption as of now, don't worry. But just remember, they can be exempted. Who can exempt it? Central government may exempt any class or classes of companies from the preparation of financial statements or any of the specific rules of this particular section 129. Then comes the topic of segment reporting. I'm not sure which in AS it is. It falls under Ind AS 108. Segment reporting. What happens under segment reporting is we have to segregate the entire financial statements into multiple segments and report on a segment wise basis, so that we'll have a clear picture on which segment is more profitable, which segment is more costly, which segment is not making much of benefit to me. We'll have segment wise reporting for financial statements. But when it comes to those companies which are engaged in defense production, are we going to clearly disclose it to the public at large, eventually to our enemies? I have purchased how many jets, where the income was put in. Segment wise reporting will not be given. I'm not going to clearly mention which area I'm spending more money. I don't want this confidential information going to the enemy's hands. Logic states that if you are a company which is fulfilling all the procedures of 137.92, which you must be doing, you are not required to prepare financial statements. No, absolutely wrong. You have to prepare financial statements, but you don't have to go for segment reporting. Segment reporting will not be applicable for you. Then the last category, penalty. The chart is very simple, Amma. Those four people we have applied under section 128. Same set of people will also apply under 129. Managing director, whole-time director in charge of finance, CFO, or any other person put in charge by the board of directors. These four set of people will be held liable. Listen carefully. Don't focus on the chart. Listen to me. These four set of people will be held liable. These four set of people will be liable with a fine of same topic 50,000 to 5 lakhs, or extra topic imprisonment up to 1 year, or even both. But the problem is, if the company has not appointed any one of them in the absence of all four set of people, then all directors will be held responsible. Remember, it was the responsibility of whom in the first place? All directors. Then they delegate these powers to special kind of people. If the special kind of people were appointed, they will be held liable. If none of the special category of people are appointed in the absence of all of them, then who will be held responsible? All directors, with imprisonment up to 1 year, fine of 50,000 to 5 lakhs, or both. This is your financial statements which are prepared for a financial year. Then we have section number 129 capital A, which is an amendment section added, which is not notified yet, Amma. This is the problem with India. They notified this section, they brought this section in 2020-2021, and they have still date not notified anything in this section. Doesn't make sense if you create law unless you are able to implement the law correctly. Creating is important or implementing is important. Implementing is more important here. They created but did not create any rules. But nevertheless, this is one of your favorite sections. Answer is such other as may be prescribed. Entire section is such other as may be prescribed. Given the topic. Listed companies are required to prepare quarterly financial statements, which was made mandatory by SEBI. Then the MCA states that companies that states that we are no less than SEBI. We will also create a similar kind of process called as periodical financial statements, not for the entire financial year, for a certain period of time. We will create it for unlisted companies. Central government stated that unlisted companies have to prepare periodical financial statements for a certain period. There comes the funny part of this section. For such period as may be prescribed. They have not prescribed the period. In such form as may be prescribed. In such manner as may be prescribed. Once you have prepared it, conduct an audit. But conducting audit every year multiple times will not be sufficient for me, will not be possible for me. Then I'll conduct something called as limited review. What do you mean by limited review, sir? I'll not audit the entire financial statements, entire documents, or entire subheadings of the financial statements. I'll focus on one area. Which I feel is important. I'll do a limited review. I'm not even calling it as audit. I'm calling it as what? Limited review. Either conduct audit or conduct limited review in such manner as everything is as may be prescribed. But one thing that is very clear, once the process is completed, go file it with ROC. And when you are filing, pay prescribed fees to the ROC and file it within 30 days from the date of completion of such relevant period. Give me conclusive answers on it. Central government prescribed such class of unlisted companies as may be prescribed to prepare financial statements for such period as may be prescribed in such manner as may be prescribed, conduct audit or limited review in such manner as may be prescribed, and file it with the ROC within 30 days from such period as may be prescribed. What is section 129A? As may be prescribed. Entire section is a funny part. Entire section is a joke. Then if you come and apply our logic, we have to complete section number 138. Where are we, sir? Prepared books of accounts, prepared financial statements, gone through accounting standards. Now these books of accounts have to be verified. Who will verify the books of accounts? Internal auditor. Internal auditor is appointed by the board of directors. Internal auditor is remuneration is fixed by the board of directors, the scope is fixed by the board of directors, he is removed by the board of directors, periodicity is fixed by the board of directors, the functioning of this person is fixed by, everything is done by board of directors. We don't have to maintain independence. If you go back and remember the auditor's process, there are certain disqualifications for auditor. A person who is an employee of the company is disqualified. A person who is an employee of the company is disqualified because he might be influenced by the company, influenced by the board of directors, and he may work for the board. But sir, this entire topic of internal audit is for the board of directors. If it is for the board of directors, can we appoint an employee? Yes, we can appoint an employee. And again, if you go back to section number 141 again, there are only certain people who are allowed to conduct financial audit. Who can conduct financial audit? Only a chartered accountant who is having a valid certificate of practice. A chartered accountant qualified CA plus COP, certificate of practice, can conduct a financial audit. You as a cost accountant can conduct what? Cost audit. Only a qualified cost accountant and having a certificate of practice can conduct what? Cost audit. And a CA can conduct financial audit. You can conduct cost audit. Now try answering this. For the internal audit process, I don't care your qualification. I just want to make sure that you have knowledge to conduct audit. As a chartered accountant, as a cost accountant, if you observe both courses we have, both of them are trained for taxation. Both of them are trained for accountancy. Both of them are trained for law. Both of them are trained for compliances. Both of them are trained for financial management. Both of them are trained for audit. Both of them are trained for costing. More or less, they have equal kind of information, equal kind of skills with them. If they're very equal and very close to them, can I say internal audit? If I don't care about the qualification, it can be done by any person. It can be done by any person, whether he has practice. He does not have certificate of practice. I don't care. I want your knowledge. I don't care about a piece of paper. I care about your knowledge. Sir, I'm a CMA interqualified. You are watching this video for writing CMA Final. You're a CMA interqualified. You have done your articles. Can you conduct internal audit? Yes, sir. I don't care about your qualification. Any professional can do it. Hence, the wordings are a chartered accountant or a cost accountant, whether or not in practice. Whether in practice or not, I don't care. We can still conduct it. Give me conclusion on it. A CA in practice, can he do financial audit? He can also do internal audit. A CA who is not in practice, can he do financial audit? No, but he can still do internal audit. Similarly, a CMA in practice, can he do cost audit? He can also do internal audit. I am a CMA, but not in practice. Can I do cost audit? No, but I can do internal audit. Sir, I am a CMA interqualified. Can I do it? Yes. Any other professional as may be decided by the board of directors. But sir, can this person also be employee of the company? Absolutely. May or may not be employee. It is not mandated that he must be employee, but he may. It is not nothing that it is against the point that it must not be an employee. He may be an employee or he may not be an employee. It is still fine. You can appoint an internal auditor. But the point is, internal auditor is not applicable for every company. It is applicable only for certain companies. We'll divide the applicability into three parts. There is a mistake done by Companies Act. Let me explain the concept, then I'll also explain the mistake, then I'll also explain what to do in the exam also. Stay with me. Applicability, whenever we talk about applicability, first level of applicability will always be given to every listed company. Every listed company has to appoint an internal auditor. Then an unlisted public company have to appoint if they have satisfied any one of the 4 conditions they have given. How many conditions were given? 4, and I have to satisfy any one of them or all of them. Any one of them, that's the reason they have used the word or in between them. Are we getting this clear? First of all, which company, unlisted public company, have to appoint internal auditor if they have fulfilled any one of the 4 conditions. What are the 4 conditions, sir? Amount is very easy to remember. Double it up. 25 crores, 50 crores, 100 crores, 200 crores. Just double the amount. 25, 50, 100, 200. But the problem is you have to remember the order in which you have to write it. You have to remember the order, then you can double it up. 25, 50, 100, 200. What's the order you have to remember? If the company has outstanding deposits of 25 crores or more. Outstanding deposits of how much? 25 crores or more. But the problem is, sir, if this is the limit and if this limit satisfies, I have to appoint an internal auditor and incur extra cost and procedure. What will companies do is, until this point of time for the entire financial year, I had 27 crores of deposits. Right before the end of financial year, I have repaid deposits to bring it down to the admissible limit of 24 crores. Now I act innocent, stating that, sir, my deposits are not more than or equal to 25 crores. Hence, I don't have to appoint internal audit. What are you bluffing? Who are you trying to bluff? If you guys are smart, Companies Act is smarter than you. Companies Act is even more smarter than you. Companies Act states that because we can repay deposits any point of time and bluff the Companies Act, I'm not going to check it on the balance sheet date. I'll tell that we have to check it during the financial year at any point of time. Add the words for me. Add the words for me. Outstanding deposits of 25 crores or more at any point of time during the financial year. Even on a single date, if you have 25 crores during the entire financial year, you will be applicable with internal audit. Are we getting the logic clear? Even on a single date at any point of time during the financial year. Second point, paid up share capital. This is slightly different. I want your brains to work. Just don't blindly answer. Apply your brain. Paid up share capital. So paid up share capital does not reduce. We cannot manipulate it whenever we want. There are only two circumstances in which paid up share capital reduce in extreme exceptional cases: buyback and reduction of share capital. Only two cases I can manipulate and reduce it. But if I say excluding the exceptional cases aside for a time being, if in the month of November I had a paid up share capital of 55 crores, by March I'll have either 55 or more than 55. I cannot reduce it. Hence, I don't have to check it during the entire financial year. If I'm able to check it at the balance sheet, it is still fine. They did not use the word at any point of time. They've simply used the word during the financial year. Paid up share capital of how much? 50 crores or more during the financial year. If the logic is understood, manipulation is possible, I'll check any point of time. If manipulation is not possible, I'll check the balance sheet date during the financial year. If logic is understood, next two answers should come from your side. Outstanding loans or borrowings of 100 crores or more, answer. Can they be manipulated? Can they be reduced? Can they be repaid whenever you want? Yes. If they can be manipulated, when should I check? At any point of time during the financial year. And the last point, turnover 200 crores. Turnover I cannot manipulate unless there is a sales return. Very extreme case that will happen during the financial year. I hope all the wordings are clear. But the mistake from Companies Act, I know you are waiting for this. Mistake from Companies Act is they have given the word, they still have these words in the Bail Act. Outstanding loans or borrowings from banks or financial institutions or any other entities exceeding 100. What do you mean by exceeding 100 crores or more? If it is exceeding 100 crores, more than 100, this is the logic. If it is exceeding 100 crores, this makes sense. If you use the word 100 crores or more, this also makes sense. Even 100 crores will also trigger the point, or more than 100 will also trigger the point. But what is this exceeding 100 crores or more? Should I take it as more than 100? Should I take it as more than equal to 100? What do you mean? What do you try to convey in this word exceeding 100 crores or more? It's a mistake from company side, but we have learned a lot of other sections in our syllabus to give the logic that usually whenever borrowings comes in, we always use the word more than 50 crores. In the exam perspective, if at all the question is asked exactly for borrowings, we'll read and understand it as what? More than 100, more than 100. But I'll write it as what? Write the Companies Act wording somehow. Because we have to match with the suggested answer at the end of the day, write the Companies Act wording. Exceeding 100 crores or more. Then the last category we have is unlisted private company. For unlisted private company, if they have satisfied the last two conditions, they will be applicable with any one of the last two conditions. They will be applicable with internal audit. They have to appoint internal auditor. I hope this is clear till here. We'll take a small break. We'll come back and continue it. But give me a gist of what have we done till now. In the process, we have completed section number 128, 129, 133 and 138. I would say more than 60% of the chapter is done. Don't worry, I know a lot of time has been already spent, but we have closely done 60% of the chapter. This is basically your next chapter. We have section number 134, 136 and 137. Only 3 sections are there. 137 will hardly take 10 minutes. 136 will take maybe 10 or 15 minutes. 134 will take maybe 10 or 15 minutes. Probably 40 minutes from here, I'll be able to complete the chapter. We'll come back and I'll take a small break and start the chapter. I'll fill up some water and start the chapter. I hope this is very, very clear till here. We'll continue the chapter in a minute. Let's start from where we have left the chapter. We have 3 sections to complete this chapter off. We have section number 134, we have section number 136, and we also have section number 136. For those students who have a small doubt here, yes, your doubt is correct. Section number 135 is also part of our syllabus. Section 135 talks about the concept called as CSR, Corporate Social Responsibility, and I would say this is one of the most important part of your entire syllabus. Forget this chapter. Entire syllabus, this is one of the most important. More often than not, you can expect a 7 marks question from this every single attempt. Very, very important. But sir, why are we skipping it right now? We are skipping it right now because what happens is the introduction of CSR is given under section 135, but the continuation actually happens under corporate governance topic. So why should I read a part of it here and a part of it there and have a misconception about the mixing of points or bridging between the logics? What we do in the classes, we skip section 135 in accounts of company chapter and we learn it along with corporate governance topic in a single trench so that we'll understand the bridging of both concepts in a very easy manner. That's what we do. So we'll learn it according to the corporate governance topic. I hope you guys understood it. So what are 3 sections we have left out? 134, 136 and 137. We should always start with section number 137 to understand this flow of concept. Let's start it. What is section 137? By the time this process of section 137 starts, the audit has already been completed and we got audited financial statements and it's communicated. We, the company, have an obligation to communicate these financial statements to the members. On the other side of the story, can I say members have a right to receive it? That's where the heading comes in. Right of the members to receive copies of audited financial statements. Very careful. They have to receive only audited financial statements. We can never send unaudited financial statements. It must always be audited financial statements. Then, sir, I have 4 questions to start with this logic. This is very important, Amma. Every point of this section 136 is connected with each other. You have to learn entire 136 in a go. Right? Listen, there are 4 questions. I'll start with who will send, to whom will I send, when will I send, and what will I send. What will I send is the last and the important part. So what's the first 3 easy questions I have? Who will send? Obviously company. To whom will I send? Obviously to the members. But not only to the members, I have to send it to all other entitled persons. All other entitled persons might include government, might include NCLT, might include banks, might include financial institutions, might include my creditors. Because I have all the other people who might be affected in the company, I'll send it to all such entitled persons as well. But during that logic, they've given special importance to debenture trustee. So in a nutshell, given the process, who is sending? Company. To whom? All members, debenture trustee and all entitled persons. When should I send it? They have to be sent before the AGM so that the shareholders will do their analysis, do their research, understand the document, then come to the meeting to adopt the documents in the annual general meeting. Hence, I have to give it before the AGM. I have to give it at least 21 days before the AGM. Be careful, Amma. This is not 21 clear days. This is not inviting for general meeting. This is sending of documents. It has to be sent with a length of how many days? 21 days before the AGM. But this 21 days happens to be 14 days. Give me the answer. 14 days in case of. Good. Very good. I hope you remember from your inter syllabus. Section 8 company. In case of Section 8 company, it has to be how many days? 14 days. For all the other companies, it has to be sent with a length of how many? 21 days. Then, sir, what should I send? I should send the financial statements including the CFS. What should I send? Financial statements including the consolidated financial statements. But sir, there's a chance that the financial statements have a misstatement in them and the misstatement was identified by the auditor. He might have expressed his opinion and told what is misstatement in his auditor's report. Submit with the auditor's report. These 2 information together will give me a clear picture on the company. No sir, not completely. We still can get experts report. We can still get valuation report. We can still get board's report. There are other documents which will also help you to understand the entire position of the company in a very clear manner. Hence, why to mention everything separately? I'll have a generalized word to cover everything. All other documents which are required to be annexed or attached to the financial statements. Which documents? All other documents which are required to be annexed or attached. If this is understood, 90% of section 136 is done for you. Repeat it for me very quickly. Who is sending it? Company. To whom are we sending? All members, debenture trustee, all entitled person. When are we sending? 21 days before the AGM. What are we sending? FS including CFS, auditor's report, all other documents which are required to be attached or annexed to the financial statements. But sir, what happens if I don't send it within this 21 days? If I send it with a length which is less than 21 days, that indirectly means that the shareholder had lesser time to read, lesser time to understand, lesser time to analyze, and he might come to the AGM with less knowledge. We are bluffing the investors. He might come to the AGM with less knowledge, adopt the document with no information correctly given to him, correctly analyzed by him. There's a chance that we are bluffing the investor. Such kind of document sent which is length of less than 21 days shall be considered invalid, but they can be ratified. They can be made good. They can be made valid. Original answer is are the documents valid or invalid? Invalid. But Can it be ratified? Yes. We are protecting whom by making it invalid? We are protecting whom by giving them 21 days? Shareholders. If the shareholders themselves state that, sir, we don't have problem, send it by 15 days notice, we also don't have problem. Companies Act states that it can be ratified if it is less than 21 days, or in case of Section 8 company less than 14 days, it can be ratified by whom? Shareholders, but will divide the companies into two parts, company having share capital or company having no share capital. If it is a company having share capital, it has to be satisfying a dual majority. What is dual majority, sir? Majority of the members in person having representing not less than 95% of the paid up share capital having voting power. Paid up share capital having voting power usually is equity shares, but in exceptional cases it can also be preference shares. I hope you understood the wording somewhere. Majority of the number of members having not less than 95% of the paid up share capital having voting power. But if at all the company is not having share capital, can I say I cannot have this part? If I cannot have the paid up share capital, then it will be simply not less than 95% of the total voting power. How much? Not less than 95% of the total voting power, it will be ratified. Once it is ratified, can I say even though it is sent with a length which is less than 21 days, it is still considered as valid? Yes, sir. That's your entire section number 136, originally speaking, completed amount. Originality of section 136 have been completed, but the problem here is, imagine a listed company. Imagine a listed company which has raised money from public at large. They have lakhs of shareholders. If I have to send all these documents to lakhs of shareholders, it will incur a lot of cost for me. Again, sir, I know a lot of you are answering already, sir, why do we even incur cost? We'll send it in electronic manner. Slow down a little. This act was drafted in 2013. We have a Latin phrase called as contemporanea expositio. Don't ask me spelling. Contemporanea expositio, which means that read the law in the circumstances in which the law was drafted. Read and understand the law in the situations in which it was drafted. What were the situations under which 2013 Act was drafted? We did not have internet access in India. We did not have electronic documents feasible for every shareholder in India. We had to send physical documents. And sending all of these in physical documents was a problem. Because of which Companies Act stated, if at all you are a listed company, let me draft a special provision for you, because sending every single document to every single shareholder of a listed company is financially not possible. You'll have to basically sell the company to communicate. I'm not gonna let that happen. The logic here states that we're not gonna send entire document. Let's compromise. I'm not gonna send the entire document, but I'll send silent features of such documents to the members. I'll send all documents or only silent features. So what will be the same process? Entire thing remains the same. This entire thing remains the same. What the only change is this part. Rather than sending 3 documents, I'll send only one document which is containing the silent features of all 3 documents. All 3 document silent features will be put in a single document, and I'll send it at least how many days before? Same process, 21 days before the AGM. But sir, again, I'm not giving the full information to them. If I'm not giving the full information, the full documents, the entire document shall be available for inspection at the register office during the business hours, working hours. Inspection topic always remains the same. It has to be kept at what place? Registered office. It has to be inspected during the business hours. And the logic here was, I was supposed to communicate these documents for a period of how many days? 21 days. Then also keep it open for inspection for how many days? 21 days. I hope the logic is clear. Because I'm not sending in every document, I'm gonna keep every document open for inspection. You can come and inspect it. At what place? Registered office during the business hours for a period of 21 days. What's the problem? There's still a problem in this. Not every shareholder can be able to come to the registered office for inspection. Then the last topic, post it on the website. First point, I'll send silent features. I'll send silent features. Second point, I'll make it available for inspection at the registered office. Third point, because not everybody can come to the registered office, I'll post it on the website. What will I post? Regular documents, same documents. FS including CFS, auditor's report, all other documents which are required to be annexed or attached, and they've added an extra point. I'll also post the separate financial statements of the subsidiary company. Which company? Subsidiary company. Where will I post it? On the website of the company. When is it required? When you are which company? Listed company. I hope you are with me with the flow of the topic. Listed company, they have to send only silent features. Because they're not sending everything, we have to make it available for inspection at the registered office. Not everybody can come to the registered office, send it through, communicate it through posting on the website of the company. Website is not only the way of communication. I'm communicating through 3 ways somehow: silent features, inspection, and website. On the website, I'll post regular documents. Along with the regular documents, special point is the separate financial statements of the subsidiary company has to be posted. But here comes a small problem. Sir, what happens if this subsidiary company is incorporated outside India? We call it as which subsidiary? Foreign subsidiary. If it is a foreign subsidiary, they don't follow Indian law. They follow which law? Foreign law. If they are following foreign law, the rules and regulations in how the financial statements are prepared will be slightly different from the Indian law. They are slightly different. Let me create clarity for you. I have 3 special points discussed for which company? Foreign subsidiary. Sir, what happens if this subsidiary is situated in India? Story closes there. Post it. Post it because they followed everything as per the Indian law. Post it as per the Indian law. But the problem arises when this subsidiary is situated outside India, which is called as what subsidiary? Foreign subsidiary. They have not followed Indian law, but they followed which law? Foreign law. This foreign subsidiary is not followed the procedures of 129, 133, 134. They have not followed these procedures. They follow the foreign law. They have created a special procedure for them. If at all, listen carefully, don't get confused, Amma, this is foreign law, not Indian law. If at all, as per the foreign law, audit is not required. What is not required? Audit of financial statements is not required. The law states that don't worry, then if it is not required, file the unaudited financial statements on the website. You don't have to take extra stress on it. If they are not required to be audited as per the foreign law, the country in which they are incorporated, then it is fine, I'll accept it. Post the unaudited financial statements on the website, I'll be satisfied with it. Are you guys comfortable? Second thing, usually in India, usually where it comes to Indian law, what the logic is, if we have holding company and we have a subsidiary company, which company is required to prepare CFS? Holding company. But as per the foreign law, if in case the subsidiary company is required as per the statutory procedures to prepare CFS, as per the foreign law, they are statutorily required to prepare what? CFS. Then okay, fine, you have prepared CFS, right? Post the CFS, I'm satisfied. Are you guys understanding? We are ready to compromise on everything. If you have not got it audited, post the unaudited. If you don't have the SFS but you have prepared the CFS, post the CFS. CFS should be placed on the website. I'm satisfied with it. But sir, one request. If your subsidiary is located outside India, say it is located inside Russia, it is prepared in Russian language. Will I understand Russian language? If it is located in Japan, it is prepared in Japanese language. Will I understand Japanese language? ROC don't understand these documents. Public don't understand this document. Then do what? A translation of the document into English language and post it on the website. If it is not in English, if it is in other than English, we'll have a translated document in English and then place it on the website. But because I want to compare, my shareholders want to compare these financial statements with the rest of financial statements of the company, they have to be comparable. To be comparable, we have to prepare them as far as possible as per the procedures of Companies Act. That is basically Schedule 3 must be followed, the format must be followed. If the Schedule 3 format is being followed, try understanding it. Is it possible for me to follow pinpointedly every single point? No. There might be deviations. If there are deviations, give me the reasons for such deviations. Is it fine? Yes. And the last topic we have, how to send documents. In the manner of sending documents, very easy topic, Amma. Just have to understand, this topic is not applicable to, first of all, every company. I have done a combined chart for you. Listen carefully. This is applicability. This is how to send. I have combined both of them into a single chart to make it easy for you. So what's applicability first? It is applicable to every listed company. Every listed company will be applicable on how to send documents. We'll decide. Companies Act will decide. This is special, Amma. You have to remember this. A lot of people make mistake in it because it is not usual process of limit, unusually defined. It is applicable only to a public company. A public company which is having a net worth of more than 1 and turnover of more than 10 crores. Usually whenever we have turnover, we have 100. Usually when we have net worth, first of all, we don't have net worth. We have paid up share capital. And whenever we have limits, we usually have more than equal to. And we have or, any one condition. Everything is different here. A public company which is having a net worth of more than 1 crore and a turnover of more than 10 crores will be applicable. So if they're applicable, how should they send? So what if they're not applicable? Send whatever you want, however you, not whatever you want. Send however you want documents. It's up to you. I'm not going to question. I'm not going to put regulations upon you. But if you fall under this applicability category, you have to send in the manner I provided. If the shares are held in a dematerialized format, if the shares are held in a dematerialized format, that means the shareholder has purchased shares with the help of internet. That means he has access to. That means he knows how to use the internet. Then send the documents in an electronic manner. You don't have to. You don't have to question it. He has internet. He has knowledge of internet. Send it in electronic format. But the problem is, if the shares are held in a physical form, say your parents have purchased shares in a physical form back in say 2000s or back in say 1990s. They've purchased shares in a physical format. They're still held in which format? Physical format. But don't you think, though, even though they're purchased in physical form, the shareholders might have access to internet today? We'll ask. Let's request them. If the shareholders have been requested and they've given a consent to receive documents in electronic manner, I'll send it in a electronic mode. If they have not given the consent in other cases, then I have no other option. I have to send it in a physical form. We'll divide the chart into two parts. Either shares are held in a dematerialized form or shares are held in a physical form. If they're held in a dematerialized form, I have to send it in a electronic mode. If they're held in a physical form, I'll get the consent. If consent is received, electronic form. If the consent is not received, in a physical format. Then comes section number 137. Before we start, I have to complete this part first before I start the chart. This is a very beautiful chart we have drafted. This basically comprises the entire section into this chart, and this chart will make it easy for you to remember also. Chalo, start with the basics here. Once the financial statements have been communicated under section number 136, we'll conduct an AGM. In the AGM, we'll get the financial statements considered and adopted. Once the financial statements have been adopted, once they have been adopted by the shareholders, it has to be filed with the ROC. Let me come with these words. Where did we adopt it? 1 second. We have to file this. We have to file what? Start. Who is filing it? So let me remove all the explanation I have done. Let's have the basic chart. Who is filing? Company. To whom are we filing? ROC. Within 30 days from the date of conclusion of the AGM. Because it was adopted in the AGM, file it within 30 days. What should I file, sir? Obviously, which financial statements? Adopted financial statement. So if I use the word adopted financial statements, can I already say that they have been audited? Because without audit, even section 136 will not apply. Without 136, we cannot apply section number 137. They are already audited amount. FS including the CFS and all other documents which are required to be annexed or attached to the financial statements. All documents and the financial statements including CFS have to be sent. Within how many days? 30 days from the date of conclusion of the AGM. Original process is completed here. But here comes the problem. Problem is, there are two categories of companies, OPC and other category of companies. Coming to OPC, we don't even conduct AGM. We don't even conduct AGM. AGM is not even applicable to me. Then what to do? I'll come with a special point. Other companies, we have to conduct the AGM and get it adopted. If you have conducted the AGM and you have adopted the document, we'll have to file it. Sorry. Okay, chart is slightly different. Chart is slightly wrong. So let me wait. I'll cut this off. Let me find the other chart. Okay, fine. I'm not able to find it. Let's complete it. I'll make a small modification here itself. If it is unadopted, this should happen like this, not this part. Okay. Unadopted part must be divided into two parts. Okay, listen. Forget about the chart. Listen to me. We'll divide the chart into two parts, OPC and other companies. Other companies will divide the logic again into two parts if the AGM is conducted or AGM is not conducted. If the AGM is conducted, whether financial statements are adopted or they are unadopted. If they are adopted, give me the smoothest process possible. AGM was conducted and financial statements were adopted. If they are adopted, file all these documents to the ROC within 30 days from the date of the AGM. But the problem is, so we have conducted AGM, but the financial statements did not get adopted, they were unadopted. If they are unadopted, we cannot close the financial year. We have to adjourn the general meeting, conduct an adjourned AGM and get it adopted in the adjourned AGM and then file it. What has to be filed? Within 30 days, we have to file all these documents, adopted documents from the date of adjourned AGM to as a final document. But ROC states that, sir, your financial statements didn't get adopted in the AGM. I'm curious, Why did it not get adopted in the AGM in the first place? Submit me within 30 days from the date of AGM the documents, unadopted document in a provisional basis. Are you getting the point? If it is adopted, fine, file the original process adopted. If it is not adopted, first file the unadopted document within 30 days from the date of AGM. I want to provisionally check it. I'm not fully satisfied, but I want to check it. Why is it not adopted? Then you come back and submit the adopted financial statements again within 30 days from the date of adjourned AGM. But the problem is, sir, what if I don't have even conducted the AGM? Then what? I'll still have to file it within 30 days from the last date on which AGM should have been held, along with the reasons why the AGM was not conducted. Lot of people forget this word. I'll file it within how many days? If the AGM is conducted or not conducted, I'll still file it within 30 days from the last date on which AGM should have been held, along with the reasons why the AGM is not held. And the last, if it happens to be an OPC, if it is an OPC, are we conducting AGM at all? No. Then we still file it within 180 days from the closure of the financial year, from the end of the financial year. Given the entire chart amount, don't look at the board. If you are able to answer it without the board, that is very good. Don't look at the board. Look at me and answer the process. We'll divide the chart into two parts, OPC and other company. OPC, because they don't have AGM, it has to be filed within 180 days from the closure of financial year. If it is other companies, will check whether the company has conducted AGM or not conducted. If the AGM is conducted, we'll check whether financial statements are adopted or not adopted. If it is adopted, AGM is conducted and it is adopted, everything is smooth, file it within 30 days from the date of AGM. But if the financial statements are unadopted, file the unadopted financial statements within 30 days from the date of AGM, but the ROs will accept only on a provisional basis. Then, after that, we have to adjourn the meeting, conduct the adjourned AGM and get the document adopted. Once adopted, file the finalized adopted document to the ROC again, second time, within 30 days from the date of adjourned AGM. Then the last category, if the AGM is not even conducted, we still have to file it within 30 days from the last date on which AGM should have been held, along with the reasons why AGM is not conducted. I hope the entire section is clarified in this process. We have special point at the end of section. What about the foreign subsidiary? Copy paste everything we have learned under 136. You should be able to answer it. If the foreign subsidiary is not required to get its financial statements audited as per the country in which it is incorporated, it is sufficient if you submit, not post. 136, post on the website. 137, submit it, file it with the ROC. It is sufficient if they file what? The unaudited financial statements to the ROC. Or if they're not in English language, get it translated into English language. Then if it is required to prepare CFS, submit the CFS. Why do we get this requirement, Amma? I want this clarity. I'm not sure whether the example will make sense or not. Okay. We had an explanation. This will not make sense from here. Let's listen from here itself. If the company is located in India, if the subsidiary company is located in India, this is very beautiful concept. Listen carefully. Very, very beautiful concept. A holding company is here and the subsidiary company is here. Talk about the ROC. Now, ROC will get financial statements filed from one company or every company. Every company, which includes holding and subsidiary. So, in total, the ROC will have two documents in their hand. SFS of the holding company and SFS of the subsidiary company, and holding company will also submit what? CFS of the holding company and subsidiary company. But sir, to read this document, I have to have knowledge of these two documents. So, first I'll read what? SFS of holding. Then I'll read SFS of the subsidiary. Then I'll read the CFS of the holding and subsidiary. Point is clear. But the problem starts arising when it is a foreign subsidiary. When it is which company? Foreign subsidiary. When it is a foreign subsidiary, they're not applicable with Indian law. They're not applicable with Companies Act. They're not applicable with section number 137. They will not file anything with the ROC. If they don't file this document, ROC cannot inspect this document unless we have filed SFS of the subsidiary company. And ROC have no jurisdiction, no power to go demand the subsidiary company outside India. They're not even applicable with Companies Act. But a small adjustment here. Sir, what if this subsidiary company has a place of business in India? Then they're applicable with Companies Act. If they're applicable with Companies Act, I'll demand them to submit this information. Who will demand? ROC will demand such subsidiary company incorporated outside India but having place of business in India, they'll fall under Companies Act. Or if at all they were incorporated itself in India, they'll fall under Companies Act. But the problem arises, if the subsidiary company is incorporated outside India and does not have a place of business in India, they don't fall under company law. If that is the situation, I cannot verify this document unless otherwise I get SFS of the subsidiary company. But I'm not in a position to demand a subsidiary company, but I'm well in the position to demand whom? Holding company. Now the holding company has to submit not 2 but 3 documents. SFS of the holding company, CFS of the holding subsidiary company, and CFS of the, I'm not sure what I've told, let me repeat it again. SFS of the holding company, SFS of the subsidiary company, and CFS of the holding and subsidiary company. Why is this problem arising? Because the subsidiary company is situated outside India and they're not having a place of business in India. They have to get it submitted. Who has to submit it? The holding company has to submit it. Any doubt in this? That's your section number 137. Then the last section we have, section number 134. 134 talks about financial statements, board's report, etc. What should be happening in this section is we have to sign. We have to prepare. What has to be signed? What have to be prepared, sir? We have to sign the financial statements. We have to sign the board's report. And before signing the board's report, we have to first prepare the board's report. We call it as contents of board report. Let's complete the signing process first. The financial statements of the company have to be approved by board of directors. You have done this already in the introduction part of my view. I hope you guys remember it already now. It has to be verified by the board of directors. Once verified, they'll sign it. They have to approve it. Once approved, it has to be signed. But who will sign it? It will be signed by the chairperson of the company if so authorized by board of directors. I'll remember the signing process into two legs. Why? I'll explain it in a bit. In 2 minutes, I'll explain it. I'll divide them into 2 parts. First, it will be signed by chairperson of the company if he is authorized by the board of directors. If he is not authorized by the board of directors, in place of chairperson, it shall be signed by 2 directors, out of which one shall be a managing director of the company if he is appointed in the company. Give me all possibilities. It shall be signed by the chairperson of the company if he is authorized. If he is not authorized, it shall be signed by the 2 directors, out of which one of them shall be a managing director if appointed. Then the second concept states that on top of the directors, it should also be signed by CEO, CFO, company secretary. CEO, CFO, company secretary, but appointing these set of people is not mandatory for every company. If they are appointed, get it signed. Whenever they are appointed, get it signed. So what if I don't have CFO, I have CS and CEO? I'll get it signed by CEO and CS and get it signed by the chairperson if it is authorized by the chairperson. This will be the signing process. So why did we learn it in 2 legs? Signing of board's report is copy pasted, but they'll copy paste only the first point, not the second point. Why would CEO sign the board's report? Why would CFO or CS have anything to do with the board's report? Then get it signed now, you should answer it. It should be signed by the, if he is authorized by the, if not authorized by the board of directors, it has to be signed by at least, out of which one of them shall be a, very good, managing director, if any. That's your signing process. But so what if the company is a 1-person company having only 1 director? Then you have no other option. Why are you asking me? Get it signed by 1 director. We have only 1 director, then we have no other option left. Get it signed by that 1 director. This applies even for the board report concept. And these attachments and annexures have to be sent. For those students who are not comfortable with the word attachment annexure, quick answer. Annexure is something which is a continuation of your original document. Your notes to accounts is a continuation of your original document. It is called as annexure. But attachment is something which has independent value. If the document does not have independent value and it is a continuation of the original document, annexure. If it is having an independent value to itself, it can be read and understood separately on its own. It is called as attachment. Explanatory statement is an annexure to the notice of general meeting. Expert statement is an attachment to the prospectus. We can attach it. We can add it as a separate information as well. I hope that is clear for you. Last topic, let's prepare the board's report. Suggestion before we listen to the next 5 minutes of the class or the accounts of company chapter. Don't listen to it unless you have completed the entire Companies Act. Section 134 is linked with entire Companies Act. Even in the classroom also, if you remember, we have done section 134 after the entire Companies Act is completed to understand the section properly. If you have not completed the revision of entire Companies Act, skip this part, complete the entire revision of Companies Act, then come back to this section. It will make a lot more sense for you to understand this section. Start, Amma. I'll also link every section. That's why I'm saying this. The financial statements, once they are prepared, not everything is mentioned in the financial statements. We also prepare something called as annual return. The annual return has to be placed on the website of the company. and the website where the annual return has been placed has to be mentioned in the board's report. What is it, sir? The board's report will mention the web address, website where the annual return has been posted. Second point, number of board meetings. If you remember section number 173, the company has to conduct at least 4 board meetings in a calendar year, where the gap between 2 board meetings shall not be more than 120 days, shall not be exceeding 120 days. We have to conduct at least 4 board meetings in a calendar year. But sir, can we conduct more than 4 meetings? Yes. Tell me the number of board meetings you have conducted in this year. Mention that in the board's report. Then the director's responsibility statement, DRS, not Dhoni review system. It is, what is DRS? Which suits better, Dhoni review system or director responsibility statement? Director responsibility statement. The director responsibility statement simply states that there are certain responsibilities of the management: preparation of books of accounts, prevention of frauds, detection of fraud, accounting policies to be selected, applying accounting policies, accounting standards to be followed, preparing them in a true and fair view, preparing them on an accrual basis, preparing them on a going concern basis, making sure that internal financial controls are properly implemented, properly being effectively implemented. I've given all points, but we'll come back and discuss again in this chapter itself in the next 2 minutes. Director responsibility statement. These are not the responsibilities of the auditor. These are my responsibilities as a management. Director responsibility statement. Then, whenever the auditor finds a fraud in the company, he has to report the fraud. If the amount is more than 1 crore, he'll report to the central government. If the amount is less than 1 crore, more than equal to 1 crore, central government, less than 1 crore, he'll report to the management. Those frauds which are not reportable to the central government is indirectly reportable to the management, disclose that in the board's report. Then, the declaration given by independent director. Independent director is required to follow the qualification criteria under section number 149 subsection 6. Whether he is following the qualification criteria or not, he has to give a declaration under section number 149 subsection 7. That statement given by the independent director has to be mentioned in the board's report. Again, a warning, read this only after Companies Act is completely done. Then, the auditor might have given qualifications. The company secretary or the cost auditor or the financial auditor might have given qualifications on the financial statements of the company. The board of directors in their board's report have to give explanations, or they don't have explanation, they have to comment on how the qualifications were done, who made it, what actions have we taken, what remedies have we taken to resolve it. We have to comment or give explanation about the qualification, each of the qualification made by auditor and the company secretary, even the cost auditor as well. Then, can the company give loans? Yes, but the company can give loans up to a certain extent given under section number 186. Remember, I want the limit amount. 60% of the paid up share capital plus free reserves plus securities premium, or 100% of the free reserves plus securities premium, whichever is higher. This is the maximum loan they can give. If they want to give more than this, they have to go take permissions, particulars of such loans under section number 186. Then, any kind of contracts or arrangements entered by the company with its related parties. Related parties under section number, I want you to answer this, section number 188. If it is beyond the limit, you have to get prior permission from the shareholders by passing a ordinary resolution. Those transactions have to be mentioned here. The state of affairs of the company, how we conduct the business activities of the company. Next 2 points are relating to dividend. And profits of the company were divided in how many parts? One part transferred to the reserves, the second part recommended to as a dividend. Tell me how much amount was transferred to reserves, how much amount was recommended as a dividend, what was the reasoning behind such recommendations or transfer reserves, explain that in the board's report. Then, those activities which had material changes that occurred after the end of financial year but before the date of preparation of this report. AS4, you remember? Events occurring after the reporting, after the end of financial year, after the end of the reporting period. These, if they have impact on it, mentioned in the board's report. Financial statements are prepared as on 31st March, but board report is prepared after 31st March. If something happens in between this interim period and which is materially going to affect the company, mention that in the board's report. What activities have you guys done to preserve energy, to generate foreign exchange reserves for India, to develop Indian market? If you have done anything, disclose it. You might have prepared a risk management policy of the company. Remember, risk management committee we have discussed under board meetings chapter. Risk management policy. The risk management policy have to be clearly implemented and developed and implemented on a regular basis. CSR, we have not discussed it. Under the corporate governance, we will have to discuss it. Whatever topics of CSR have to be disclosed in the board's report. Such are the matters as may be prescribed. Again, you don't have to remember all the points. You have to remember at least 7 to 8 points so that you'll quantify the answer, fill up the paper, right? Director's responsibility statement. Let's close it up very, very quick, Amma. I've given all the points in the nutshell in 2 minutes back. I've given these words. Give me the logic. They have to apply all the accounting standards. They have to make sure that all the material departures, if any, have to be given with proper reasoning. They have to select accounting policies properly. Not only select policies, but they have to continuously, consistently apply the accounting policy. They must not deviate from every year basis. Last year it was LIFO, this year it's FIFO. No, we have to select accounting policy and we have to consistently follow all the accounting policies in such a manner that we are providing a true and fair view of the state of affairs of the company. Quick answers: we have to follow all the applicable accounting standards. We have to select proper accounting policies. We have to follow them on a consistent basis so that we'll give a true and fair view. The board of directors have to make efforts and take a sufficient care for the purpose of preparing books of accounts in a proper manner. Adequate accounting records are prepared and maintained by the company properly. They have to safeguard the assets of the company, properties of the company. I'm putting you, the board of directors, as a fiduciary position and trustee position. You have to take care of the properties of the company, safeguard the assets of the company, protect and preserve the assets of the company. Your responsibility is to detect fraud. Your responsibility in the first place not to detect is to prevent the fraud first. Prevent it. If you're not able to prevent it, detect the fraud. You have to prepare your entire accounts on an accrual basis, must be prepared on a going concern basis, not as a liquidating entity, not in a cash basis. While you're preparing it, you have to implement internal control systems. Internal financial controls have to be implemented, which has to be adequate in nature and are operating in a efficient manner. Everything is covered. Say simply CCTV cameras. Are they existing or not? Yes or no? Existence should be checked. Then are they adequate or not? Are they covering the entire building? Are they covering the entire office? Adequate or not? They're existing, they're adequate, they're not working. They have to be operating effectively. I want existence, adequacy, and efficiency. All 3 points must be verified by whom? The board of directors. They have to make sure that they have placed proper system to make sure that all the applicable laws on the company are complied with. Because we don't expect the board of directors to have knowledge of everything, they have to place a proper checklist and a system to make sure that all applicable laws are effectively being implemented. That's your section number 134. Again, a warning: if you have not understood it, don't blame the section, blame yourself. You have to understand Companies Act to understand section number 134. Complete the entire section Companies Act, then come back to this particular point, section number 134. That's your entire chapter for our syllabus, accounts of company. I hope you have enjoyed this section. Very detailed session happened for 1 hour 40 minutes closely, 1 hour 35, 1 hour 40 minutes. I hope you enjoyed the session. If you have, please do leave a like on the video, comment on it. We'll see you in the next one. Thank you guys. Let's get started with the next chapter. We have key managerial personnel. A lot of people read this word wrong. KMP does not mean key managerial person. It means key managerial personnel. So what is the difference here? Personnel means it is not a single guy. It is a group of people who will sit together to manage the business activities. And they will be taking the top level managerial decisions of the company to decide the future and the pathway of the company and to make the company profitable. These are the people responsible for it. Key managerial personnel. This chapter actually starts from section number 196, but the story actually starts from section number 203. Section 203 talks about appointment of a key managerial personnel. Appointment of key managerial personnel states that, as we discussed, there is a group of people. We have 3 categories of people whom we have to appoint. The first category itself consists of either appoint a managing director or appoint a manager or appoint a CEO, or in their 3's absence, we may appoint a whole-time director to fulfill the first criteria. Then for the second criteria, second category, we have to appoint a company secretary and we should also appoint a CFO. Are you getting this point? I should appoint either a managing director and CS and a CFO, or if I'm not able to appoint managing director, I can appoint a CEO and CS and CFO. That means company secretary and CFO's appointment is mandatory. But for the first category, I have multiple options. I can either appoint, give me the wordings, I can either appoint a managing director, or I can appoint a manager, or I can appoint a CEO, or in their absence, I can appoint a full-time director. This is given under section number 203. But to understand this section completely, to understand the appointment of this key managerial personnel, first I have to give more importance and understand these 3 set of people: a managing director, whole-time director, and manager. for which we'll apply section number 196. So what is section 196? 196 talks about appointment of a managing director, whole-time director and manager. That's where the process now starts. So remember this, the story starts from section number 203, but because of the fact that we have to understand 203 key managerial personnel, we have to first understand these three set of people. We call them as managerial personnel under section number 196. So let's get started with section number. No, we'll not even start with section number 196. Before we start appointing managing director, whole-time director, manager, we have to understand who they are first. So we'll start with the definition and understanding of who is managing director. That's where the chapter starts. I hope the introduction was sufficient enough to understand the way of thinking. We'll start with the word managing director. So what is managing director? As the name suggests you, he's also end of the day. Forget about the fancy name that is given to him. He's also a director. If he's also director, the logic is, if managing director is also director, all the provisions which are applicable to a director under chapter number 11, board of directors chapter, will also be applicable to a managing director. Then the definition was drafted. So how different is a managing director from a regular director? Director of the company has powers, we agree. But managing director is someone who is being given not with normal powers of the company, routine powers of the company, is being given with substantial powers of the company. That's a keyword you have to remember. Repeat it after me along with me. Managing director means a director who is entrusted, who is being trusted with substantial powers of the management of affairs of the company. Repeat it for me. Managing director means a who is been entrusted with substantial powers of the management of the affairs of the company. And who gave them substantial powers? Substantial powers were given either by the virtue of articles of association. AOA mentioned the powers, or if AOA did not mention the powers, while I was being appointed as a managing director, I was given powers by the contract or the agreement entered with the company. First, it was mentioned in the articles, or it was mentioned in the agreement entered with the company, or I was given powers later after I have been appointed, where I have been, the company has passed a resolution to give me such powers. The resolution could have either been passed in the board meetings, or it can also have been passed in the general meeting. Either resolution passed in the board meeting or general meeting. So that's the definition of managing director. But the point is, so everything is good, but what do you exactly mean by this word substantial power? Now, substantial power is very subjective term. It depends upon company to company. Something which is substantial for your company might not be substantial for my company. We cannot sit down and define what is substantial for every kind of company. Hence, Companies Act stated that, so it is not possible for me to define substantial power, but what will I do is, I'll tell you what is not substantial power. Any kind of administrative activity of routine nature, I want this keyword, remember. Any kind of administrative activities of routine nature, routine activities, regular activities, where your brain is not much required, you're not taking managerial decisions, you'll not be called as substantial power. If it is not substantial power, you're not called as a managing director, you'll simply be called as a director. But to make you guys understand better the word substantial power, the Companies Act stated that there are some examples which we have given which will be considered as administrative activities. So what do you mean by that? Can we add more points? Yes. There are 5 examples that have been given by Companies Act stating that these are administrative activities of routine nature, will not be considered as substantial powers. What are these activities? Sir? First point, affixing of a common seal. Just imagine, you are a director who comes to the office, gets the papers, agreements of the company, say these are the agreements of the company. What do I do with this agreement? My responsibility is only to put a stamp on this agreement, common seal. What am I doing? Am I taking managerial decision? Am I deciding the future of the company? Agreement is decided. I'm only affixing a common seal. I'm not doing any managerial part of the work. I'm doing administrative activity. I'll not be called as managing director. I'll not be considered to be having substantial powers. Or I am signing or endorsing, transferring, signing or endorsing checks, or signing or endorsing negotiable instruments. I know the Companies Act here has become like your BCom exams. Second point and third point are actually one and the same. Signing or endorsing of check or signing or endorsing of a negotiable instrument. Basically, in negotiable instrument already covers your check, but they wanted to expand the wordings and they're giving it as a separate point. So what are the 3 points? I want you guys to be active with me, along with me. As I'm revising, you should also be able to revise it. Affixing the common seal, signing, that is drawing or endorsing of a check, or signing or endorsing of a negotiable instrument. Or forget all this. Once the company has issued shares, the company will issue a certificate, right? A share certificate. Whenever a company is issuing share certificate, the share certificate has to be signed. Signed by whom? two directors of the company, or if the company has company secretary, it has to be signed by one director and one company secretary. Assume you are such director who is signing the share certificate. Are you doing administrative work or managerial work? If it is administrative work, it is not called as substantial power. A director who has been entrusted to sign the certificate of shares. After the share certificate has been issued, if the shares have been transferred in the future, they'll come back to the company. The share certificate will be surrendered and the company has to verify whether this is genuine or not and direct the management of the company to transfer the share certificates. Direct registration of the transfer of any shares will not be considered as substantial powers. Now, last concept. We, the managing directors, have been given with substantial powers. We have not been given with whole of the powers of the company. I have been given with substantial powers. Try understanding it. I, a director, have been given with substantial powers regarding purchase of goods. That means that there's a chance that you, the director, will be given substantial powers for sale. Some other director might be given substantial powers for marketing. Some other director might be given substantial powers for operation activities. So substantial powers is very niche, specialized in nature. Hence, can we have multiple managing directors? Absolutely. Can a company have two or more than two managing directors? Yes. Having two or more than two managing directors at the same point of time is allowed. Then, next logic. I don't want to go much detail into the explanation that we had in the classroom, but a brief introduction was finding a managing director was difficult because the transactions are complex in nature, the business is complex in nature. There's a chance that finding or replacing managing director is difficult in a company. Hence, we may appoint a managing director who will be considered as non-rotational director. That means the topic of rotation will not apply to such director. But if you're doing a business which is not complex in nature, which is not having much of a difficulties, and replacement of such managing director is easy for you, then you may also appoint the managing director as a rotational director. Hence, based on the appointment, based on the agreement, the managing director can be either rotational director or non-rotational director. A small tip for you before we close this off. Either you are a rotational director or a non-rotational director, you will be still counted for the total directors. Don't get this wrong, you are still counted for the total directors for calculating the number of people who are required to retire from the office. But once you have got this number who are required to retire from the office, this will not include whom? Non-rotational director. So conclusions are, rotational director is included in total directors, non-rotational director is also included in the total directors, but non-rotational director will not be liable to retire from the office. If that is understood, rest of two definitions should be very smooth. Whole-time director, very straightforward. Whole-time director is also director. All the provisions which are applicable to a will also be applicable to a whole-time director. Are you getting this point right? Chapter number 11 will also be applicable to the whole-time director. So what's the definition, sir? Whole-time director means a director who has been entrusted with not substantial powers, but he's been entrusted with day-to-day activities of the company. The day-to-day management of the company will be taken care by whole-time director. Now segregate these words and give me the answer. He's a director who is in full-time employment of the company. A whole-time employee of the company appointed as a director will be considered as whole-time director because he's going to execute the activities and implement the activities. That's the reason he's also called as executive director. As similar to the process of managing director, we also have this topic. Whole-time director can be either rotational director or non-rotational director depending upon the appointment process. And the last, this is something where an MCQ can be drafted. A full-time employee of the company who is appointed as an additional director or a full-time employee of the company who is appointed as an alternate director will be considered as a full-time director. This is very usual in the practical world. Why, sir? If we have additional work, we rather than appointing a new person to understand the way of we doing business as a company, will appoint the employee of the company who is understanding the company's culture or the nature or tradition already. It will be easy for him to adapt and act as a additional director or alternate director. That's why reason most of the cases full-time employees of the company itself are appointed as alternate or additional directors. Then they will also be called as full-time directors. Then the last and the most interesting part, manager. The word director is not attached to this word manager. Managing director, whole-time director, done. Manager. He need not be a director. If he is not a director, that means the provisions of the director will not be applicable to a manager. Chapter number 11 will not be applicable to him. If chapter number 11 is not applicable, but he is still a managerial personnel, that means chapter number 13, KMP chapter will be still applicable to a manager, but will not be applicable to will not be applicable with chapter number, chapter number 11, but he'll be applicable to chapter number 13. But What is this manager, sir? Manager means a person who is under the superintendence or under the control of the board of directors. A lot of people get this wrong. He is not superior than board of directors. He is underneath the board of directors. He is working under the control or directions of the board of directors, but he's been entrusted with whole or substantially whole of the affairs of the company. All the affairs of the company have been given to this person called as manager, but he is not superior than board of directors. Let's have a quick comparison of the process. Manager or board of directors, who is superior? Board of directors. But manager or director, who is superior? Manager. Manager has more powers than compared to a regular director, but he is not superior than the board of directors as a collective group. That's where the manager sits down. If the company is given whole of the affairs to a single person called as manager, can you appoint a second manager? What will the second manager do if the entire affairs of the company are taken care by the first manager? The manager is not given half of the powers. He's been given with he's been given with whole of the powers of the company. Entire powers are given to one person. Appointing another manager, does it make sense? No. At the same point of time, appointing a manager and a managing director will not also make sense, because the work which was supposed to be done by manager, substantial part of the company, which has also been now taken care by manager. That's where section 196 starts from. Section number 196 subsection 1 states that no company shall appoint a managing director and a manager at the same point of time. Let me give quick examples to close this off. Can the company have one manager, 3 whole-time directors? Yes, it is possible. Can the company have one manager, 1 managing director and 2 whole-time directors? No, because no company shall have manager and managing director at the same point of time. Second case, can the company have 2 managers and 10 directors? 2 managers. No, company shall have not more than 1 manager. Can the company have 3 managing directors, 2 whole-time directors and 5 directors? This is still allowed because we can have 2 or more than 2 managing directors. I hope the concept is clear. Then talking about the subsection 2. Section number 196 subsection 2 states that we have to appoint a person as a managing director, manager or whole-time director. He will be appointed for a period of 5 years at a time. There is no number of terms or number of restriction on the number of terms on him. He can be appointed for any number of terms, but he will be appointed for a period of 5 years at a time. But the sentence was negatively drafted. No company shall appoint a person as a managing director, whole-time director, manager for a period exceeding 5 years at a time. But once he is appointed for 5 years, if the 5 years is getting over, can he be reappointed? Yes. But reappointment has to be done only after having a proper review of his work in his 5 years term. That means the reappointment has to be done as close as possible to his expiry of term, making sure that we have conducted a proper review of his work. Then we decided to reappoint him for the second period of 5 years. That means the reappointment should happen as close as possible to the end of his tenure, expiry of his term. If this is the expiry of his term, the reappointment should have happened in the last 1 year. But the wordings are in a negative format. The reappointment shall be happening, shall not happen, negative framing. Reappointment shall not happen earlier than, listen carefully, the reappointment shall not happen earlier than 1 year before the expiry of his term. Shall not happen, repeat out after me, shall not happen earlier than 1 year before the expiry of his term. Once a person has been reappointed, he can act for another 5 years. Then subsection 3 talks about disqualification. Given the section number 196, subsection 3 talks about disqualification of a managing director, manager and whole-time director. Don't forget, we still have section number 164, which talks about disqualification of a director. I hope you guys remember the linking we have done between 164 and 196.3. I'm not going to be having much time to revise it much detail into 164. We'll try to cover majority points in that. We have only 4 disqualification points here, and 196 subsection 3 starts with a person who has not attained the age of 21 years or a person who has attained the age of 70 years will not be allowed to act as a managerial personnel. That means a person who is 20 years not allowed, a person who is 70 years not allowed. Get the words clear? A person who has not attained the age of 21 or the person who has attained the age of 70 is not allowed to act as a managerial personnel. But if you have attained the age of 70, there is an exception for you. If the shareholders of the company are able to pass a special resolution even after you have attained 70 years of age, you are still allowed to act. But the special resolution passed shall be given with a proper explanatory statement which should justify the reason why you have to be appointed even after attaining the age of 70. Point is, a person who has attained the age of 70 might not be in a position to take proper decisions in the managerial perspective. Hence, him acting as a managerial personnel might be a detrimental effect to the company. Then if the company itself agrees that he's still eligible and capable of acting as a managerial personnel, we don't have a problem. You have to pass which resolution? Special resolution, and give justification for such appointment. Then we are allowing you to be appointed even after attaining the age of 70. Is that fine? But we have to pass which resolution? Remember that? You have to pass a special resolution. Second point, a person who is an undischarged insolvent or a person at any point of time has been adjudicated as insolvent. At any point of time in your life in the past, if you have been adjudged as insolvent, you will be disqualified to act as a managerial personnel. But try understanding these words. A person who is undischarged insolvent is also disqualified to act as a director. Or a person who has been adjudicated as insolvent in the past is allowed to act as director if his insolvency has been completed. If the insolvency situation has completed and he is now solvent again, he can act as a director, but is not allowed to act as a managerial person. Then third point, you have to remember two keywords here. If the person has at any time suspended payment to his creditors or not. What do you mean by suspended? I did not pay the money at all. Or I paid money, but I have paid money on a compromised basis. I have entered into a composition with the creditors. At any point of time, the person has entered into a composition or have suspended payment to creditors. If you can't manage your own finances and you have the ill mindset of suspending payments, you might repeat it as a managerial director, managerial personnel of a company. I don't want such person to act as a managerial personnel. And the last point, if you have been sentenced to imprisonment for any offense for a period which is more than 6 months. Be careful, Amma. Section number 164 uses the word not less than 6 months. Means either you have been imprisoned for 6 months or more than 6 months. Sorry, not less than 6 months is what they have used. So either you are imprisoned for 6 or more than 6. You will be disqualified under 164. But to be disqualified under 196 subsection 3, you should be imprisoned for a period which is more than 6 months. These are the 4 disqualifications of managerial personnel. On top of the 4 disqualifications, we have certain additional conditions. So what do you mean by additional conditions? If you don't fulfill these additional 4 conditions we have, you are still allowed to be acting. You're still not disqualified. You're still allowed to be acting, but you have to take a prior permission from the central government. If you are disqualified, answer, can you be appointed? No. If you are not fulfilling these additional conditions, can you be still appointed? Yes, but with the prior approval of the central government. So what are these conditions? First condition states that you have been convicted of an offense and have been sentenced to imprisonment for any period. Even 1 day's imprisonment will attract this additional condition. Even if you have been sentenced to imprisonment for any period, or you have been fined with an amount of more than, MCQ point, more than 1000 rupees. But not under any act of India. All acts of India, it is specified under 16 acts is what your syllabus gives, but they have recently amended it and they have brought in it as 19. So remember it as 16 acts as per our SMA syllabus, but practically speaking, how many acts are there? 19 acts. 19 acts mentioned under Schedule 5. Remember, we have opened the Schedule 5 and we have gone through all the 19 acts there. These 19 acts, if you have been imprisoned for any period or you have been fined with an amount of more than 1000 rupees, you will be considered as not fulfilling condition. That means you are still allowed, positive sentence, you are still allowed to be acting as managerial personnel, but with the prior approval of central government. Or second case, forget about being imprisonment, you have been detained. We had a doubt about you and you got detained. Detained in which act? Detained in conservation of foreign exchange and conservation of foreign exchange and prevention of smuggling activities act 1974. If you have been detained for any period of time, detained, not been convicted, not been guilty of it, even though detained, you will be not allowed to act as managerial personnel until you got a prior permission from central government. Or a person who has attained the age of 70 years, we have just discussed about it. A person who has attained the age of 70 years is still allowed to act as a managerial personnel, but we have to pass which resolution? Special resolution. But think carefully. If this special resolution could not be passed, but we were able to pass a ordinary resolution, we will be still able to appoint him, but we have to, in addition to ordinary resolution, also get a prior approval from the central government. Give me all possibilities, Amma. If you have attained the age of 70, are you allowed or not allowed? Not allowed. But if the company has passed a special resolution, is it allowed? Yes, as an exception to the disqualification point. But If the company has not passed special resolution but it has passed ordinary resolution, can you be still allowed? Yes, but with the prior approval of central government. And the last additional condition states that you have to be resident of India. But this logic does not apply to a Section 8 company. But the word resident is very different here. It is not about 182 days. The word resident here states that you should have stayed in India for a continuous period of not less than 12 months immediately preceding the date of your appointment. If say this is your date of appointment for the last how many months? For a continuous period of 12 months, you should have stayed in India, then only you will be called as resident. Or there's a second way in which you can be called as resident. Either you're not stayed in India for 12 months, but you're coming to India for the purpose of taking up employment in India, or for the purpose of setting up a business or a profession, vocation in India. If you're coming for either of these two activities, business, profession, or employment, then you'll, even though you have not stayed in India for 12 months, you're still called as a resident. If you are a resident, you don't have to take approval from central government. Get this correct. If you are not a resident as per this section, are you still allowed to act as managerial personnel? Yes, but with the prior approval of central government. Now, done with all the formalities, let's actually appoint them. Who will appoint the managerial personnel? Managerial personnel is appointed by the board of directors of the company by passing a board resolution. Once they have been appointed, the appointment have to be ratified, accepted, approved by the shareholders in the next general meeting. But if at all in the next general meeting the shareholders don't ratify it, whatever activities that are done until that point of time will be still considered as valid, shall not be considered as invalid. Right? If it is ratified, everything is good amount. If it is not been ratified, for those few months on which you have already acted as a managerial personnel, all the activities done will be still considered as valid, or the negative framing will not be considered as invalid, shall not be considered as invalid. Next logic. Once a person has been appointed by whom? Board of directors. Once he is appointed, who is curious to know whether he is appointed or not? ROC. We have to go file it with the ROC. So, basic answers. Who will file it? Company. To whom will I file it? ROC. Intimating ROC is that so and so person, this guy has been appointed as a managerial personnel under section number 196. You have to file it in form number MR1. What is MR? Managerial remuneration. MR1, you have to file it within 60 days from the date of such appointment. That's your section number 196 along with the linking of schedule number 5 part 1. That is additional conditions we have. I hope you guys understood it. I know we have spent close to 25 minutes, but it is one of the biggest section of this chapter. Rest of the section should happen very quickly. Chalo. The one of the biggest was 196. The biggest section is 197. It will also going to take time, but trust me, this will be important. There will be questions asked from this part. What is section number 196? Payment of remuneration. Remuneration to directors, key managerial personnel, and disclosures about such remuneration to be paid. We'll have divided this topic into two parts. Remuneration if the company is making profits, remuneration if the company is not making profit. Logic here is, listen Amma, I'll rectify this logic. This is something which is wrong, not the right perspective. But as of now, this is how you have to learn it. I'll rectify it within the next 10-15 minutes. If the company's profits are increasing, why are the profits increasing? Not because of shareholder. Shareholder has not done anything. Sitting at his house, he just gave finances to the company. If the profits of the company is increasing, can I say the efforts put in by the managerial personnel or the directors of the company are increasing? If their efforts are increasing, their remuneration should also increase. But at the same point of time, if the profits are decreasing, that means there's a chance that the efforts of the managerial personnel got decreased. If their efforts is decreased, their remuneration should also be decreased. That's the reason why they have put a link between profits and remuneration, stating that whatever remuneration will pay will be linked to the net profit of the company. But while it is being paid for net profit, I don't want entire profits of the company to be distributed to the managerial personnel, to the top level management. The entire profit should actually belong to whom? To the shareholders, not to the managerial personnel. It should be actually belonging to the shareholders. Hence, they have put in a maximum limit up to which remuneration can be drawn. So what are we going to learn? If the company is making profit, what's the maximum amount of remuneration that can be drawn by a managerial personnel as well as directors? We'll divide the logic into two parts based on whether you are a managerial personnel or whether you are a other director. If you are a managerial personnel and you are only one of them appointed, either managing director or manager or whole-time director, only one of them is appointed, I'll pay you a maximum. Remember, this is maximum of 5% of the net profit. But in case the company has appointed two or more of those managerial personnel, I'll pay you more than 5%, but I'll pay you how much? 10%. Listen carefully. 10% is not for each managerial personnel. Imagine if the company has 10 managing directors, I'll give 100% to the managing directors. No, obviously. 10% is for all the managerial personnel combined together, taken together. All of them taken together, I'll pay you how much? 10%. That's the reason. Now, understand, if the company has 3 managing directors, can I have 3 managing directors? Yes. If I have 3 managing directors, all 3 of them combined together will get how much? 10%. If I have a 1 managing director or 1 manager, they will get how much? Maximum of 5%. Come back to this. If I have 3 of them, all 3 of them combined together will get 10%, but how much will each of them get has not been defined by Companies Act. How much which will each of such managerial personnel will draw is a headache of the company. You guys decide it internally. What will I give you? I'll not give you the remuneration of each person. I'll give you the overall maximum remuneration. I hope the word is understood now. Overall maximum remuneration of managerial personnel will be maximum of 10%. Then, if the company has other directors, this is very logical. If the company has managerial personnel and also other directors, can I say majority of the burden of the company is already in the shoulders of managerial personnel, the workload on the directors got reduced. If the workload is reduced, obviously remuneration will also be reduced. I'll pay all the directors combined together a maximum of 1%. But on the other hand, if the company does not have managerial personnel but only has directors, that means entire workload of the company, even the managerial decisions have to be taken by directors. They should be paid more than 1%. They'll be paid, all of them together will be paid a maximum of 3%. But there will be scenarios where this overall remuneration will not be sufficient for you. Companies Act states that if you want to pay more than this amount, you can get in prior approval from the shareholders in the general meeting by passing a special resolution and pay more than the limit specified. Let me give a couple of examples to clarify one more logic. We have 3 managing directors and we have 1 whole-time director and we have 3 directors in the company. Give me the remuneration, guys. These 4 set of people all together combined will get how much? 10%. Because the company has managerial personnel, the director will get how much? 1%. In total, they'll pay how much as a company? 11%. Or second scenario, give me another scenario. We have 3 managing directors. We have 1 manager and 5 directors. If you have only 1 manager, this manager will be getting how much? 5%. Because the company has managerial personnel, the directors will get how much? 1%. In total, we will pay how much? 6%. Or last case, if the company does not have managerial personnel at all, it has 8 directors in the company. 8 directors, because there is no managerial personnel, they'll get how much? 3. In total, they'll pay how much? Whatever combination you may pick, the overall maximum remuneration shall not exceed 11%. But if this 11%, if you feel that it is not sufficient, you may pay more than 11% by passing a special resolution in the general meeting. If the shareholders agree to distribute their money, what do we have a problem with? Pay the money, we don't have a problem. But remember, this 11%, 6%, 3%, 1%, whatever we have done, this is maximum remuneration. Is it mandatory that the company should pay maximum? Can the company also pay less than this? Absolutely. Then, who will determine the remuneration? Remuneration will be determined in 3 ways. Either it will be directly mentioned in the Articles of Association or it will be mentioned through the resolution passed by the shareholders. But if the Articles of Association specifies that you have to pass a special resolution, then we'll pass a special resolution. What are the 3 options of my first option? AOA, or second option will pass a resolution, or if the article so required, will pass a special resolution. But this is something which is interesting logic. 197 subsection 4. What happened was, company gave you the maximum that is allowed as per the Companies Act, assuming that remuneration came to be 50 lakhs. Let's take an assumption. You are one of the managerial personnel and the maximum that was allowed to be paid for you was 50 lakhs. And the company has decided to pay you 50 lakhs. But you guys are so greedy that you want more than 50 lakhs. But is it allowed or not allowed? Not allowed. If you want to pay more than 50 lakhs, you have to go to the shareholders and pass a special resolution, which is difficult to attain. What people started doing is, people stated that I was appointed as a director. For the services I have provided as a director, I'm getting this remuneration so-called as 50 lakhs, which is a cap, which is a maximum amount put in by the Companies Act. But as a director, I'm also providing other services in the company. other services in the company, other activities have given, other knowledge have given to the company. For the other services, I will draw 20 lakhs extra. But these other services shall not be included in the remuneration of director because they are not in the capacity of a director, they are in other capacities. But who will decide whether he is eligible for that other capacity or not, whether he is actually provided services or not? The board of directors is in a position where he can misuse this word other capacity, other services, and intentionally draw money which is beyond the maximum limit. Then Companies Act came with a solution for it, stating that all the remuneration received by a director, even for providing other services in other capacities, will also form part of his remuneration as a director and will be counted for the limit of that 11%. But so there's a chance that I've actually given other services to the company genuinely and I deserve money for it. Then the Companies Act states that we will also consider the exceptional cases where we shall not include that in your remuneration. I hope you understood it. Because they were trying to bluff it, we initially stated that every other capacity of services provided shall also be included in your remuneration. But if it is proven that it was a genuine service provided, then I will exclude it. When will it be considered as genuine service? Where the services provided are of not regular nature. If it is of regular nature, anybody could have done it. Why did you do it? I don't believe you. If the services are of professional nature, only a professional can do so. And you have to be such professional to do such services. Give me the wordings here. If the services provided by the director are of professional nature and the director possesses requisite qualifications to conduct such profession. Imagine, I was appointed as a board of director of the company by the fact that I am a cost accountant. Being a cost accountant, I was appointed as a board of director. I am providing my services in the field of costing, in the field of financial management. But there was a legal case filed on the company and I have defended the company in the NCLT acting as a company secretary. My services as a company secretary was used in other capacity. Am I qualified company secretary? Yes. Do I have requisite qualification to practice the profession? Yes. Then, if they are professional nature of services and the director has qualifications to do it, then I'll genuinely concern that you have actually provided services. Then it will be included, excluded. Excluded. Of the two words you have to remember, the services are of professional nature and he possesses a qualification to practice such profession, then it will be excluded. And you should not think that you are having that qualification. Who should think that you are having qualification? NRC or the board of directors. If you ask me, I'm a great artist. People who have taken my regular classes will know I'm a very great artist. If you ask me, I would say I'm a great artist. But it should not be me feeling about it. The other party should also feel that I am expert or qualified to do such activities. Can I give a civil engineering plan? If I give it, what will happen? Next day morning, the plan will collapse. But I believe that I am a great artist. I can give any plan required. If I believe it, is it sufficient or should the NRC believe it? NRC should believe it. In the opinion of NRC, you should have requisite qualification. Sitting fees, a very interesting topic. And there is MCQ on it. Section number 197, subsection 5 talks about sitting fees, where the logic states that sitting fees is an amount of money paid to the directors to come and attend, encourage them to come and attend board meetings and committee meetings because their knowledge is important for the meetings. They are encouraged by paying sitting fees. The amount of sitting fees paid shall not form part of your remuneration. That 11% we have discussed will not be included in that. But the remuneration sitting fee shall not exceed 1 lakh per meeting of the board or of the committees. But we have given importance to two set of people. We want these two set of people to more encouraged to come and attend. Independent director and a woman director. Independent director and woman director shall be given sitting fees which shall not be lower than the sitting fees paid to the other directors. Let's assume the sitting fees paid to other director was 80,000. The sitting fees paid to independent director, woman director shall not be less than 80. Can it be exactly 80, sir? Yes. Can it be more than 80, sir? Yes. But it shall not be more than 1 lakh rupees end of the day. Then coming to mode of payment, how would I pay this remuneration? Usually, as we discussed, remuneration will be percentage of the profits. But problem is, the percentage of this net profit would be understood only after the end of the financial year. Net profit word is something which will be understood only after the end of the financial year. During the financial year, I'll not know exactly what is net profit. Then comes the topic, I'll pay monthly. But if I pay monthly, I'll not be able to encourage the managerial personnel to work harder to make more profit so that they'll get more remuneration. But if I base it completely based on net profit, they'll not get regular fixed income on a monthly basis. There comes the last and the most important and the most practical option. Partly in monthly payment and partly in percentage of net profit, which is going to encourage you to efficiently work, but also give you fixed income on a regular basis. I'll talk about insurance in a bit. Independent director, I want 4 points of independent director. What is included in his remuneration, what is not included. Can he get salary? No. He is not an employee of the company. Independent director should not be influenced by the company. But he'll get a percentage based commission from the company. He'll be entitled to reimburse whatever expenses he has incurred while he was conducting his activities as a independent director, and he'll also be getting sitting fees as we were just discussing about it. Three things which are allowed. And there is one thing which is not allowed for an independent director. To maintain his independence, can he hold shares in the company? No. Hence, he is not entitled to any stock options. Employee stock option or ESOPs or any sweat equity shares will not be allowed for a independent director. Now, next logic. If monthly payments have been done without the linking of net profit, try understanding it. We paid monthly payments and the monthly payment came out to be 50 lakhs. But at the end of the year, we calculated the net profit and the maximum amount of remuneration payable came out to be 40 lakhs. That means we have already paid in excess of the maximum amount of remuneration that was allowed to be paid. And we have paid how much excess amount? 10 lakh rupees. So what shall we do with this excess amount? Is the director entitled for that excess lakhs? Excess 10 lakhs? No. He was entitled, he was supposed to get only 40, but we have already paid on a monthly basis without being aware of the net profit. We have already paid how much? 50. Excess remuneration has to be refunded. But we don't expect the director to have this money readily available in his pocket. Will give him time to repay the money. This amount has to be refunded within 2 years or such lesser period as allowed by the company in its articles of association. But amount must be refunded or may be refunded. Must be refunded. But remember this 11% limit we have put in, the 40 lakhs limit that comes here. Can this be increased also? Yes, we just were discussing about it. If that 11% is not sufficient, you can still increase it by passing a special resolution in the general meeting. Then why don't you also increase this to 50 lakhs and allow this 50 lakhs? Yes, we can do so. But look at the procedure. First, initially it is called as excess. You have to refund it. But the refund of such excess money can be waived off by the company by passing a special resolution, and it has to be passed within 2 years. Until such amount has been repaid, the money will be kept in the hands of the director. But money belongs to whom? Company. Kept in the hands of the director. He'll hold it as a trustee of the company until the money is refunded. But extra point. If the company has defaulted in repayment of banks, financial institution, debentures, creditors. Imagine this. Company has defaulted creditors. The creditors are waiting here for getting the repayment of their interest or loan amount given. And you're stating that we are waiving off the excess amount given to managing director for not even eligible or entitled to receive such amount. Can you waive it off? No, unless you got the prior approval from these creditors or the managerial personnel, creditors or the debenture holders or the banks or financial institutions. If you got their prior approval, then it is allowed. Otherwise, no. So, sir, if the company has not made any default, is it allowed? Yes. By passing which resolution? Special resolution. If the company has made default, I have to get their approval first, then also approval from the shareholders by passing a. Then it is allowed to be waived off within the period of 2 years. But this is section number 197 now. But there is another section which is very similar, section number 199. Refund of excess remuneration in certain cases. What is this certain case? When will this certain case arise? When the financial statements have been conducted at fraudulent activities, or the accounting standards or the procedures of Companies Act have not been properly complied with, the financial statements will be wrongfully prepared. If they're wrongfully prepared and we got to know about the wrongful preparation of these financial statements at a later point of time, the NCLT will pass an order. Think about it. NCLT will pass an order asking the company to go back, reopen your financial statements and recast your financial statements. You have to remember this word, recasting, or you call it as restating. Recasting your financial statements, and this happened because of what? Due to fraud or due to non-compliances. You have to remember these three words. The financial statements got restated, recasted due to fraud or non-compliances. Sir, why did this happen? There's a very, very high chance that the board of directors might have intentionally done a fraudulent activity, intentionally did not follow the Companies Act procedures to intentionally escalate the profits. What will he get if the profits are escalated? He'll get higher remuneration because remuneration was linked with his profits. There's a chance that he has done it intentionally. Then Companies Act states that excess remuneration in these certain cases, recasting of financial statements have to be refunded. Has to be refunded when within 2 years you've done fraud. I'm not gonna give you any time limit. You have to refund that money immediately without even a chance of waiver. So what's the difference between 197 and 199? 197, you have mistakenly paid excess money, you are allowed to waive it off, or you are allowed to give them time up to 2 years to repay the money. But if in case of fraud or non-compliance, you might have done it intentionally, straightforward, silently come and pay the money back. There's no other discussion that's going to happen. Refund the money immediately without any waiver possible. Even with the approval of all shareholders, you cannot waive it off. Must be refunded. That is your section number 199. Come back to section number 197. Insurance. One of the complicated or one of the contradictory process here. Remember, whenever company have done a fraud, whenever company has done a non-compliance, whenever the company has done any negligence, default, non-compliances, contravention, they'll be punished. But think about it. A director of the company have done negligence or non-compliance or default or have run a fraudulent activity. Whatever the reason might be, whatever the section might be, if they have done a default, if you guys remember, all the penalties under Companies Act are drafted in this way will divide them into two parts. Company and the officer in default. The officer in default being punished makes sense to me because he has done something wrong. But try understanding it, because of the default done by the director, who is also punished? Company. What has the company done as a whole? The managing director has done default, punish him. That makes sense. It is justifiable. But who is also being punished? Company. That means company's responsibility is to make sure that this guy doesn't do the fraud. But I understand this logic, but company being punished is a little unfair on the company. Then what does the company do to protect itself from such losses? I'll take insurance. I'll take insurance for the losses that might arise because of the default or non-compliance or negligence done by the managerial personnel or employee or CEO or CFO. Any person, you name it, you have it. If they might have done default, I will suffer. To protect myself from that suffering or loss, I'll take an insurance. But insurance is not going to come free of cost. I have to pay premium on the insurance. The premium paid on such insurance will not form part of your remuneration because you have not yet done any default. If you have not done a default, but on a precautionary basis, company takes an insurance and pays premium, what have you done to include that in your remuneration? Will be forming part or will not form part of remuneration? Not. Just in case you have actually done a default and the insurance was actually useful now. Can I say all the premium paid was a part of this process now? Then the Companies Act states that if the default actually happens, if it is proven that you are guilty of something, then all the premium paid shall form part of his remuneration, shall be treated as a part of his remuneration. This insurance you have taken is called as fidelity guarantee. Fidelity is basically based on trust. You are being appointed as a person in the office based on trust to perform activities correctly. But if you break the trust, we want a guarantee for the break of such trust called as fidelity guarantee. Then the next category. Listen carefully. This is an amendment, so this might be asked. Listen carefully before we start the process. If the company made 10 crores of profit, how much? 10 crores. The maximum remuneration I'll pay is 11%. That is 1.1 crores. Next, if the company made a total profit of 10 rupees this year, 10 rupees. What's the maximum remuneration I'll pay to all the directors, all the key managerial personnel, all of them combined together? 1.1 rupee for the entire financial year. Are you expecting them to stay back in your company if you're paying 1.1 rupees? Sometimes this 11% is not making any sense because we started this chapter, we started this section with the assumption that the profits of the company are linked with the efforts of the board of directors. But observe it, for the first year of incorporation, we had to do a lot of efforts into marketing, branding the company, where we incurred a lot of expenditure, which will not benefit current year, but will increase the profits in the future years. Current year profit might be low, but the efforts put in by the managerial personnel very high in the initial years. If you link the profit with remuneration directly, it will not justify the efforts put in by directors. So what is more better justification or better comparison? Based on efforts or based on profits? Based on efforts. If the efforts are increasing, remuneration should also increase. If efforts are decreasing, remuneration should also decrease. But sir, how would I judge the efforts? Depending upon how much capital are you managing in the company, I'll judge whether you're put in more efforts or you're put in less efforts depending upon how much capital you are managing in the company. The capital is here called as effective capital. How much effective amount of money was utilized by you as a person. Then based on it, I'll judge the amount of efforts you have put in. Based on it, I'll pay you remuneration. But this logic is required if the company is making inadequate profits. I don't have enough profits or I have no profits at all in the absence of profits. Wordings are, if the company is paying having no profits or inadequate profits, then basing the remuneration based on net profit does not make sense. I'll base it on something called as effective capital. You have to remember this table. This can be a question in the near future in your exams. If the effective capital is negative or less than 5 crores, if it is less than 5 crores, your amount of remuneration paid, forget this for the timing, I'll come to it. Just focus on this part right now. 60 lakhs. If your effective capital is more than equal to 5 crores but less than 100 crores, 84 lakhs. If it is more than equal to 100 crores but less than 250 crores, 120 lakhs. If it is more than 250 crores, try understanding it. For the 250 crores, I promised to pay how much? 120 lakhs. If your excess capital, if your effective capital is more than 250 crores, I should pay you. Obvious answer, 120 lakhs or more than 120 lakhs? Obviously more than 120 lakhs, but listen it carefully. If the company has 251, I'll pay him 120 lakhs. If the company has 10,000 crores of effective capital, if I still pay him 120 lakhs, doesn't make sense. Efforts in this company will be obviously more. Hence, Companies Act states that to solve this problem, for the first 250 crores, any which ways I have promised 120 lakhs, I'll pay it. Anything in excess of this 250, I'll pay you 0.01% of that remuneration of the capital. So wordings will be, I'll pay you 120 lakhs plus 0.01% of the effective capital in excess of 250 crores. So how will it work, sir? If you have 300 crores of effective capital, what will happen? For the first 250, eliminate it. I'll pay how much? 120 lakhs. For the excess amount of effective capital, how much is excess? 50 crores. For this 50 crores, I pay you how much? 0.01%. That's your process for managerial personnel, each managerial personnel for each financial year. On the second aspect to it, if at all it is director, simply divide by 5 amount. Divide by 5 is not given by the law, but we'll do it for understanding. 60 lakhs divided by 5, 12. 84 lakhs divided by 5, it comes to 16.8 lakhs, but I'll remember that as 17 lakhs. Remember, divide by 5 is not given by company law. We drafted it for our convenience to remember the numbers. Remembering these numbers itself is difficult. 60, 84, 120. There's no logic behind it. Remembering this will become another burden for me. So we have come up with divide by 5. 120 lakhs divided by 5, 24 lakhs or 24 lakhs plus 0.01% of effective capital in excess of 250 crores. Last point of section 196, or wait, I'll have a linking of this topic. Whenever you're paying remuneration when the company is having losses or when the company is having no profit, inadequacy of profits, there comes a point that we have to be very careful and cautious when you're paying remuneration. If the company is not having much business, paying huge amount of remuneration will have a negative impact on the business activity. But try understanding it. If the company has made huge profits, huge amount of profits have been made, I don't care if you pay a little extra amount of remuneration. But if the company is suffering in itself and paying excess money to the managerial personnel does not make sense to me. Hence, Companies Act states that while you are deciding the amount of remuneration if the company is having no profits or inadequacy profits, there are certain factors which you have to consider before you fix the remuneration. Section number 200. 196 is done number 200. What is 200? Central government or the company to fix remuneration in certain cases. But what is that certain case? If the company is having no profits or the company is having inadequacy of profits, there are certain factors to be considered. They have given some examples of factors. Try understanding his qualification, his experience, his services provided or performance linked with services, the performance of the company in the last few years, is it growing or is it reducing? How many shares or securities he is holding in the company? If he is holding more number of shares, he is also owner of the company. He'll be working for the company, he'll be working for efficiently for the company, not for remuneration, but for protecting himself as a shareholder. I don't have to pay him huge amount of remuneration based on his securities, based on the performance, based on the operations of the company, based on his qualification, based on his experience. Forget all this. Based on the financial position of the company, how much money do I have in my pocket will be a factor to decide how much will I pay. Or for first few years, I'll pay you less amount. Try understanding my situation as a company. I'll pay you less amount for a few years, survive by other sources of income. After company starts making profit, I'll give you extra remuneration later. This can be an agreement with the director, but this is possible only when the director has other incomes. Imagine I am a whole-time director of your company. My sole bread and butter comes from your company alone. In that case, will I have other source of income? That means you have to pay me excess money to make sure that I survive. But if he is a director who is drawing remuneration from other capacities in the company, I can reduce his remuneration as director. Or he's a director who is drawing remuneration from other companies acting as director, I can reduce his remuneration for our company because we are in the time being making losses. These are the factors which are considered. This has been asked as a question. You can refer your practice panel question number 3 for this. A small point, but has been asked for 7 marks question already. Then comes the last point for listed company point, disclosure. Listed companies have an obligation to disclose certain matters in the board's report. How much time? 52. Probably 15-20 more minutes from here, we should be able to close the chapter. I hope you are enjoying the conceptual clarity on the topic. If you are enjoying or understanding the concept or liking the session, please do leave a like on this comment, like on this particular video. Listed company, give me the process here. What's happening here? A listed company, every listed company has to disclose in its board's report. What have to be disclosed? The ratio of remuneration of a director compared with the employees. Try understanding. Obviously, director is paid more as compared to employees. But if he is paid, imagine this, an employee of the company is paid 10,000, whereas a director is paid 10 crores or 1 crore assuming. There's a huge amount of parity difference between the amount of remuneration drawn by employee and amount of remuneration drawn by the director. Why is this parity? Justify it to me. If I don't like it, I'll remove such director. I want the comparison between employee and a director. Because we have only 15 directors, we'll compare for each director. Because we have number of lakhs of employees, maybe thousands of employees, comparing with each employee will not be practically possible. I'll take the middlemost number of the employee's remuneration. Give me the wordings here. Every listed company in its board's report have to disclose the ratio of remuneration of each director with the ratio of remuneration of each director to the ratio of median employee remuneration. What's the keyword you have to remember? I have to disclose it in the board's report. Ratio of remuneration of each director with the amount of median employee remuneration. Second point, I have to disclose in the board's report again the names of the top 10 employees of the company, not based on performance, based on remuneration, called as top 10 remunerating employees, where if they are appointed throughout the financial year and they're drawing an amount of remuneration of not less than 1 crore 2 lakhs. People get this wrong. People write it wrong. Don't write it as 1.2 crores. This is not 1 crore 20 lakhs. It is 1 crore 2 lakhs. How much? 1 crore 2 lakhs. This is the right presentation of it. Not less than 1 crore 2 lakhs. Or there's a chance that they bluff it. How do they bluff it, sir? They will appoint the person only for 10 months. Only for 6 months in the financial year. And they'll for the 6 months pay rupees 1 crore. That means they're actually paying a very huge, hefty amount of remuneration, but not paying more than 1 crore, appointing them only for 6 months. It is also bluffing and not disclosing it. Then company side states that if you are smart, I am smarter than you. Logic states that if you're appointed throughout the financial year, 1 crore 2 lakhs. I'll check for the entire financial year. But if you're not appointed throughout the financial year, appointed for a part of the financial year, I'll not check on a yearly basis, I'll check for monthly basis. If your remuneration is not less than 8,50,000 per month, I'll have to consider the process of disclosing it in the board's report. Then very, very unusual point number C. If a person of the company, employee of the company, who is drawing a remuneration which is in excess of the remuneration drawn by managing director, whole-time director or manager, the remuneration drawn by those managerial personnel is less than the remuneration drawn by me as an employee, and I'm holding not less than 2% of the equity shares of the company either by myself or through my spouse or through my children, there's a chance that you might be some other way influencing the company and drawing additional money intentionally. You have to disclose his name. While you're disclosing, you don't have to just disclose the names, you have to disclose all the particulars about them: designation, qualification, title, what age of they, nationality, residential status, what activities have they done in the past, what performance have been there in the past. All the particulars have to be disclosed. Moving forward, section number 198 talks about the net profit. Sorry. The net profit which we were discussing about section number 197, 11% of net profit, 5% of net profit, 3%, 1% of net profit. All the net profit logic comes from section number 198, which is, if by this time you should be comfortable with your income tax, so you should understand it. Incomes which are allowed, incomes which are disallowed. Expenses which are allowed, expenses which are disallowed. That's what we have been doing under PGB chapter. That's what the Companies Act does under section number 198. States that all your regular income will be allowed. On top of it, all the subsidies received from the government or any subsidy received from the agency of the government or central government, state government will be included in your remuneration. Second part, there are certain incomes which are not allowed, which are allowed or disallowed. Disallowed. There are certain incomes which are disallowed. What are the incomes which are disallowed? These are the incomes where the board of directors have not put in much efforts into it. If they have not put in efforts, why would I include them in profits and pay them excess remuneration? What are not included? 4 points. I'm going to read them in the same order. This is 3, this is 4. First point, the profits raised by the company by issue of shares at a premium value, securities premium. The company has a goodwill. Because of the goodwill, company got excess money. Has the board of directors done any excess amount of activity for getting this money? No. Then the Companies Act states that that amount will not form part of your remuneration. The profits which are generated by issuing shares at a premium. Once the shares have been issued, if the calls on the shares have not been paid, will forfeit the shares, and the money which is already paid will be a profit for the company. Profit on forfeiture of shares or reissue of the forfeited shares will not be considered as a effort put in by the board of directors. Because the shareholder did not pay the money, I forfeited and reissued it and I got profit because of it. That amount will not be considered as an profit generated by the board of directors. Or I went and purchased a property, a land, and because of the infrastructure development that happened around the land, the value of land got exponentially increased. If the value of land got exponentially increased, what has the board of directors done for the purpose of increasing the value of land? Nothing. Will be included, excluded? Excluded. Change in the carrying amount of the asset. Then last point, I, the board of directors of the company, after the increase of the value of the land, have sold the land. If I have sold the land, can I say I have made profit out of it? But this profit was not because of the business decisions I've taken as the company. This was purely because of the market conditions. I've not done any extra work to get this profit, will not be forming part of your income. This is your revaluation profit. This is your realized but capital profits. Will not be part of your income. Expenses which are allowed. What are the expenses which are allowed? Write everything that comes to your mind. Rent, interest, commission, or depreciation. All the expenses which are allowed. Bonus, remuneration, charges, interest, or repairs, depreciation. Every single expenses, including your normal taxes, will be allowed. This is important to study. Expenses which are expenses which are disallowed. What are the expenses which are disallowed? Your capital profits, that is capital losses. Expenses which are disallowed, capital losses or the revaluation losses. The value of the land got decreased. It's a loss, but it is not attributable to me as a director, or the asset got sold and we made a capital loss on it. It is not attributable to me as a director, will not be included in the expenses which are disallowed. Then special kind of taxes, any special taxes. Remember the undisclosed income taxes? You'll be charged with 78% of taxes. That's 78%, 60 plus surcharge 25 plus higher education says 4%. That 78% tax is a special rate of tax, will not form part of your expenses. Last couple of sections, section number 202 and section number 203. 202 states that compensation for loss of office of only the managerial personnel. Remember, this is going to be applicable only to the managerial personnel, managing director, whole-time director and manager. What happens here? If you have been appointed as a managerial personnel for a certain period of time, say assuming 5 years, and you have been removed from your office abruptly without any proper reasoning behind it, say assuming after 4 years, you have lost your office for a period of 1 year without your default, without your default or wrongful activity, the company has without any proper reason removed you. You have lost office for how many years? 1 year. You will get remuneration for that 1 year. Compensation for loss of office of a managing director, manager or full-time director. But we'll start with how much compensation will he get. Remember the words carefully. The remuneration. What will the compensation get? The compensation shall not exceed the remuneration that would have been earned if he had been continued in his office, he has been in his office for the remainder period of his term. What's the remainder of his term in our example? 1 year. I'll pay remuneration for 1 year. or a maximum period of 3 years, whichever is earlier, whichever is shorter. What's the wording, Sama? Remuneration that would have been earned if he had been in the office for the remainder of his term or for a period of 3 years, whichever is shorter. But the word remuneration here will have to be calculated based on not last drawn salary, but have to make an average of the last 3 years. But if you are a director, if you're a managing director who's been appointed for less than 3 years, I'll make average for such period for which you're appointed. Sir, I've been appointed for 5 years, I'll make average for the last 3 years. If you have been appointed for 2 years, I'll make average for 2 years itself. That's your remuneration point. Then comes the point, when will I not pay remuneration? What will happen here, Amma? If this option is given, this is very lucrative logic. This is very managerial personnel friendly and opposed to company. Why, sir? If you have been appointed for a period of 5 years, assuming, and he has actually done a misconduct in the company, he has done a fraud in the company, he has done something wrongful activity in the company, and he was removed by the company here, he'll get 3 years of remuneration without doing any services free of cost. If he's getting compensation for every single time he's removed, he'll actually want the company to remove him so that he'll not be required to work and he'll still get compensation of such remunerations. Then company had stated that there are 6 circumstances in which no compensation will be paid. That means these are the 6 cases in which you have done something wrong or you have not actually lost your office, hence you're not going to be getting any compensation for the loss of office. Why, sir? What are the 6 categories? First, what happened is the company is getting reconstructed. The company is getting merged or amalgamated. Say A Limited is getting merged into B Limited. Once a merger happened, A Limited will lose its identity. B Limited will continue its identity. We call it as resulting company or we call it as transferee company. A Limited is called as transferor. I hope you have already studied the compromise arrangement, so you are comfortable with this word transferor, transferee. A Limited is a transferor company. B Limited is a transferee company. The identity of A Limited will close in the future. That means the A Limited will get dissolved, liquidated. All the employees of A Limited will lose their job, including the managerial personnel. But the B Limited merging with A Limited will increase its business activities, which will require more employees. What happened? Rather than appointing new employees, the existing employees who are already adapted to the work of A Limited will be easy to run the business. A person who was appointed as a managing director of A Limited was resigning from A Limited and he was given an office in B Limited either as a managing director or as a manager or as a whole-time director or even as an employee of the company. Is he actually losing his job? No. If he's not actually losing his job, can I say there won't be any compensation paid? Give me the wordings. Give me the technical words here. If the person has resigned from his office due to as a result of reconstruction, amalgamation or merger, and he has been appointed as what? Appointed either as a whole-time director, managing director, manager or any other employee, any other officer of the company. Has he actually lost his job? No. If he has not lost his job, then why should I pay compensation? No compensation will be paid. Second point and third point, very easy logics. Second point states that he resigned from the office. If every time he resigns, if I had to pay compensation, what will I do? No, I'll get appointed as a managing director. I'll resign the very next day, and then sit at the home. I'll get 3 years of remuneration free of money, free of services also. If he resigns, whose mistake? His mistake. What has the company done? If the company has, without any ground and proper reason, removed you, then come and ask for compensation. If you have resigned from the office, your mistake, you don't want to continue as a director, why would I pay compensation? Or your office has been vacated under section number 167. All the reasons we have discussed under section 167 had a proper reason behind it. Either your office got vacated because you did not attend board meetings for the last 12 months, or you were disqualified under section 164, or you've been convicted, or you have not fulfilled the provisions of 184 to give disclosures, or you have participated in a meeting in which you were interested in contravention of 184. Because of those reasons, if your office is getting vacated, there's a proper reason behind it. Hence, you will not get any compensation for it. Next point. This is something which you have to take time, take a deep breath, listen carefully. This is little complicated, winding up process. If the company is getting wound up, will you get compensation? I know a lot of you in there have answered no, but the answer is yes. The company will still pay compensation even though you're going into liquidation, even though you're getting wound up, I'll still pay compensation. But If the winding up is happening because of the reason of your negligence or your default, you don't have the audacity to come back and ask the company about compensation, because the winding up happened because of you. You're not going to come and ask compensation. Compensation will not be paid if the company is getting wound up and the reason for such winding up or the result of such winding up is due to the negligence or default of the director. He'll not get any compensation. But regular answer, come back to regular answer. If the company is getting wound up and it is not due to me, will I get compensation, sir? Yes. But if the company, when will I pay compensation? I'm showing generosity. I'm stating that I'll pay you excess amount of remuneration for the services you have not provided. But try understanding it. I'll be able to provide generosity and I'll be able to provide that excess amount of money in my hand only when I have surplus money. If I'm myself as a beggar, I don't have money in my pocket itself, how would I come show generosity to you as a director for especially those services which you have not provided at all? Think about it. If the company is getting wound up and the company is not able to pay back its shareholders the amount of money they have invested, that is the principal amount, the share value and the premium amount they have invested. If you're not even able to pay back your shareholders, you don't have excess money to come back and pay excess remuneration to your managerial person. Your managerial remuneration will be paid or will not be paid? Will not be paid if the company is going into winding up and on the date of such winding up, the company does not have sufficient money to pay its shareholders, including the capital and the premium amount. If I don't have money to pay my shareholders, I'll obviously will not pay money to the managerial personnel. But on the other positive end of it, if the company is getting wound up and the company has enough money to pay all the shareholders their premium amount also, and we still have surplus amount in my hand, then come, I'll give you excess money. I'll distribute some part of the surplus to you as a compensation for loss of your office. But even though I'm not paying compensation, that doesn't mean that you're not entitled to receive your remuneration. Whatever remuneration you have will be still entitled to be received. You have a right to demand it. But compensation, no. If the company is getting wound up, and there's a special point here, if the company is getting wound up on the date on which you are vacating or within 12 months from the date on which you have vacated your office, you have ceased to hold your office, you're not going to get compensation. Last 2 points are easy now. Straightforward, you have done a fraud. You have done a fraud. Because of your fraudulent activity, I have removed you from the office. If you have been removed from the office because of your fraudulent activity, will I pay any compensation? No. And the last, any other case, either directly or indirectly, the process of removal of the director was instigated by the director himself. So what happened? The director have intentionally done negligence, intentionally done wrongful activities, intentionally repeatedly doing wrongful activities or misbehaving with the company's staff. I'll obviously remove you. The removal of the director was initiated, instigated directly or indirectly by the director himself. Then if you have intentionally done it, why would I pay compensation for you? Compensation will be paid or will not be paid? Will not be paid. Any doubt in this? One small clarification on the entire process. Guilty of fraud. What do you mean by guilty? It is proven that you have done a fraud. Are you a fraud? If it's been proven that you have done a fraud, it is guilty of fraud, you will be considered as, you will not be entitled to any compensation. But there was an allegation on the person that they have done a fraud. Because of such allegation, company removed you. Has it been proven that you have done fraud? No. There was an allegation that you have done a fraud. Because of that allegation, you have been removed from the office. Will you get compensation? Absolutely. An allegation will not disentitle a person from receiving remuneration. He'll be still entitled to receive remuneration if there is just an allegation, a mere allegation. But if it has been proven that you have done fraud, will you get compensation? No, sir. Last section we have. 5 minutes, it should be done. Appointment of a key managerial personnel. We already discussed who is key managerial personnel. Whole time key managerial personnel is divided in how many categories? Fast, you should be able to answer it now. Divided into 3 categories. Managing director or manager or CEO in their absence, full-time director and a company secretary and chief financial officer. But this is required only for certain companies. What is it required for? Whenever we discuss about applicability is always there for a listed company. Start the process. Every listed company and every public company which is having a paid up share capital of 10 crores or more shall appoint a whole-time key managerial personnel. Who should we appoint? A whole-time key managerial personnel if you're a listed company or a public company having paid up share capital of 10 crores or more. But there's a special point which is amended recently, so you have to remember it. If you're a private company, you will be not applicable with whole-time KMP, but you have been given with a special procedure stating that if you're a private company and having paid up share capital of 10 crores or more, you have to not appoint a whole-time KMP, but you have to appoint a whole-time company secretary of a company. That's your process. Then come to the last point, vacancy. We'll come from the opposite end here. Once a key managerial personnel has been appointed, and if there is any vacancy in the position of this whole-time KMP, that position has to be filled. This is an MCQ question already asked. It has to be filled within 6 months from the date of such vacancy. How many months? 6 months. Who appointed them? Board of directors. Who will fill the vacancy? Board of directors. Board of directors have to do it by conducting a board meeting, by passing a board resolution within 6 months from the date of such vacancy. Next logic. A person who is a whole-time key managerial personnel, I'm working full-time in your company. I've been appointed by the board of directors, but it has to be ratified later by the shareholders. All the terms and conditions, everything will be discussed at the time of appointment by the board of directors by passing a board resolution. I'm working full-time in your company. Can I act as a whole-time KMP of your company and whole-time KMP of another company? How can I be in two places at a whole-time person in two different companies? Not practically possible. Hence, the wordings are, a person who is appointed as a whole-time key managerial personnel shall not act as a whole-time key managerial personnel of any other company, but the activities of my subsidiary company is also my responsibility. As a whole-time key managerial personnel of Reliance Industries, I should also take care of Reliance Jio. Hence, a person who is appointed as a whole-time key managerial personnel shall not be acting as a whole-time KMP of any other company except its own subsidiary company. But it doesn't mean that I shall not act as a director of another company. Try understanding it. Can I act as a whole-time KMP of two companies? No, except my subsidiary company. Can I act as a whole-time KMP of this company and then I can act as a director of another company? Absolutely. You're allowed to act as a director of another company, but you have to take a prior permission from the board of directors. You can still act as a director, but you have to take prior permission from whom? Board of directors. Then a special point regarding managing director and manager. We, from the definition of these chapters, have understood that the word managing director, the word manager are having huge amount of workload on their shoulders. They have lot of decisions to take in the company. If you are acting as a managing director of multiple companies, can I say your brain will not be able to allocate proper time to each of such companies? We have discussed this under section 165 if you guys remember. A person can act as a director for not more than 20 companies. Or we have discussed this in 141 subsection 3. A person can act as an auditor of not more than 20 companies. Similar to that process here. Section number 203 states that a person can act as a managing director or manager in not more than one other company. That means what's the maximum number of companies he can act as a managing director manager? 2 companies. But for the second company in which he wants to act as a managing director manager, he has to take the prior permission of the board of directors, that too with the consent of all the directors present in the meeting. Very difficult to attain. All the directors who are present in the meeting, we have to get a prior permission from the board of directors. So conclusion on it, can a person act as a managing director manager of 2 different companies? Yes. But for the second company, he has to take prior permission from the board of directors with the consent of all directors. But the wordings should be remembered. You should act as a managing director of not more than one other company. Last point of this entire chapter. Companies Act states that a person acting as a chairperson of the company already has huge burden in his head. And the person acting as chairperson shall not act as a managing director or CEO of the company at the same point of time, because the Companies Act believe that he'll not be able to manage the workload as acting as a chairperson as well as managing director CEO. Not allowed to be acting. So give me the wordings here. No person shall act as a chairperson and managing director or CEO at the same point of time unless there's an exception. Unless, try understanding it. The company states that my business is not complicated. My business can be controlled by a single person. Companies Act feels that it is difficult for a single person to manage both the positions, but my company believes that I can do it. I'll mention in the articles of association, I can appoint a single person as a chairperson and MD or CEO. Or my business doesn't, I don't carry on multiple different businesses. If I have say 10 different businesses, 4 different businesses in this example, workload for 4 businesses will be different. Appointing a single person to be managing director as well as CEO or chairperson will be difficult. Hence, logic states that you have to be a separate person. But sir, I don't carry on multiple businesses. I have a single business. If I have a single business, can I say I know everything about my business and there's no huge workload on me? Can I act as a chairperson and CEO managing director? Yes. A person can act as a CEO, managing director, and at the same point of time, he can also be appointed as a chairperson if it is provided by articles or the company does not carry on multiple business. If I have multiple business, not allowed. I hope this is clear. Chapter number 13, section numbers 196 till section number 203. We have a detailed discussion done. It came up to 1 hour 17 minutes. I hope the discussion was worth it. That's all for this particular video. We'll meet you on the next class. Thank you guys.